You should be able to hear me. If you can't, let me know. Thanks for coming. We're on day 4 of the MetaStock Traders Conference. My name is, as you probably know by now, Jeff Giddy. It's good to see you. Thanks for coming. I hope you're doing well. We're going to kick off today with a really, really good guest. So, well, not the other ones haven't been good. Let me go ahead and read a legal disclaimer. Today's demonstration is designed to instruct you on using MetaStock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock and its employees shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. MetaStock and its employees do not endorse the purchase of a security, nor are they paid for the promotion of a security. No information contained in the presentation today should be construed as investment advice or the solicitation to buy a security. So I hope everybody's doing well. Welcome to the session today. We have another great lineup, and I'm just getting my questions out so I can see if you have any questions. Yeah. Welcome, Vincenzo. It's good to see you. Thanks for saying hello. Couple notes. If you're watching this on YouTube, hello. We're MetaStock. We'll be talking about MetaStock all day today. If you have questions, just type them out in the questions box. Also, like and subscribe. It helps a great deal. We really appreciate it. During the day, and this is still just if you're watching on YouTube, we will be giving prizes between almost every speaker, unless we're really behind or I'm kind of a little bit forgetful. But in order to qualify for the prizes, you'll want to register for the event today. You can register at the link that I'm going to put in YouTube after we get Steve started. So good morning, Maverick. It's good to see you. Thanks for saying hi. Okay. As we get started, I've talked about all of our great sponsors today, very well-respected companies, leaders in their field. I want to thank the American Association of Individual Investors, AAII. You can find out more about AAII at AAII.com. So they do a great job. Really appreciate their support. Very well-respected nonprofit. Also, I want to say thanks Traders Technical Analysis of Stocks and Commodities. They've been making magazines about trading and technical analysis since 1982. I've been a partner of our online summits since we started doing them 16, 17 years ago. Traders.com, great magazine. And also, one thing I'd encourage you to do if you haven't already, join the community. You can go to the tradersforum.com. You can chat with other market traders. You can learn about the markets. We do lessons. We have people come in and we talk about the markets, talk about how the different market experts started trading. Lots of really, really good resources up there. And all of that is free. So go to thetradersforum.com. All right. Well, we are MetaStock. We're talking about MetaStock as we go today. It has been rated number one in its price category 32 years in a row. It can help you scan the markets, test trading ideas, all kinds of really good stuff. So we'll be talking about that today as well. Without further ado, though, we're going to get started. I welcome Steve Primo. Steve's been a partner of MetaStock for a number of years. He started trading on the Pacific Stock Exchange. I almost said something else. Back in, I think it was, when was it, Steve?
1977.
Dude, you do not look like you're that old. He's been trading the method he's going to talk about today. He's been trading for since then. He developed it back then. It's time tested. It's proven. He does a really good job of actually talking about it. And since we've got you going, Steve, I'm going to go ahead and make you the presenter. Is there anything else you'd like to tell the audience about you?
No, I'll go over it a little bit in just a few seconds, but no, that's about it. I just excited to make sure that they get the first 2 rules of the strategy. That's what I'm going to be doing. I don't know if you can see my screen or not. I just hit the show my screen, but I don't see anything. The
strategy can turn my trading around. I can see it and I can hear you. So I think I'll get out of the way.
Okay.
It's your turn. Let it kick us off.
Thanks everyone for attending today. Thanks for starting off the morning. And I have a great educational presentation for you. I'm going to share with you the first 2 rules of a strategy that I truly believe can turn your trading around. And the reason why I say this is because it turned my trading around. When I first started trading nearly 5 decades ago, I struggled tremendously, so I know exactly what some of you may be going through. And for the first year or two, I was basically just treading water. Sure, some days I'd have some great trades, or some weeks or even months, and then I'd give it all back. It wasn't until my mentors were able to share with me this method, and things started really turning around after that. And I continue to use this method to this day. So I'm going to share with you what's usually reserved for our students at Specialist Trading, the entire rules. I'll share with you the first half of the strategy, and you can apply them to any method, any market, any time frame, and you'll see how much they can increase your odds for consistency as well. For example, let me share with you just a brief look here and show you what this method would appear to do by looking at this longer term chart of NVIDIA. Obviously, the stock's in an uptrend, right? You can see it's been going higher. And let's say you're long, you're lucky enough to be long the stock coming into the year, or perhaps you were thinking about getting long, but then this happens, okay? So maybe your financial advisor or your friend down the street says, hey, you know what, it broke an uptrend. I would sell my shares and get out before it goes lower. Or if you were thinking about buying, maybe you just want to stay on the sidelines and you just want to wait till it confirms that it's going back up again. But with the strategy I'll be sharing with you today, we were not in a downtrend at all the way it appeared. Actually, the first rule of this strategy, which you'll learn, told you that the overall trend is up. So therefore, for all intents and purposes, the stock still wanted to go higher. And the second rule would have taught you that the short-term trend is also up. So now that you have those two things in your favor, along with the two remaining rules of the strategy, you would have found out that a buy signal was generated just about 4 months ago in NVIDIA. And had you taken that, potentially you could have captured 102 points coming into this month. So this is what we're going to be discussing today, the strategy that could actually, in my opinion, turn your trading around. And you will get the first two rules to this method you could start applying as early as today. So welcome once again. My name is Stephen Primo. As Jeff said, I am the president and founder of Specialist Trading. I've been trading now for 48 years. In a little over a month, it'll be 49. I can't believe it. I started trading in 1977. I started my career on the floor of the Pacific Stock Exchange. I was on the floor for 16 years, and 9 of those years, I was a specialist. That's where we get the name Specialist Trading. A specialist doesn't mean that you're any more special than anyone else. But in the old days, specialists were those, if you ever Google those pictures of the trading floors, like in the 20s and 30s, and you see all these people on the trading floor making these weird hand signals, and those gentlemen behind those large wooden podiums were called market specialists. So in the old days, let's say you wanted to buy 100 shares of IBM. What you would do is you call your stockbroker on the phone. The stockbroker would put you on hold and take your order and say you want to buy 100 shares of IBM, and then call the floor broker who worked for that firm and say, I have a client here who wants to buy 100 shares of IBM. He would then put your stockbroker on hold, take the order, walk over to the trader who specialized in making a market. And in fact, I made markets in IBM. He would say, I have 100 shares of IBM to buy, and I would sell it to him. So this is the way trading used to be. I know it sounds antiquated before the advent of electronic trading, but this is the way we used to trade. I made markets in stocks like IBM, Waste Management, US Air. I traded and made markets through the crash of 1987. I was on the floor during that, and the bull market that followed in the mid-90s. And I left the floor in the 90s to manage money and to pursue my own trading. And about 15 years ago, I teamed up with Pro Trader Strategies, my sister site, where we formulated Specialist Trading with one goal in mind. And that was not to force feed you signals. That was not to tell you what time frame to trade or what I thought the market was doing. Our only goal is to educate you as traders. So we are first and foremost an educational company. You see, in my nearly 5 decades of trading, the one thing I've found that is missing from most traders' trading plans is education. That's why most traders just blindly let someone or something else decide for them how to trade. Most traders do that because they don't feel they have enough education. They don't feel they understand the markets well enough. And they just say, well, I don't have enough experience. I don't have enough capital. So I'll let someone else decide for me. And we feel that is a recipe for disaster. In our opinion, that's why 80 to 85% of all traders fail. But if you can educate yourself in things that have stood the test of time, that have shown high levels of consistency, then you're able to make your own trading decisions. And as I said, the only traders I know that are still around since my trading days on the floor are the ones that make their own trading decisions. So that's our goal, to educate you with these things, tips and techniques I've accumulated in my nearly 5 decades to hopefully not only let you have a couple of good months or maybe a couple of good years, but a couple of good decades to sustain you as a trader. And that's what we're going to be sharing with you today in this strategy. Now, before we begin, we are required to share this with you, so please take a moment to view our disclaimer. I'm going to share with you a lot of performance results by applying this strategy, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And as I just stated, since we are first and foremost an educational company, all examples are strictly for educational purposes only. Now, if you would like to get more education from me on a daily basis, please feel free to follow us on X, formerly known as Twitter. In fact, I would recommend copying down our handle right there. It's an abbreviation for Specialist Trading at SPC LST TRADG. Every day I post between 5 and 7 different snapshots of signals or triggers that our methods and strategies have generated. I also post little bits of financial wisdom. So there's lots of great free education on a daily basis. So please feel free to follow us on X. Okay, with that out of the way, let's begin today's educational presentation. And I'll take your questions at the end because I have a lot of slides to share with you. And I don't want to take too much time. I don't want to overstep my time amount and go into the next speaker's time. So if you have questions, let's wait till the end. I promise I'll get to each and every one of them then. All right, let's begin. And I'd like to start out by something that my mentors shared with me, and it really sums everything up. It's this: being out of sync with the market is at the root of all your losses. I mean, think of it. When you are out of sync with whatever market you're trading, be stocks, crypto, currency pairs, Forex, could be a 5-minute chart, tick charts, range bars, monthly bars, makes no difference. But if you're out of sync, that's when you lose money. I mean, if the market wants to go down and you're buying, you're out of sync with the market, and that's how you lose. If you want to sell short, if you think something's gone up too high, it's overbought, and you sell short or you buy the puts, and it continues to go higher, you are out of sync with the market. You're not wanting what the market wants. So we have to get in sync with the market. Now, I know everyone in the world has a different way of doing this, by following the trend, by having all these advanced indicators, by looking at 2 different time frames. I was taught what I believe is probably the simplest but most powerful way of being in sync with the market, and I'm going to share that with you today. It's extremely simple, but you'll see how powerful it is and how consistent it is. Now, the strategy we're going to be talking about today, which was the first strategy I was ever taught, is what we call strategy number 4. Let me share with you some of the highlights of this particular method, okay? It's a pattern recognition strategy, meaning that we're not relying on a lot of indicators or moving average crossovers or convoluted logic. We're just looking to identify a pattern that repeats itself in any market, in any time frame, over and over and over again. The thing is really amazing. You'll see this pattern once you know how to identify it, but most people just gloss over it and never really see it. I'll teach you what this pattern is in the course. In fact, you'll get the first 2 rules of this pattern in today's class. Now, strategy number 4 is designed for traders looking to catch quick momentum. In fact, when I was on the trading floor, I used strategy number 4. I was in and out of trades in a matter of minutes. But we realize not everyone trades that way. Not everyone is looking at a 1-minute time frame. So what we've done is we've devised ways to stay in the trade days, weeks, even months longer if you'd like. Now, it only uses 1 indicator because it's a pattern recognition method. And I'll share with you what that indicator is in just a few minutes. Now, the advantages to trading strategy number 4 is, firstly, it's extremely consistent. Now, consistency is a really, I would say, ill-defined word, because a lot of people think consistent means something that it really is. A lot of people think, well, if it's a extremely consistent method, that means it has a lot of winners, right? It's always winning. That's not necessarily true, because a consistent method is one that's aware that it will have losses from time to time, and that's perfectly admissible. That's okay to have losses. But a consistent method is one that's able to recoup those losses, often on the very next setup. So that's what you want in any type of strategy. a 2 steps forward, 1 step back approach that gives you this nice upward slope in your profit and loss statement. I know a lot of us want to hit the home runs. We want to retire in the next couple of years. We want to hit the jackpot, right? But it's been my experience that these methods can lose it just as easily as they make it. You don't want this type of roller coaster approach to your trading where you're riding high in April, then shot down in May. That's the way my trading was when I first started. And trust me, it's not very agreeable to having nice sleepful nights, because you'll be doing well for a day, a week, and then all of a sudden you give it back, and then you're losing money now, and then you try to make it back, then you make it back, and then you lose it again. That's not really trading. That's more of a gambling consistency. So this is extremely consistent, meaning a 2 steps forward, 1 step back approach. Now, strategy number 4 also makes you a part of the process. Well, how does it do that? I thought it will give me the buy signals and the sell signals. Well, that's more systematic, where everyone has to enter at the same place, everyone has to exit, everyone has to place their stop at the same place. We don't believe in that. Our philosophy at Specialist Trading as an educational company is no two traders should ever trade alike, because everyone has different risk parameters. Let's say you're the type of trader that likes to get in and out quickly. You don't want to tie your money up a lot overnight. As regards to someone else who says, well, I don't mind staying in for a long haul. I like to squeeze as much profit out as possible. Someone else could say, I don't mind taking large risks because I have a large account size and I don't mind taking those large risks. Well, someone else would say, no, I can't sleep at night if I lose this amount of money. I need a smaller risk to my strategy. So therefore, we provide you with all these different variables where someone would want to get in quickly and get out quickly, or someone would always want to stay in long or in the trade than someone else. We provide you with up to 6 or 7 different stop placements to choose from, 6 or 7 different ways to entry, and 6 or 7 different ways to exit as well. So you can pick and choose like a smorgasbord, which makes you feel comfortable. This is how you become a part of the process. And once again, once you are a part of the process, you will feel comfortable in making your own decisions. That, once again, is our goal as an educator. And then lastly, strategy 4 is designed to be as simple as possible. In fact, you're going to see how simple it is in the next few minutes when I give you these 2 rules. You're going to say to yourself, this can't be true. This is just too simple. How can this work? But it's been my experience that it's the simple things that work in trading, not the complicated ones. In fact, my mentors taught me, they said, Steve, it is the easiest thing in the world to overcomplicate your trading. Anyone can do that. You can be trading for 2 weeks and overcomplicate your trading where you have 20, 30 different indicators, 5 times the markets you're looking at currently now. You can have your bells and whistles going off, tons of phones and TVs in front of you. It doesn't take a lot of, encouragement and a lot of character to overcomplicate things. But it takes a lot of character and a lot of courage to simplify things, which means that you're letting go of so-called traditional ways of trading. But once you do that, that's where you really get onto this road to success and consistency. So strategy 4 is extremely, extremely simple. Okay, so let's go over the rules now. And these are the rules for the first 2 rules that we usually reserve for our students around the world. We have students in over 115 countries trading strategy 4, and in every state in the United States. We're going to give you the first 2 rules. We can't give you all the rules. It wouldn't be fair to all of those students who have purchased strategy 4, but you'll see how powerful this method is even by applying these first 2 rules. Remember, before I share them with you, let me emphasize, trading is really simple. It's the trader who makes it more difficult than it has to be. All right, strategy number 1 for rule number 1. This is for buys. We're only going to generate buy signals when price is above the 50-period moving average, okay? So if price is above the 50, we will only be getting buy signals. We will never get a sell or go short signal above the 50-period moving average. All right, when we say sell, what we're meaning is selling short, to go short, to bet that the market will go lower. So only buy signals will be generated above the 50-period simple moving average. And only sell signals, conversely, will be generated below the 50-period simple moving average. So therefore, you will never have a buy signal below the 50. You will never have it. Now, the reason is because we want to be in sync with the overall trend. Remember we said earlier, the reason why you lose money is because you're out of sync with the market. Well, this is putting the odds in your favor. This is giving you an edge. If you are buying below the 50, the odds are not in your favor. And if you are selling short above the 50, the odds are not in your favor. But they will be in favor if you're in sync with this simple rule. Let me share with you what I mean here. Let's look at this generic chart. As we can see, price is above the 50-period moving average. So the market is telling us, not me, not some guy on TV or some guy in a chat room. The market is telling you the overall trend is up. And so we want to be in sync with the market. Now, conversely, if price is below the 50-period moving average, the market is telling you, the very source of what we're trading is telling you the overall trend is down. So we want to be in sync with the overall trend. That's how easy it is. Remember, I told you, trading is really simple. It's the trader who makes it more complicated than it has to be. Now, if you don't believe how powerful this simple rule number one is, go back and look. I challenge you, go back and look at your first or last 10, 20 trades, all right? I can almost guarantee you that the reason why you had losses was because you bought below the 50-period moving average and you sold short above the 50-period moving average. All right, so that's rule number one. And you can start applying that to any strategy you have now, and I can almost guarantee it will increase your odds for consistency. Now we move on to rule number two. For buys, buy signal bars must close in the top 25% of their range. Now, what we mean by signal bars is that's the signal bar or the setup bar. That's where all the rules and requirements come into play. Now, strategy 4 has 4 rules. So that's when all the rules and all the requirements have been met, that bar that it falls on must also close in the top 25% of its range. Now, that's for buys. Now, conversely, if we're looking for a sell short signal bars must close in the bottom 25% of their range. So if you have a setup bar that tells you to go short, you're obviously below the 50-period moving average. That's where all the rules and requirements come into play. That bar must also close in the bottom 25% of its range. Now, if you're not sure of what that means, it seems a little wordy here. Let's say price is above the 50-period moving average. Okay, so we know the overall trend is up. And then we see this bar. Okay, well, what you want to do is divide by 4 separate but equal parts. 1, 2, 3, 4, all separate but equal parts. And if you close the way we did it right here in the top 25%, what is the market telling you? Remember, not what some guy on TV is telling you, or not what some earnings report is telling you. What is the market telling you? The market wants to go higher on the short term. That's it. That's what it's telling you. So now you will know that the short term is now in sync with the overall trend. No reason to look at 2 different time frames. No reason to look at 2 different charts. Why complicate things? There's no reason to do that. All you need to do is see that price is above the 50, and according to the setup bar where all the rules come into play, find that that bar closes in the top 25%. Okay. Now, conversely, if you're going short, oh, I'm sorry, let's take a look at this example. Okay, we have a setup here. We close in the top 25%, and the market went up for a short period of time, 5 bars. Now, we don't know if this is a monthly chart, could be a yearly chart or 5-minute chart. And then someone would say, yeah, but Steve, look what happened here. We went down. I could have shorted somewhere here and made some quick money. Well, you would have had to be quick, because here we have another bar closing in the top 25%, and look what happens. So it's much more advantageous. You'll sleep better at night if you're in sync with the overall trend and you use this simple short-term rule of closing in the top 25%. Now, conversely, if price is below the 50-period moving average and we close in the bottom 25%, well, what should that look like? Well, you divide by 4 separate but equal parts. And if you close in this bottom 25% right here, the market once again is telling you, not me, the market is saying it wants to go lower on the short term. So if we see that price is below the 50, we have a bar closing in the bottom 25%, the odds are it's going to be going lower. Why? Because the overall and the short term are in sync. Remember, you only lose money when you're out of sync with the market. These 2 simple rules can help you be in sync with the overall and the short-term trend. If you want to complicate your trading and look at different time frames, look at different markets, or apply all these different indicators, you can do that. But I continue to use the same 2 rules that I've used for nearly 5 decades, and they work amazingly for me. Now, these are the first 2 rules to strategy number 4. Once again, I'm sorry, I cannot give you the remaining requirements. It wouldn't be fair to our students around the world who have purchased strategy 4. But let me share with you some recent strategy 4 examples, and you can see how these 2 rules come into play and how powerful they are. All right, here's an example in Google, okay? As we can see, Google is going up. This was just a couple of weeks, maybe 3 weeks ago. Obviously, we're in an uptrend, right? Obviously, we're making higher highs, higher lows. And let's say you're interested in this, and maybe you even bought it, but someone on TV says, hey, you know what, that's overbought. It's gone up a little bit too high, a little bit too quickly. Maybe you might want to think about exiting, or maybe if you're more aggressive, think about going short. You say to yourself, yeah, that sounds pretty good. I look at all my short-term overbought, oversold indicators, and it does appear to be overbought. And the next day it appears they're right. You say, gosh, you know, maybe I should sell. I should get out of it. But what's the first rule we teach our students? We don't believe in anything being overbought, oversold. In fact, we teach our students there's no such thing as overbought or oversold. How many times have you seen a stock continue to go higher and higher and higher, all the while being in the overbought zone, right? And how many times have you seen a stock go lower and lower and lower, all the while being oversold? Okay, remember what the markets did during the pandemic crash 5 years ago in 2020? People said, oh, this is no way, and it kept going lower and lower, all right? So first thing we teach our students is to apply the 50-period moving average, whatever market, whatever time frame, and ask yourself, where is price in relation to the 50-period moving average? Because that will tell you the overall trend, and you want to be in sync with the overall trend. We don't want to be in sync with something that's overbought, oversold, so-called overbought, oversold. And once we apply the 50, we see that the overall trend is up, so we're not going to even consider going short. Sure, we may want to take a profit. We can take a profit whenever we like, but we're never going to think about going short. Now, we want to look for that second rule, and we see here that this bar actually closed in the top 25%. Now, the remaining 2 rules of the method, strategy 4, were met. So an actual buy signal was generated on this bar. So where everyone thought, well, it's a little bit overbought, maybe it should come down a little bit lower, you knew that this was actually a buying opportunity. See, this is why we want students to make their own trading decisions and not rely on someone or something else, because had you taken that signal, well, coming into November, you could have potentially captured 38 points. That's how simple and easy trading can be if you're in sync correctly with the market. Let's look at another example here. This is an LIN. Someone looking at this would say, hey, well, Steve, well, this is major support. You know, I follow the banks, and I have that $10,000 program that tells me where support and resistance is, and this is major support, so I've got to be a buyer here, right? Once again, what's the market telling you first? Where is the overall trend? We apply the 50-period moving average, and we see that the majority of price is below. The first bar was above, but we have 1, 2, 3, 4, 5, 6 bars below. More than enough to tell us that the market, the overall trend is lower. So we're not going to look for any support. We're going to look at this as a selling opportunity. So now we look for bars that close in the bottom 25% of their range, and guess what? What do we have here? This one did. It closed in the bottom 25%. The remaining 2 rules of the strategy are met. So we have a valid sell signal right here. So where everyone thought this was valid support, get ready to go up, we were shorting, and you could have potentially made 54 points, or if you were along the stock, you could have saved yourself a 54-point loss. We have a number of students who don't like to go short. They don't feel comfortable. So they say that's fine. You could use our sell setups as exiting tools just to get out before the market heads lower. Now, as we see here, one of the best things is that oftentimes if you miss the first signal, strategy 4 will generate more for you to get back in. Let's look at this example in CDNS. This is a classic range market, right? Where it looks as if it's absolutely doing nothing. We're always taught, stay away from range markets because you don't know what's going to happen. It could break up, it could break down. We don't know what's going to happen. So probably best to avoid this. You'll just get whipsawed, right? This is, once again, why traders fail, because you're relying on traditional things that really have no sense of consistency. This is the way I used to trade, and for 2 years, you know, I thought I was going to be fired from my job as a specialist on the trading floor. Until my mentors taught me to add the 50-period moving average, and I asked myself, where is price in relation to that? Well, price is above. So even though it may appear we're in a range, we're in a range of an overall uptrend. So I should only be viewing this from a buyer's perspective. Now I look for bars that close in the top 25%. We have a number of them right here. Here's one, here's another one. I think this one may be. But remember, there are still 2 more rules to be met in order for us to have a valid signal. And this is the one that met all of the rules. This one closing in the top 25%. So a valid buy signal was generated right here in the middle of that so-called range. And while everyone might have been avoiding this stock, our students were buying it, and you could have potentially captured 54 points in the following weeks. Now, look what happened a week or so after the buy signal was generated. Obviously, some news came out or some announcement which caused this stock to gap up. This was the momentum I talk about, where this strategy is designed to capture momentum. The beauty of strategy 4 is that it will often generate signals prior to that momentum is identified or noticed on the chart. So therefore, you're getting in many times prior to the appearance of any momentum. It appears as if it's just going sideways. That's one of the really advantageous things about trading strategy number 4. Okay, as we look at ROP, we're in a clear-cut uptrend, right? Higher highs, higher lows. So you want to be a buyer, right? Maybe that guy in that trading room says, you got to buy this. It's going higher. You don't want to miss this. Well, the first thing we teach our students is not even to listen to what we think, because we never tell our students what to buy or sell. We only give them information on how to make their own decisions. And the first bit of information is plot the 50-period moving average. And not one of these bars has closed above the 50. So the overall trend is down. And this little bounce here is actually a selling opportunity. Now we look for a bar that closes in the bottom 25%. Here's one, and here's one. But this is the only one that met the remaining 2 rules of the strategy. So a sell signal was generated. And this was just about 3 weeks ago, and the stock fell out of bed 70 points. Now look what happened the very next day. The stock gapped down tremendously. Isn't it funny how this pattern, which we teach you in the course, told you a day in advance? Now obviously there must have been some news or some announcement which caused it to go down. But how did we know? It wasn't like the CEO of this company, ROP, called me up the night before and said, hey, Steve, you have a nice little company there. You have some nice students around the world. Why don't you issue them a sell signal in my stock? Because I'm going to make an announcement tomorrow and it's going to really gap down. So you want to maybe protect them. No, no one called us up. Why? Because everything you need to know is in front of you. It's in the chart with this pattern. This is why we only rely on market behavior in defining our strategy signals. Okay, we have a downtrend in crowd, CRWD. We're making lower lows, lower highs. A clear-cut downtrend. We're going lower, right? Nope. We're maybe going lower, but this is a buying opportunity. This is not something to look to sell or to be on the sidelines. Look for a buying opportunity. Why? Because right here, a buy signal was generated at the bottom of that little sell-off where all the rules were generated and all the requirements were met. And the stock shot up 70 points coming into last week or so. Okay, we have a real strong up move in Mr. MSTR. And then all of a sudden we break down. So a lot of students will say, well, okay, Steve, well, yeah, it does look like it's going lower, but we close in the bottom 25%. But you know what? It's kind of oversold. I go to that chat room and they said, this is, you know, it sold off tremendously. And on top of that, it's already lost 50% of its move. It's a 50% retracement. That's prime buying opportunity, right? If you're a pullback trader, you want to buy on those 50% retracements, right? Well, we have nothing against pullback methods. We have a number of pullback methods for our students, but this does not meet the first rule, which is where is price in relation to the 50-period moving average? Obviously, price was below initially. We only had one bar close above, but then right back down below. So for all intents and purposes, the overall trend is still down. And we closed in that bottom 25%. So a valid sell signal was generated with the remaining 2 rules being met. So we don't care about something being oversold. We don't care about 50% retracement, because remember, our rule is you only lose money when you're out of sync with the market. And currently, if you wanted to be a buyer, you would be out of sync with this market, because the market Once again, not me, not some guy on TV. The market is telling you it wants to go lower. So why don't we listen to the market? For some reason, we've been always trained to listen to some guy on TV or some news announcement or some earnings announcement or some Fed announcement, but we never listen to the chart in front of us. And it's basically screaming, I want to go lower. And as we can see, it fell 75 points coming into this month. Okay. And there was another sell signal generated, if you missed the first one, just a few weeks ago. Okay, so someone could say, okay, Steve, well, I think that this is going higher, so you're telling me that this is going lower then probably, right? So I don't need to follow all these rules. Anything I think that's doing, I'll just do the opposite, right? No, that's not true, because if you apply the 50, you see here that we were initially below the 50, but then once we closed above it, well, now we're looking for buying opportunities. Just because we're below the 50 doesn't mean we sell short. We have to look for some structure, and there were no strategy number 4 sell signals here, so we didn't do anything. But up until then, now we're looking for buying opportunities. We look for bars that close in the top 25%, and here's one, and it also met all of the rules. So we didn't lose any money just because we were below the 50, and we didn't lose any money once it started going higher. We simply waited. That's what professional traders do. They don't try to cause things to happen. They just wait for the market to tell them when it's time to get in. Professional traders don't try to make things happen. They wait for the market to tell them what to do. And so the market told us what to do. And you could have potentially captured 112 points in MU. This was going back to this past summer. Oh, by the way, this was a weekly chart. All right, what about a double bottom here in Charter? I use this older example going back to last summer because I wanted to share with you once again how so many traders use traditional things, but they're really not helping them. And I know this from firsthand experience. I used to look at technical patterns, and they really got me in trouble a lot of times. They would work until they didn't work anymore. And it wasn't until I started learning how to be in sync with the market using these first 2 rules that my trading turned around. So I thought maybe this was a double bottom here, right? We hit the bottom here. It looks like we're going to hit it. So I've got to be a buyer right here, right? What's the market telling me? The market is telling me, no, it wants to go lower. Why? Because the overall trend is down, and I will never be out of sync with the overall trend. Remember, buy signals will never be generated below the 50-period moving average. So I'm looking for a sell signal. Well, we have a bar that closed in the bottom 25% here, another one here, and here's another one. But this was the only one that met all of the rules and requirements of strategy number 4. So therefore, a sell signal was generated right here in the middle of the summer. And look what happened. The very next day, the stock fell out of bed, and in the preceding weeks was down 120 points, okay? So remember, you could have used this and exited on that and saved yourself a 120-point loss. Or if you're more aggressive, gone short, maybe bought some puts and potentially captured 120 points in the following days. And as you can see, once again, this stock gap down. It wasn't like somebody called us up the night before and told us to sell all our stock and Charter. No, the market told us. All right, this first chart that we shared with you in NVIDIA, remember we shared with you at the beginning of the presentation. Let's go over the process to show you how simple this is, all right? First thing you want to do is look at the non-traditional ways of trading. This is in an uptrend. So we break that uptrend, right? Here's the way most traders trade, myself included. When I first started, I said, okay, we broke the uptrend, so now the trend is down. So I should either be on the sidelines with this stock or I should be a seller, right? No, now we teach you the correct way to trade, which is firstly to apply the 50-period moving average. So price is above the 50-period moving average. So therefore, even though price may be headed lower, this should not be viewed as a downtrend or a selling opportunity. It is a buying opportunity. So now we look for bars that close in the top 25% of the range on this little sell-off, and this one does right here, okay? So rule number 2 is met. So rule number 1, we're above the 50-period moving average, the overall trend is up. Rule number 2, we close in the top 25% of the range. Rule number 2 is telling us that the short-term trend is up. That's it. That's how simple trading can be. So now we know that if the remaining 2 rules of strategy 4 have been met and generated, we have a valid buy signal. And guess what? They were. So this was just about 4 or so months ago. You could have purchased NVIDIA then, potentially captured 102 points. Remember, Trading is really simple. It's the trader that makes it more complicated than it has to be. Once you get out of your own way and just follow these basic, simple rules, you'll see that road to consistency start to brighten up. All right, let's look at another market here. Japanese yen. Here's a 4-hour chart of the yen. We can apply this to different markets, different time frames. It makes absolutely no difference. The same rules apply. We don't have to change anything. Looks like we're going lower, right? But if we apply the 50-period moving average, we see the majority of bars closed above. We have one closed below, but back up above, so not enough to tell us the overall trend is down. We have 2 bars closing in the top 25%, and they just happen to also meet the remaining rules. So we have 2 strategy buy signals here, 200 pips in the next 2 days, $2,000 per unit potentially you could have captured. That's on a 4-hour chart. Here's a 30-minute chart of Tesla. This was just last week, a week ago today. Obviously, we're in an uptrend, right? You want to buy Tesla, right? On this 30-minute time frame? Wrong. This is a selling opportunity. Just let it rise as high as possible because that will give you a higher level of consistency to go short. And we have a bar closing in the bottom 25% of its range right here at the very top of that little so-called rally. And the remaining rules are met. So we had a sell signal. This was on November 6th, a week ago. Today, you could have shorted, intraday shorted Tesla, and in roughly about 2 hours, could have potentially had a 25-point gain on your hands. Or we can look at GLD. That's the ETF that represents gold. Okay, now we've all seen how gold has just skyrocketed. This is a weekly chart of GLD. Now, someone always looking back in hindsight, traders love to play the victim game. They love to say, gosh, how come I couldn't see that? How come I couldn't identify that? Well, here's how simple it is. Had you first applied the 50-period moving average on this weekly chart, you would have known as far back as January, February of 2023 that gold, GLD, was telling you it wanted to go higher. Not me, not some guy on TV. The market was telling you, I want to go higher on the overall trend. Why? Because we were having consecutive closes above the 50-period moving average. And now if you apply the remaining rules, you would have seen that strategy 4 generated buy signals all along the way where you could have taken advantage of gold. So you wouldn't have to sit back and say, gosh, gold just skyrocketed. I never got a chance to get in. Strategy 4 was giving you chances for the last 2 years where potentially you could have captured 225 points trading the ETF that represents gold, GLD. This is how simple trading can be. All right, so let's recap what we shared with you today before we tell you about a great offer. Strategy number 4 is a pattern recognition strategy. It's based on a pattern that repeats itself over and over again in all markets and in all time frames. I just shared with you intraday stocks, ETFs, currency pairs, standard stocks. It doesn't matter. It can be used on futures, crypto. We have a number of crypto traders that apply it on crypto as well. It appears all over the place, and we teach you exactly how to identify it. Designed for traders looking to catch momentum. As you saw, many times signals were generated before that momentum even appeared on the chart. That's the beauty of it, because you're getting in to the market before the rest of the crowd has gotten in. And that's the beauty of this pattern. It identifies this momentum before anyone else does. Then you can apply it to all markets and time frames as you just saw. Remember, some of the advantages of strategy 4, it's extremely consistent. Remember, consistency does not, I repeat, does not mean that every trade is a winner. There will be losses from time to time. That's perfectly okay. I've been trading nearly 5 decades. I lose all the time, but I feel confident enough to take the next signal because oftentimes it recoups that loss, and then I go into a winning phase. So remember, you always want to look for a method, regardless if it's one of mine or someone else that you're going to be seeing, that is consistent. Not something that has these tremendous winners, but then gives it all back. That's more of a gambling type of methodology, all right? Strategy 4 makes you a part of the process. There are upwards of 6 or 7 different ways to enter, 6 or 7 different ways to exit, 6 or 7 different ways to place your stop placement, okay? This is all to make you feel comfortable. You will never be consistent unless you feel comfortable with the trading plan you have. Think of it. Think of a trading plan that just made tons and tons of money, had 90% winners, hardly ever lost, and then you buy it, you spend thousands of dollars, and then you see that it only trades once a year, and you say to yourself, wait a minute, I can't rely on that, you know. Or maybe even the worst, maybe you see that it trades 50 times a day, and you say to yourself, I can't trade 50 times a day. That's crazy. I would go nuts. That's why no two traders should ever trade alike. Even though something can generate fantastic numbers, unless you're able to properly implement it and become a part of the process, you won't be successful. So we give you all these different variables that will make you feel comfortable. That's how you become a consistent trader. And lastly, it's designed to be as simple as possible. I just taught you the first 2 rules to strategy number 4. You see how simple it is. The next 2 rules are just as simple, okay? So whether you've been trading for 30 years or 30 minutes, everyone gets the same rules to strategy number 4. Remember, being out of sync with the market is at the root of all your losses. Go back and look at your last 10 or 20 trades. I can almost guarantee you that the reason why you lost money was because you were out of sync with the first 2 rules I shared with you today. So ask yourself, do you think strategy 4 can help you finish strong? You think it can help your trading for the remainder of 2025? Well, I have a resounding yes coming from me, and I think most of you would say yes. So we have a great offer for you today. This is a special attendee discount, our association with Metastock and with the Online Traders Conference. We're going to offer you strategy 4, instant course access. You'll get detailed instruction. You'll learn all the entries, exits, and stop placement, automatic buy and sell arrows. You get the complete course rules in a PDF. And remember, you can apply to any market, any time frame. As well, you will get educational correspondence from yours truly. It is our most consistent strategy we have at Specialist Trading. Now, let me break down the price. The regular price of strategy number 4 goes to $599, less than $600. That, in my opinion, is extremely low. But we're going to offer you a very limited discount. We're going to discount it down $100 down to $499, okay? You're going to save $100 for $499. You'll get something I've been trading for nearly 5 decades. But let me share with you something extremely important. This is for a limited time only. And by limited time only, I seriously mean limited. Probably for the next week or so, because I've been told by my sister site, Pro Trader Strategies, which handles all of the pricing and the discount, the price of strategy 4 will increase to $49.95, okay? $49.95. This is probably going to start within the next week or so. So we're not saying this to try and intimidate you or to scare you into price or to bait and switch. No, this price is definitely going up. It's already been increased with Pro Trader Strategies, my sister site, on their site. So we're going to give the people here attending the Online Traders Conference another week at the $499 discount before we go all the way up to $49.95. Okay, so this is a great offer. If you're at all interested in taking your trading to the next level, if you truly want to finish out strong, take advantage of this great offer before it goes up to $49.95. As I stated earlier, it is already selling at $49.95 at the Pro Trader Strategies website, but for all the people here attending the Online Traders Conference, we will wait for this for another, I believe, a week, but probably best to contact Pro Trader Strategies. Take charge of your trading for the very first time. Quit relying on outside sources to tell you what to buy on a nightly basis, what to sell, where to place your entry, where to get out. Take charge of your trading. As an educator, as a mentor, my job is to teach you how to trade. And so that's our only goal. That's our only purpose at Specialist Trading. We want you to take charge of your trading and be in charge of it and be in charge of your trading destiny. Okay, here's how to take advantage of this. Contact Pro Trader Strategies as well as Metastock. I would recommend giving them a call at area code 1-800-822-3040. They'd be more than happy to take your order with that discount before price goes up, or they can answer any question about pricing as well. Now, I believe we have about 5 or 10 minutes left for any questions. I promised you I would answer any questions that you may have. If you do happen to have them, I don't know, Jeff, do you want to read them to me, or I can take them? I guess.
Yeah.
Oh, okay.
I can answer them for you. I'm happy to help.
Sure.
Let's see. The first question we have, I'm going to have to answer, is from Autumn. She wants to know if she's like, I missed the first 15 minutes. I really want to go back and watch this. And to that, I'll just let everybody know. We're streaming right now to youtube.com/metastock. And so all of the sessions will be available there in perpetuity. I used a fancy word there, Steve.
Okay.
Are you impressed?
sounds like a strategy.
Yeah. We have a question from Jahan in GoToWebinar. He wants to know, sorry if I got that wrong. What is your stop loss and when do you exit and when do you buy the stock in an uptrend? Thank you.
That's a good question. The only trouble is that's part of the rule, so I really can't state that. Like I said earlier, it wouldn't be fair. You know, it's like you went to a restaurant and I gave you free appetizers, and then you said, well, what's the main course? How can I get that free? And it's like, I can't do that. It wouldn't be fair to the rest of the people in the restaurant who have purchased their meals. And that's kind of the same thing. I can't tell you the exits or the stop because those are included in the remaining two rules. So trust me when I say that that's all included in the course. We won't leave you hanging there. And as I said, we have different stop placements and different exit levels as well.
Cool. Lasim says hi. Hello, Lasim. It's good to see you. Thanks for saying hi. Another question that we have is what instruments can this be used on? So I know with Metastock we have about 300 different exchanges that are available on the thing. Do you have experience with kind of how well this might work on an Indian market or like an Australian market?
Yeah, as I said, it can be applied to any market at any time frame. And the reason why it's so easy to transfer onto that is because it's based on a pattern. You see, it's not based on traditional things, news events or traditional indicators where they may work well in one market and not in another because of volume or because of volatility. This just looks for a pattern in the price bars. And so with that, that has shown to repeat over and over in any market, any time frame. So yes, we have traders who have used this in the Indian markets, Canadian markets, currency pairs, crypto. It makes absolutely no difference.
All right. Another question we have is, do you have a recommended minimum account size for trading?
Once again, that's more for you and your broker to discuss because you could apply this intraday where you need minimal amounts. And we're not a brokerage company per se. We're just an educational company. It would just I would discuss that more with your financial advisor or with the person in charge of possibly your broker taking your account. The only thing I would mention that we do say in our courses, our education, is that for every setup, regardless of strategy, regardless of market, it could be one of mine, it could be one of yours. We always use the 2% rule. It's very common, very generic, to never on any one trade risk more than 2% of your current capital. In other words, how much you have aside. So if you have $1,000, and that's all you have to trade with, if you're going to be applying a stop loss, you only want to be risking, what is that, $100 or no, $1,000 times 0.02% would be $20. And that's what I mean. You have to keep it that because that will guarantee that even if you do go into a series of losses, you'll be able to come back and trade again. But that's just a very generic bit of advice. How much you have is kind of up to your own discretion, and we're not really a brokerage a company giving out financial advice in terms of that.
All right, one more question. I actually kind of like this one. This is a little bit of a curve. Do you use any broad market or sector analysis in the trading that you do?
In other words, looking at, like, say, indices or sure, if that's the question you're asking, we have a number of traders who will look at the broad markets or look at ETFs and say, let's say you're looking at the spiders, and let's say you get a buy signal, which would, if you applied this method, and you can actually go and do your own experimentation right now, even with those first two rules. Let's say you looked at the spiders, that is the broad market, the ETF for the S&P 500, or even the S&P 500 index. You'll see a number of buy signals were generated there. Therefore, rather than trade those indices or those ETFs, you could just use those as market identifying tools for the broad market, if that's what your question is stating.
All right, very cool. I think that's what the question is.
Yeah, we have a number of students who use it that way. I've used it that way myself. I like to use it that way to see what the market's doing. I know if I get a strategy for buy or sell signal in the spiders, it's usually going to hold up pretty well with the market rallying or selling off.
Right on. Okay, that is all the questions that we've got. So I want to take over a little bit, just
Sure.
kind of show the box, kind of talk about all the training that's actually included as part of the package, all that kind of stuff as well. Thank you very much, Steve. Much appreciated.
Thank you, Jeff, and thanks to all the people attending today. I wish you a great day and all the best of luck in trading. Thank you.
All right, very cool. Thank you, Steve. And here is a picture of the actual box. So I hope you enjoy that. Just to kind of talk a little bit about the package. Yeah, as Steve said, the price on this is going up. This is the last time we're going to offer it at such a low price. So let's go ahead and kind of just talk a little bit about what's included. It's a Metastock add-on, so it has an exploration, expert advisor, a layout. One of the things I like about this is also includes 12 training videos. So you get access to those directly on the Specialist Trading website. They're made available for you. And here is a list of the trading modules. I'm not really going to go through all of them, but it is very, very specific in terms of kind of all the training that's available. Then we had the question about stops. There you go. Position sizing, I think, is also very important when you're trading. You don't want to risk all of your capital anytime. You should only bet the farm if you have more farms, right? So you do have a complete 12 module course that kind of walks you through the entire way to use it, how to get up and running with it. As Steve said earlier, the retail price on this is going up. Right now it's $5.99 for a price as part of the webinar special. I'm going to go ahead and just mute you for a second, Marina. It's $4.99 here at the event today. So $5.99 is normally what you would pay. If you do it as part of the Traders Conference, it'll be $4.99. You can do that by giving us a call at 800-882-3040. You can go to metastock.com/specialisttradinga, but you can also go to metastock.com/conf-promo. You can also chat online with us at metastock.com/saleschat. And I'll put all of those links in the chat in just a second. So big thank you to Steve and all the work that he's done with that. Get that. Not only is it $4.99, we're going to back it with a 30-day money-back guarantee. So you can try it out. If you like it, great. We'll even give you a trial to Metastock. It's such a cheap one-time cost right now. You should go ahead and get it and give it a go. Comes with all the training, everything you need to get started. 800-882-3040. Metastock.com/specialisttradinga or metastock.com/conf-promo. Metastock.com/saleschat. So big thank you for that. As we kind of move on to the next speaker, I want to say thank you to American Association of Individual Investors. They're a nonprofit. They're well respected. They've been doing their nonprofit since 1970s. They do the AAII Investment Sentiment Survey. They do a lot of research, both fundamental and active trader related, as part of the services that they offer. And you can find out more about the services they offer if you just go to AAII.com. So big thank you to them for supporting the event, for being part of the conference and all that kind of good stuff. Hold on just half a second. This is going to come out. All right, there we go. Very good. All of the specials that we talked about today, including Steve Primo's add-on, included the extended trial for Metastock, including all of the other add-ons, all the other great products that are available. You can get at metastock.com/conf-promo. You can call us 800. We'd love to talk to you, by the way. Our sales guys, if you have questions, they're very, very good. You can give them a call, 800-882-3040. You can go to metastock.com/saleschat as well. Big thank you to everybody. Marina, I know you're up next, and I'm going to enlist your help. I hope you don't mind. I'm going to send an unmute request now, and we just make sure we can hear you. How are you, Marina? I can hear you.
How are you?
I bet you're kind of curious how we're going to help.
What's that?
I bet you're kind of curious in terms of how you're going to help me.
Oh, yes, of course.
Okay.
Very curious.
Okay, yeah. Well, as you may know, we give prizes for just registering. We give away prizes between every speaker and all that kind of stuff. Works really, really good from a perspective of getting people registered. So all you have to do is register, and you are eligible for a prize. If you're watching us on YouTube, the pinned comment at the top of the chat will take you to a link where you can register for the event. If you're watching in GoToWebinar, you're already registered. Between every speaker, we're going to give away a prize. I would recommend that you register if you haven't yet, because I haven't refreshed my list from yesterday yet, and I'm going to do it after we get Marina started. But Marina, the book prize that we're going to give away right now is a book called Candlestick Profits, Eliminating Emotions. It's by the late Steve Bigelow, who is a great friend of Metastock, somebody that had a huge impact on the way I do trading, and it's a great book. And all what I need from you, Marina, is I just need you to come up with a random number between 2 and 6,011.
Oh my God. Okay. All right. I got it.
You ready?
Yes.
Okay. What's the
Do I
number?
tell it to you?
Yeah.
Oh, I thought you were going to guess it.
Oh, no. No, it's too early for that.
5,111.
Perfect. And that is a guy by the name of Stance, S-T-A-N-C-E, in the USA with an AOL address. So we don't say their last name. Kelly feels like that's doxing people. So Autumn asks, the strategy for showing up trend. I'm going to check. I'll check for you and let you know in the comments in a second. Lacine from Algeria says, great job at forex.com. I appreciate the strategy and I'm excited. Thanks, Lacine. All right, our next guest is Marina. You've heard her already. Marina is the world's most interesting woman. That's the way I'm going to put it.
I like that.
I'm going to set the bar pretty high for you. I hope you're ready.
I know.
She started her career as a cycle instructor. She's told me that she thinks she was one of the very first cycle instructors, but I don't think she's old enough for that. I've seen her pictures. She also runs a travel blog. She's an expat who's currently living in Spain. And in addition to that, she teaches people how to day trade. And she does a really, really good job with it. So definitely one of the world's most interesting women. I'm going to stand by it. Marina, is there anything that you'd like to add to that? Anything you think the audience should know?
No, I think that is a really great bar that you just set for me, but thank you.
All right. I just sent you the control. It should ask you if you want to share your screen.
Okay, yeah, I just saw that. All right, let me just, what's happening here? There we go. All right.
I got it. Yeah, first try. All right, I can hear you and I can see your screen. So I'll get out of the way. It's your turn. Go.
All right, well, thank you so much. Always such a pleasure to be here. I love actually presenting with Metastock. I find it one of the best energies and the people who always come here. It's so fun. So thank you. Thank you for inviting me here again. And thank you guys for taking the time to be here with us today. I know that it's, time is such a commodity. And the fact that you guys are here, it just, the trader chick, and this is me. This is me right here. And today what I actually really want to chat with you guys about is that there's so much to understand and there's so much offered when it comes to day trading, financial markets, and there's so many, I want to say shortcuts, even though they're obviously not told that they are shortcuts, but there's so many things that are offered to make you money tomorrow. You're going to be rich tomorrow if you do this. Just watch me and you're going to make $1,000 a month or a day, whatever it is. The thing is, it's kind of like going to a Formula One race, watching the Formula One drivers, because you kind of understand how to drive a car, and being said, well, if you take this class with me today, for one time only, you'll be able to race a Formula One car, right? And you know deep down, that's like totally impossible, right? Because it takes so much practice and understanding, and you have to first be in the car to actually experience and to complete it, right? And I find that the majority of times it's overlooked when it comes to day trading and the financial markets. Why is that? Because it's probably the only industry in the world that there is absolutely no barrier to entry. And one thing that I have recognized, and this actually happened from my own personal experience, because I was the same. I was on in all these chat rooms and I was in all these alert, I don't know, programs, and I was just failing all the time because I was kind of taking the shortcut of just hoping that the people would show me what needs to be done or show me the trade that needs to be taken or give me the alert of something. And guess what? We have to fully understand what it is that we are doing for it to actually happen, right? So I was losing left and right until I realized, wait, I need to actually realize why is that a good trade that they are saying it's a good trade. And that's what I want to cover today. So what I've been saying is that we keep on putting in windows and our windows keep on crashing because we don't have walls that keep those windows standing. And that's what I want to teach you guys today. It's those foundations that once you understand the foundations, your windows will not be crashing. Once you have the foundation and understanding what it is that you are watching, what it is that the other person is talking about, but you really understand it versus you think that you should be understanding, you will see an entirely shift in how you are managing the financial markets. And it's going to just be the biggest aha moments. And what's cool about it all is that it's actually not complicated. So that is what I'm going to be talking to you guys about today. But before we do, I want to give you guys a little bit intro of who I am. And the reason why I actually do this is because a lot of times we forget that we are human beings that come to our charts. We are human beings that come to our, like when the market is in full motion, we bring our experiences to that market, right? And we are people, and that is really important. I remember a lot of people will be like, well, I don't really care about myself, it's about the charts. But it is all about you, and it's how you interpret the charts that make the charts come to life, right? I actually call the charts our canvas. Day traders are like artists. It's really interesting because it's true. There are millions of people out there trading the markets, but each person is different in a different art form, right? So I am Marina. I am Trader Chick. I am an expat right now living in Barcelona, but I have been an expat for over almost 23 years now. Before we lived in Costa Rica and Guatemala for over 20 years. Now we moved to Barcelona, Spain. And being an expat has been probably the greatest joy of my life because it just allows you to just experience so much more. Raising my sons in different countries is just make them whole, more wholesome, right? They are more open-minded. It's just been a real gift to be able to do that for them. And you can trade anywhere in the world. So when people, and a lot of people ask me, oh, I really want to be an expat, but how's the internet? Or doesn't this not work? And this and that. It's such a small world now that you could live and be anywhere and trade perfectly fine, actually. So that should never be a limitation for you guys. And as Jeff mentioned, I was a fitness instructor before I became a day trader. I was actually one of the very first spin instructors. I was also one of the very first Pilates instructors. So yes, I've been around for quite some time. But the reason why I bring it up is not because of how old I am. It's because I want to show that anyone can begin day trading. I literally had no experience in economics, finance, math, which I think a lot of people have this preconception or misconception, I should say, that you have to be coming from those areas to do well, and you don't. That's the beauty of day trading. When you finally understand technical analysis, understand what the charts are saying to you, you will be able to master it just as well, regardless of your age, what you did before, anything. And that's the beauty of it, right? And today's day and age, reinvention is kind of like the norm. So reinventing yourselves and becoming professional day traders is so doable and can be really, really fun. And again, I'm going to say this again, guys, you can do this from anywhere in the world. So me and my family, I do still run a travel site. Me and my family travel 3 months out of the year minimum, sometimes even more, right? So when I travel, I'm not just wealthy or I'm a trust fund baby. I still open up my computer, so I have access wherever I am. And that's the beauty of trading, is that you can literally do it from anywhere in the world. And the fact that the majority of the markets are open 24 hours, you could do it any time of the day. So I really recommend you guys thinking of it as a lifestyle versus just sitting in front of your charts for 8 hours a day, which is completely not sustainable, right? So before we move on, I definitely want to show you guys, I wanted you guys to get the entire presentation, and I have it for free. So please just go to makingofaDaytrader.com. You can get the presentation for free from here, makingofaDaytrader.com. Go there, get it, and you'll have it for free instantaneously. And I know that Jeff, well, I think it's automatically on YouTube, so you guys will have the replay right away, so you could go at your own pace as well afterwards.
And
All
I am
right,
putting
so
the link on YouTube for you too.
was that? Sorry, I didn't hear that.
Sorry. I'm also putting the link up on YouTube as well right now.
Oh, okay, perfect. Thank you. All right, guys. So what is day trading? Why is it not investing? So it's funny because a lot of people, whenever they hear that me say, oh, I'm a day trader or I day trade, they're like, oh, I want to learn how to invest. But it's not. It's not the same at all. So unlike investing, day trading, you do not want to diversify. This is really, really important because unlike my investment portfolio, which is incredibly robust, I have so many different things going on there. Day trading, I focus on one instrument, one market. So look at it like this. Imagine your child or any child comes up to you and says, hey, I want to learn how to play a musical instrument, right? And you're like, okay, cool. What do you want to learn how to play? And they respond to you, I want to learn how to play the violin, the flute, the guitar, the piano, right? I mean, you're looking at them and you're like, well, you've got to choose just one. They're so different. And it's the same thing when it comes to financial markets. As a matter of fact, in the financial markets, we call them financial instruments because it's very, very similar. So when you master the one instrument, whatever you choose, and I will show you the different markets and different instruments a little bit further on, when you start to master the one thing, you will be amazed. And actually, interestingly enough, you probably won't even want to continue and learn others overall. Why? Why would you? When you have absolutely all that you need with one. It's, Liberace, right? We've heard of Liberace, love him, hate him. That's totally irrelevant. The point is, he was an absolute master of the piano. I can guarantee you, if he took on, playing the violin, he'd probably be pretty good at it. He's just musically inclined, but he knew where his magic was. And that's the same thing with once you truly learn a financial instrument, you will have that same magic. Because learning one financial instrument, there's a lot to learn, right? And when you master it, do you really want to even move on to the next? You could decide, but by then you already have something that's bringing you the money. All right. The other big difference between investors and day traders, we don't care. Day traders don't really care if the market is going up or down, right? If I am an Apple investor, they just came out with the Apple 17 phone, right? But for instance, Apple 18 phone is coming out in like 9 months. What do I trust that they're going to come out with a good phone? Most likely I do. So I'm okay sitting through the ups and downs if there's going to be, some ups and downs because I care about the company. I believe in what they're producing. I believe in what they're doing. Day traders, we don't care. We just are looking strictly at the analytics, at the technical analysis, at the patterns, at the charts, right? So we don't care if the market is going up or if it's going down because we can make money either way. Now, there's all these different myths that surround day trading. First and foremost, the most popular one is that it's too risky and day trading is gambling. And that's why 95% of the people fail. Well, let me ask you this. If you decide that you want to be a pilot, are you going to hop into a plane tomorrow and take your family for a flight? No, it's ludicrous, right? It's absolutely ludicrous. We all understand that if you want to be a pilot, you have to go to pilot school, you have to put in the simulation hours, you have to learn, right? It's the same thing with day trading. Identical. It is an entire strategy. You have to understand the different charting software. Metastock charting software platform is phenomenal, but there's still a learning period for it, right? I have to admit though, they have this white glove service, which was that just exponentially helped me learn the entire process. But the point is, it was still a learning process. It absolutely floors me when people say they want to go into day trading and start putting their money in the live market and they can't even figure out how their platform works. So not only are they losing the money because they're making bad decisions in the market, but they also can't figure out the platform because they haven't given it any time. So once you fix all that, you understand how your platform works, you start to have a strategy for what you are trading. The risk is immediately erased to just a certain amount, and a risk that you set, not that it's just you're going to be losing all the money. It's really important. The other thing, and today this should be obsolete, but yet I still get people ask me this, that you need $25,000 to get started. No way. You can start with $100 today. That is the beauty of the markets. You can literally start with $100. Where did this $25,000 myth even originate from? So it's about margin accounts. Brokers like to sugarcoat a margin account. Basically, what they're telling you is, if you have $25,000, we will give you a margin of, let's say, $10,000 to $15,000. What it is it's like loan sharking. They are lending you $10,000 to $15,000. It is a lie. Do not even come close to a margin account. So you do not need to have this kind of money. As a matter of fact, I always recommend, especially my students, have as little as possible in your bank account and your broker account to trade. This way, if you do mess up, if you forget to put your risk management in place, you will not lose the entire account, and your entire account is relatively small, so you are completely in control of the risk management. And like I mentioned earlier, there's this massive misconception that you have to be a math whiz or come from a financial background. I don't ever calculate the numbers or anything ever. Hang on one second. I am having a very peculiar sound. I don't know what that sound is. Huh. Okay, let's see. Not sure where that came from. Anyhow, so what I was saying, that you don't need to worry about the numbers. It's all about the patterns, all about the technical analysis. So you don't need any kind of a background to be able to learn this and perfect it. All right, this is another really important one, that is stressful and chaotic. Yeah. If you are sitting in this kind of a setup, this is so unsustainable, guys. This is, no human mind could ever manage this. And I don't even know where this ridiculous idea came from in the first place. Okay, so please remember that our minds are not capable of managing this. And that also removes the amount of different charts and different instruments that you will be working with. I work with one instrument. I have one chart, two indicators. That's it. That is it. That is what a human mind could sustain and become consistent with. The other massive, massive misconception is that you need to be constantly upgrading softwares, indicators, buying algorithms. Absolutely not. When you have a really powerful charting software like Metastocks, you do not need to be buying outside algorithms and all of that, because you have all that you need right in front of you. There is such a thing called the shiny object syndrome. When you're chasing those shiny objects, you don't need to do that. Everything you have is in front of you. And I love this one, research and news. I get people coming to me who quote unquote say that they're trading equities, and they wake up at 4:30 in the morning, they do all this research, then the market opens at 9:30 in the morning, and they're completely fixated on their 100 charts. Then after they're done and they're losing the majority of the time, then they sit for another 3 hours learning why did they lose, studying the news again. I mean, you can last maybe a month like that, but you will fully burn out. Why? Because first of all, the majority of the news is all a lie. Okay? It's usually pundits that want to just push their agenda. So a lot of it doesn't even make any sense because what they're saying has nothing to do with what's actually happening in the actual financial markets, because technical analysis is where really you understand what is happening. Fine. Next is that the market research that you are doing, if you are looking at your chart and your charts are showing you the different opportunities, it doesn't matter what's actually happening with the market research, right? There was a really good example was when Jeff Bezos and his ex-wife were getting divorced, Amazon was tanking. Amazon was still doing phenomenal. There was no problem with that. Why should we care about his personal life? But because that was what was being, shown on TV and in the financial markets, it was going down. But guess what? In the next couple of days, it started to boom again because his drama had nothing to do with what was actually happening. And this happens all the time. So I recommend not even watching the news. It's depressing. It's a lie. It's not real. Just focus on what you need to learn in front of you. This is another thing. This is a huge problem, especially for beginner traders. And I did this for about a year. It's actually a thing. It's called trigger happiness. What does that mean? For instance, for me, I used to do 2-hour trading sessions. Now I'm down to like 30 minutes to 45 minutes. But for instance, you are doing whatever hours of session you are, and you're just going in and out of trades all the time. So when I just began, I used to have like 60 trades in 2 hours. It was crazy. It was absolutely crazy. So even if I was winning, I was still getting completely beat up on the commissions. What I did learn after I started to study and become more of a pro, trading is very similar to big game hunting. A big game hunter will never go out and just start shooting at prairie dogs, mole rats, like they just won't, right? They sit and they wait for the big game. The pro traders, they now take 2 to 3 really powerful trades that they have completely studied and strategized and back tested. That is really important because the most radical way to trade is conservatively. You do not want to be making these crazy moves because aggressive moves usually bring on aggressive risk. So one thing that I also realized is that if you have a doable profit per day, you can bring in your big profits for a year. All right, this is a term that I personally coined. It's called FOMAT. Fear of missing a trade. FOMAT, fear of missing a trade. I got it from the term FOMO. I don't know if you guys have heard FOMO. FOMO is fear of missing out, right? So we always have this little bit of FOMO. So it actually goes into the trading just the same. People are constantly fearing that they are going to miss out on a trade. And I want to just give you a good analogy would be, imagine you are a surfer and you go, you're ready to go surfing and you're putting on your wetsuit out on the beach, and all of a sudden you see this absolutely amazing wave and you're nowhere near it. So all of a sudden you're like, oh my goodness, that's going to be the only wave I'm ever going to catch. And you try to catch it and it's impossible, right? Because the wave comes and the wave goes. And guess what? There's going to be hundreds, thousands of other waves that you'll be able to catch, right? It's the exact same thing with the market. Just because you missed one trade, let it go. Don't start to run after it. Don't, because you will lose. But remember, there are going to be hundreds of other trades coming. All right, let's talk about what there is to trade, because this is really important, right? As I mentioned earlier, you want to focus on a market, and the more hyper focus you get on the actual instrument, the better it is for you. So Forex, we all know what Forex is, right? Foreign exchange is when you're trading different pairs. Again, really important. I would not go into trading too many pairs. The most popular one obviously is US with Euro, but you could also do US and Australian, US and the yen. So I would recommend choosing no more than 2 pairs because it's a lot of stuff going on, right? Especially when it comes to US, when we have, these leaders that are so ego driven, you don't know what's going to happen. And then, for instance, if you're doing a pair of US with the Euro, There's so many other leaders that are constantly moving things around, so you don't know what's going to happen. So it's better to really just niche it down, go with one pair and really learn it and focus and follow it. Equities. I love this. When I ask people, so what do you trade? They're like, oh, I trade stocks. I trade equities. In the US market alone, there's over 5,000 equities. So you're telling me you're trading the whole market. Again, a pro trader, what would they respond? They will respond to, well, I trade the tech sector or the pharmaceuticals or the media, or I only focus on specific companies. For instance, like Meta, Microsoft, Tesla, Facebook, Amazon. No, Facebook. Meta is Facebook. So when people really focus on only on those particular companies, which are so volatile, they all move so beautifully. A lot of times you could become a master of that and make a ton of money just from those, right? So you need to, again, really niche down. What do you want to trade in the equities market? Hang on one second. All right, the next one is futures. I am a futures trader. I trade the E-mini, which is the S&P 500 index on the futures market. So when I get people responding to me, oh, I trade futures, the commodities market, I'm like, so you're trading wheat, soy, sugar, E-minis, NASDAQ all at the same time? It's like literally getting into 5 different vehicles on 5 different terrains and thinking that you're going to be able to manage them all at once. Absolutely impossible, right? Focus on the one, guys. Pick the one that you love the most, and it doesn't have to be futures. It could be equities, it could be forex, it could be whichever. It could be options, or it could be even crypto, right? With crypto, there's so many different projects and coins out there. Again, you want to learn, you want to understand what it is that you are doing. Really important when it comes to crypto. I will say I'm not going to tell you what to trade with crypto. That is definitely not my place here. Don't leverage. Do not leverage. That is a 100% guarantee of losing so much money. What does leverage mean? For instance, if you are going to say that Bitcoin is going to go and, it's going to move whatever amount of dollars up, that you're going to 10x it. So basically you are borrowing money from your exchange, right? And if it goes down and stops you out, you lose 10x. Just don't leverage. Just have what you have. Just trade what you have in your accounts. Nothing more. All right. I actually really want to talk to you guys about brokers and margin accounts, because the majority of the times when people come to me and want to work with me, their first thing they say to me is, oh, I got a broker account. And I always tell people, don't do a broker account yet. Wait until you know what it is that you want to trade first, practice it, and then open a broker's account. I want to demystify brokers, because brokers' one job is for you to start entering the market, either buying or selling, and they are making commissions and money off you. They do not care one bit if you even know what you're doing. As a matter of fact, I think that they probably love it when we don't know what we're doing, because then we get to donate more money to them. Brokers should be the last thing that you guys go to, right? When you decide that you want to buy a dress, you first do the research of the kind of dress you want to get before you enter a broker, before you enter the type of store, right? The same thing when it comes to brokers. You need to first also realize which instrument, which market you want to be in. Because if you decide you want to go into crypto, and you've already opened up an equities brokerage account, you're not going to trade your crypto there, right? That's not their specialty. So they're going to charge you even more on commissions, okay? And margin account. I cannot tell you any more, stronger. No margin accounts. It is not obligatory. It is not mandatory. You just say no, because they love to sugarcoat those margin accounts. No, you do not want to ever have a margin account, because what happens is when you open up a margin account, you are borrowing money from the brokers, And it doesn't matter if you win or lose, you are going to have to pay them back, and with interest. Why do you need to do that? Why do you need to put that kind of pressure on yourself? And again, I'm going to mention the commissions. Commissions are very important to understand because you could really lose a lot of commissions if you are not with the correct broker, okay? Because again, if you are trading equities and you have a crypto exchange, my crypto exchange, I have Kraken, and they now do equities, but they're charging ridiculous commissions. They don't even have good fee because of it, because they specialize in crypto. So guys, please, like, if this is what you want to do, get serious about it and learn how to save money. And platforms, honestly, you need the best platform. And I have been around now, I've been now trading for almost 14 years. When I began, it was only like 4 platforms. Today there's, oh my gosh, there's almost an unlimited amount of platforms, right? I have found that very few are really, really great. And I have to admit, Metastock and the service they offer has been one of the best ones that I have experienced. And and they have everything you need. They have absolutely everything you need. So one thing that always amazes me is that everything we do in this world has its own lingo, right? For instance, my family is really into rock climbing, and I don't rock climb, but our whole lives revolve around them rock climbing, specifically my sons. And sometimes I listen to my boys talk, and it's literally as if they're speaking a different language because they're using the vernacular of rock climbers, right? My husband is also into ecology, and he was a vet, and there's wording that he uses that I've never heard of because it is very specific to them, right? Doctors have their own vernacular. People, artists have their own. Everybody has their own. The same goes for the financial markets. So if you're about to put your hard-earned money into the live market, you want to be prepared, right? You want to at least have the basic vocabulary down, right? So, and it amazes me the amount of people that don't. They don't have the basics. It's incredible. All right, guys. So let's just learn the basic lingo. Intraday trading, it literally means you are in and out of all your positions in the same day. Why does that even really matter? Because it also really is important to understand your time frame. If you are a day trader, do you want to be looking at 3-day charts, 5-day charts? No, it's completely irrelevant for you. You want to be looking at the 5-minute charts, the 15-minute charts. If you're a swing trader, do you want to be looking at the 1-minute chart? No, for you, it's better to have a day chart or a 3-day chart, right? So it's really important to understand these things. Bull market, literally market is just going up. Bear market, market is going down. Nothing really that hard to understand. But one thing that is really important to understand is the amount of trends that we have in the market. It's actually 3. The upward trend, the downward trend. But to me, the most important trend is the sideways trend. Why is that the most important trend of all? Because that's where the majority of our money gets lost. Okay, so why is that important to know? Because once we can recognize the sideways trend, the other words that people you might know would be chop, market, the chop, exhaustion pattern, consolidation area, channeling market, slowdown. That's all considered the same as the sideways trend. And we need to understand it so that we can stay out of it. Okay, it's super important, guys, to be able to recognize that. Now, let's talk about profit targets and risk management. So we know what a risk management is, right? A lot of times, unfortunately, people put in a mental risk versus a real risk. And then, of course, ego gets to you and you lose your entire account. But you do need to have a risk management. What is a risk management? It is telling the market, this is all I am willing to risk on this trade. And you need to stick to it. You need to commit to it. Interestingly enough, having a profit target is as important. Why? Because you're telling the market, this is what I want to profit from. I have done my work and this is where I want to get out. Now, what happens with a lot of people is that greed can take over and they remove their profit target. And right when they remove the profit target, it turns and boom, it stops them out. Okay, you need to keep, this is where the professional traders are different than the amateur ones. They stick to their profit targets and their risk management. They don't move it. And I'm going to go back to the chart, guys. This is the holy grail. This is where you can control absolutely everything from the interface. This is where you could say this is where your risk, your profit target, all of that. And indicators. For me, indicators are absolutely everything. I use two. I use the EMA lines and I use MACDs. That's it. One chart. And I'm going to say this again, trending markets. Trending markets stay out of the sideways market. And the only way you really learn how to do that is through technical analysis. And I'm going to get to that in just a minute. All right. These are really, really important terms. Buying, going long. I know that the majority of us understand what it is, but it's really remarkable for me to still see the amount of people that don't. And they are going live with real money. Buying, going long, really simple. You're entering low, exiting high, taking the profit in between. Super simple. Selling, shorting the market, going short. It is literally the opposite. You are entering at a high price point, exiting at a lower price point, and taking the profit in between. All right, guys, really, really important. Now, here's another really big distinction between pro traders and amateur traders. Amateur traders, market entries. They come in with a market entry. What does that mean? It means they're looking at the market. They're not really sure what's going on, but oh, wait, it looks kind of good. Maybe I'll just go into here. That is completely, there's no strategy, right? Oh, it just looks like it's okay. So a market entry, what the market does, it just realizes that you are an amateur and it finds you. I bet you guys did not know this, right? But it's called slippage. Slippage is when the market sees that you are going on a market entry, and let's say you want to enter the market at $1 point, but because you don't really know what you're doing, you're going to be entered at $1.20. It's usually at 20%. This also works the same when you just want to take out, when you want to remove a stop, and then you want to go market exit. Again, it's slippage. So when you are telling the market you have an order waiting and you're saying, I'm going to enter the market only at this price point, that's when the market knows, okay, they actually know what they're doing, and it fills you in that price point. Stopping. Again, you need to have the stop limit in place. Otherwise, you are literally going to be fined 20% when you do a market exit. It's important, guys. You need to protect yourself, and that differentiates you from the 98% that lose to the 2% that win, okay? And now let's go and talk about technical analysis, my favorite topic. Technical analysis is so simple. And I know that you probably even know what it is, but did not realize what it's all about. Areas. The market loves areas. We as retail individual traders need to also work with the areas. Resistance area. What is that? It is where the market is hitting a ceiling 3 or 4 more times. You need to respect it. Stay out until it either shifts direction or breaks through. Support area. It's the floor of the market. It is where the market is hitting 3 or 4 or more times. Reversal patterns, my favorite. Reversal patterns, double tops, triple tops, double bottoms, triple bottoms, head and shoulders. And the coolest thing of all with technical analysis, they're free. It could be done on any market with any indicators. It's free and it's amazing. And my absolute favorite is divergence. So what is divergence? As you can see here, my price action is going in one direction. My MACDs, which is my favorite indicator, is going in the opposite direction. I like the MACDs because they're the least lagging indicator. But if you look here, what is happening? Price action going up, MACDs going down, there's divergence. It's a divergent area. What does that mean? It could mean quite a lot, but to me, it simply says the market is losing its strength. I'm not touching it until I have real indication that the market is continuing or shifting direction. So let's put this all together. Go here, makingofaDaytrader.com, get your cheat sheet, and let's do this. All right, breaking out of areas. How do you spot a valid breakout? So the interesting thing is breakouts are the most powerful trades there are. But if you don't have your technical analysis in place, your resistance, support areas, understanding divergence, you're going to miss out on literally the best and most powerful trade setup. So once you understand that, you are going to be able to actually enjoy this setup. So as you can see here, I have this massive resistance area. Now, if you look at my MACDs, you'll notice that there's this dashed black line, right? The dashed black line is total, it's zero. It's total weakness. There's nothing going on. But when it breaks out, and you can see where the breakout happens, you can see that it flew through the resistance area, and it also flew through with the MACDs. This gives me a very strong indication that this is going to be a great trade. Okay, so these are just some of the ways that you could use technical analysis. Now, the thing is, we have absolutely everything we need to trade and to take action, right? We have these amazing presentations. We have amazing summits. We have a ton of YouTubers and gurus and podcasts and books. But at the end of the day, how do you know you are doing it right? How do you know you are doing it right? How do you know, right? And this is all great. But the real question is, how do I even get started? How do I start all of this? And this isn't usually asked by beginners. I get this question mainly from the seasoned traders, people that have been trading for quite some time, are in the markets, and are still consistently losing, right? And they keep on asking me, how can I turn this around to become profitable, to be consistent consistently, right? That is the real question. And honestly, it starts from understanding the basics. If you have been here for the entire presentation, I began saying that we are putting in windows, but our foundation, our walls have not been built because of we never truly learned the basics. So our windows just keep on crashing, right? Our trades just keep on getting stopped out, or we keep on losing. But when you learn the basics, you can then build your walls and start to put in real windows that are not going to keep crashing. And this was literally my own personal problem in the beginning, right? Because, for instance, imagine getting into a car and you've been a passenger for quite some time, but now you actually have to drive the car. Just because you're a passenger does not mean that you really know the basics, right? Do you really know how, you know where the brake and the clutch and the gear shift is, but do you know how to use them? Just because you see them being used does not make you a person to use them, right? So you have to learn the basics, right? If you can't even get your car into first gear, you're not going anywhere. And that is as basic as it gets. Actually, what's even more basic is turning on the car, figuring out where the steering wheel is, finding that horn. These are basics. We forget because we've been driving for so long, but there is a strategy to driving, and we all learn the basics. Now, I want you guys to get super creative and imagine somebody who enters your car has never ever been in a car before, and you tell them, buckle up your seatbelt, it's going to save your life. And they have never seen a seatbelt. They don't even know what it looks like. And they're looking around, they're like, well, what are they talking about? And it's going to save my life. I need to figure this out. Because none of us are born with this information. And this was literally my own personal sad truth for years. I spent over $20,000 on my education, on different conferences, summits, chat rooms, alerts. I mean, you name it. And I was still struggling and losing money because I did not have my own understanding. I was constantly trying to follow somebody else and trying to just catch up, and it was always failing, always. And I ended up in a chat room listening to somebody else They said that was a good trade. I didn't understand why. I started to chase that trade. Of course, the second I entered that trade, it turned on me. My ego was like, no, it's going to turn around. I removed my stop and I ended up losing my entire account, almost $4,000 in 5 minutes. And this was after quite a few times that I was failing, and I just was done. I felt so defeated and just, I felt really lost. And I ended up quitting. I quit. I quit for about 3 or 4 months because it was just too much. I felt like such a loser. But here's the reality, guys, and I have a feeling that this kind of is for everybody in the room, is that we are all bit by the trading bug. We are all bit by a trading bug. And because of that, we are here, right? And the thing is, it never actually stops itching. And do you know why? And this was because this is how I discovered while I quit, I still was kind of watching the other people trade, and I kept on telling myself, I had this thing on rerun in my head, if they can do it, so can I, right? If they can do it, so can I. So that is when I said, all right, I'm coming back in, but I'm doing it on my terms. And this time I used to have 3 charts. I had I had 3 monitors. I literally donated 2 of the monitors to the garbage men, and I went down to 1 chart. I had 10 indicators. I removed all of them and then slowly started to experiment which ones work for me. And I came up with my 2 indicators, 1 chart. And I started to focus on the basics. And then I studied them for years, because my wounds of loss was so fresh that I was determined to truly understand. And I have to say, once I learned the basics, everything changed for me. Everything. And a couple of years back, one of my students says to me, he's like, Marina, your trading philosophy and education is very similar to Coach John Wooden. And at that point, I had no idea who Coach John Wooden was. So, of course, I went and looked him up online. And this man's entire philosophy is when in doubt, get back to the basics. But he is a legendary coach, okay? His teams went on to 88 national championships, 10 NCAAs. He trained A-star people, A-stars. But it did not matter because every season, the beginning of every season, it didn't matter how many trophies you've got, he brought you back to the basics because ego could totally take over. But when you go back to the basics, how to roll up your sock, how to tie up your shoelace, how to dribble the ball, if you are on that court and you get a blister or you sprain your ankle, guess what? Doesn't matter how many trophies you've got. You are sitting out, right? You need to start from the basics. So today I have a very special offer only for the participants that are here today. I do not offer this for anybody else. My introductory course, Bootcamp for Day Trading. You could do this on any apparatus, on laptops, desktops, phones, tablets, you name it. And all of this for one price. One time, you do not pay again, $97. So now I'd like for you guys to take a few minutes and just go to bootcampfordaytrading.com so you can follow along with me and see exactly everything that you're going to get. Go to bootcampfordaytrading.com. Here is everything that you guys will get for $97. No, it's actually a comparison. What $97 brings you today and what this course is going to bring you. So for instance, if you like to play golf, there's nothing for $97 anymore. I think the cheapest you can find is probably like 200 some dollars, right? You guys want to take your family out to eat dinners? Me and my husband went out to dinner the other day here in Spain, and it was almost 100 euros for just the both of us and a bottle of wine. I mean, it was absolutely insane because so little is you're able to buy. So $97, what I'm offering you is incredible what you'll get a return on your investment. So let me break this down for you. You get the simplified day trading package, 30-minute platform setup. So I will either do this for you or you will have the white glove service with MetaStock, but you will be able to get this fast so that you can get past the setup of the platform and become a pro trader, right? Then we get into the dissection of the markets, understanding those upwards trends, downwards trends. And remember what I mentioned about the sideways trend, that this is where the majority of your money gets lost? No more. We are going to be totally learning how to do this properly and understanding reversal areas, divergences, because this is those beautiful telltale signs, right? And understanding support areas, resistance areas, divergences. Once you understand the divergence, I cannot even tell you the amount of bad trades you'll stay out and the amount of really good ones that you'll be setting up. That alone is just priceless for me. And we're going to learn the mastery breakout, how the power of the breakout really works, and to avoid the fake out breakouts. They happen, but we'll be able to totally avoid the fake out breakout. All right. Now, you'll also get unlimited access to the curriculum for life. All of this is valued at $1,600, and you guys get it for $97. Here is what some of my students have to say. And like I mentioned before, we can trade anywhere in the world. So I have students from all over the world. Michelle, just finishing the boot camp, best money ever spent. Derek, you are the only mentor that truly checks the work. Adrian, I am enjoying this boot camp and I am learning every day. Now, I want to share something really important, and I mentioned this already. How do you know that you are doing it right? How do you know that you are doing it right? Who is there to help you understand what you are doing, to help you understand your charts? So what I have included in that one-time price, 1 month, one-on-one mentorship with me. Unlimited questions, unlimited chart analysis. You tell me what you want to focus on, whichever market you want to work on. This is it. All right, guys, unlimited, because I can guarantee that having a mentor will take you to that next level, and that is what I am going to be offering you right here. Plus, I have a live trade chat room that you guys could get access to, and we will work together on what we are seeing in the live market, and this is on top of the mentorship. All right, all of this, $97. Go here right now, bootcamp for day trading. bootcampfordaytrading.com. Here's what you guys will be getting. Everything in the course. 30 days one-on-one mentorship, 30 days live chat room membership, and the reality is all of this is worth less than one trade. I personally trade $200 to $400 per trade. All of this is less. You will get 10x return on your investment. That means you'll get over 100 of these dinners. But one thing that's really important, I'm seeing that it is a packed room. So I usually get quite a lot of people interested. The thing is, though, because of the mentorship, I'm only able to take on 25 spots. So again, $97, I never offer this price. And $97 is kind of a no-brainer. Usually I charge $297 for this course without any mentorship. So I recommend just signing up, and if you can't start until after the holidays, you tell me when it works for you. All right, so this is the purchase order that you'll be looking at. So let's go to here. This is the order form right here. So this is the actual, let me just see here, how does this work? Okay, yeah, Jeff actually put in the actual direct link to it. So as you can see here, $97 one-time payment. If you do need to do a payment plan, I have for 2 times, $59, but you still get automatic instant access to the course. So you do not have to wait to get that, okay? You get instant access to the course. So let's go here together, guys. bootcampfordaytrading.com. Jeffrey put it in right here. So please let me know if you have any questions. Jeff, I don't know if there's any questions from YouTube people watching.
We do have a couple questions, yes.
Great, let's go for it.
And if you have more questions, make sure to type them. If you're GoToWebinar, type them in the questions area. If you're in YouTube, type them in the chat. I'm looking at both. Barbara wanted to know, what moving averages do you use?
So I use the exponential moving averages, and I use one that is 30, 52, and 135. Those are
Cool.
my three that I personally use. So they're exponential moving averages. They move with the market.
Right on. And then Tim wanted to know, can I use this information for swing trading?
Yes, absolutely. I have a lot of swing traders. So the only thing that we will focus on when you first begin, besides the market, is the time frame. That's the only difference with swing trading. Is day trading is everything between usually 1 minute to 5 minutes, 15 minutes. Swing trading, it could be maybe a 4-hour chart, 1-day chart, 3-day chart. It will depend on the market that you want to focus on. But yes, 100%. I have a lot of swing traders that use
Well,
it
that kind of brings up
successfully.
another bit of a question. What are good markets to use this with, Marina?
So personally, I found that the majority of the markets it works for because you're learning how to read the charts. But if you're going to be picking markets that you haven't chosen the market yet, definitely go for a higher volatility one because they usually move better and faster, right? Like for me, I really enjoy moving fast pace. Otherwise, it gets a little bit boring for me. And I'm a scalper as well. So I like to look at markets that really move well as well.
Okay. Those are the end of the questions. I'd say that's a really good deal for $97. I'd almost do that just to hang out with you.
Oh, well, thank you.
All right.
I like that.
So I did have a trouble going to the bootcamp for day trading link, but I did get there. And if you just want to click on the link that's in the chat, it'll take you straight there. So sometimes
Yeah, for some reason,
Chrome has a problem with redirects, and it's a whole thing.
yeah,
So I just click on the link in the chat.
I think it's also it's the HTTPS for some reason. So with the boot camp, you have to take out the S. It's kind of strange. I know it's Google. However, I think if you go on any other navigator or browser, it doesn't have a problem. It's just Google.
Yeah, we deal with that with
But
Chrome internally too. So I know what you're
yeah,
talking
it's
about.
weird.
So bootcampfordaytrading.com, or just click on the links in the chat. Big thank you, Marina. Thanks for that. Thanks for spending some time
Thank you
with
so
us.
much. Yeah, the same to you, and thank you, and happy Thanksgiving. I know it's coming up really soon.
Yeah. All right. Thank you very much.
Ciao.
All right. Let me go ahead and do this. I'll turn on my camera. I'll go ahead and kind of just make me the presenter here. Show my screen. And where is my slideshow? Okay, let's kind of go here. We talked a little bit about AAII. I want to kind of just focus for a second on another one of our great sponsors, Stocks and Commodities Magazine. Stocks and Commodities Magazine, I've literally been getting a copy sent to our office here since 1997 when I started. So it's a great magazine. I love the fact that you get a physical magazine if you're in the US every month. I love the fact that it's got good articles that you can kind of go through, review, make sure you're kind of learning a little bit about what you're doing every month. And I still find it, even after 27 years, that I'll read things that I'll pick up that'll impact what I'm doing to trade. So you always want to do better. You always want to kind of keep learning. And if you go and get a subscription for $97 a year at traders.com, they do a really good job of kind of making sure that you keep sharp, I guess is a good way to say that. We are, of course, Metastock. Any of the Metastock offers that we're offering, including the extended trial, Marina mentioned that you can get like a white glove treatment. That's awesome because we'll actually sit down with you, help you go through the software, help you understand how to use it, make sure you understand how to use it. We'll remind you it's been rated the best software in its price category for 32 years in a row. Prices start at $75 with data. That's everything you need to run. That includes training. That includes that one-on-one. That includes unlimited support. And if you buy a month, we'll give you the second and third month this week. So basically, you can try it until January 13th. And if you do that, it's going to cost you about $25 a month. If you decide after 90 days of playing with it that it's not going to help you find the better trades or take your trading to the next level or help you understand what systems work better, there's no commitment to keep it. You can just basically cancel your subscription. So most of our traders have been with us for decades, like our employees. I think the reason that we have such a good retention rate on Metastock is because it is really helpful in helping you identify those good opportunities in the market. So You can get, again, you can get any of the specials at metastock.com/conf promo, metastock.com/sales chat, 800-882-3040. I do notice that our next speaker is in the chat, or in the room, Daniel. Daniel, I know that I normally introduce you and I say, hey, it's your turn, and I do all that kind of stuff, but I'm going to have you help me today. Are you ready?
Oh, yeah. Hey,
Okay.
Jeffrey. Hey, guys. How is everyone today? Hello.
Well, we're doing great. I'm doing good. I can't speak for everybody else, but I'm doing great. How are you?
Oh, very good too. Yeah. Back in Montreal. I was in Germany last week at a traders conference, but back now in snowy and cold Montreal. Winter has officially started.
We haven't gotten snow yet, and I'm not looking forward.
Yeah.
You're gonna help me give away a prize right now, Daniel.
Okay.
I'm just looking at my prize list. We're gonna give away Larry McMillan's 3 newsletters. Larry spoke on Tuesday. Does a really good job. Wrote Options as a Strategic Investment. Very, very well-known options strategist. We're going to give you 3 months of his newsletter. If Daniel picks your number, it's all on Daniel to pick your number. So Daniel, you ready to do that? No pressure though.
Any number?
Okay, so the number that I need, it has to be at least 2 because I have a header row in this spreadsheet, but it can be anywhere between 2 and 6,277.
Okay, 2028.
2038.
28.
2028 is very important when we're picking a totally random number that we get the same one. 2028, right?
Yeah.
Okay. Ken B. I'm not supposed to say last names. Ken B is the winner. He's in the U.S. and he has a web domain of ARRL.net. So if that sounds like you, Ken, you're probably the only one that registered that way. Congratulations. If you're here watching, let us know. We already have a comment that says, go Daniel, from Derek. Derek's excited to see you. Daniel, I'm going to introduce you officially right now. Here, let's go to your picture. We can both look at it together if you want. Daniel's been a big partner of Metastock for quite a while now. Over the time that I've known him, he's like an indicator scientist. It's really cool, kind of some of the technologies that he's developed, the indicators that he looks at, combine a lot of different indicators creatively. They automatically look and do back testing and optimize themselves to kind of fit the cycle that the stock might be in or what works best for the stock that it's in. It's all very, he explains it very, very well, and I'm going to let him do that. But Daniel does a really, really good job, and we really love having him on here. So Daniel, there you go. That's how I'm going to introduce you. I'm going to give you an opportunity. I can see you too. I'm going to give you an opportunity to add anything you want to that introduction. Go.
Okay, great. Yeah, let's go. Oh, thanks, Jeffrey. Let's get into it. Okay, so I'm going to share my screen. And it's nice to see so many familiar names in the chat. Derek, for sure. Derek, I think from Toronto, so not too far away from Montreal. Nice to see you, and I see some other familiar names here as well. Excellent, perfect. Okay, so you guys should be able to see my screen now. Jeffrey, if you can just, okay, perfect. It's gonna move.
And we can hear you, so we can see you.
Panels away. Great.
Out of the way. Your turn.
Okay, so today we're gonna talk about how I would like to phrase it, next generation trading indicators. So meaning what can be done in terms of technology, in terms of features with today's computing power. Yeah? As you may know, most trading indicators, the classic ones at least, like an RSI or a MACD, these are quite dated. These are like 30 years old. The computing landscape was completely differently back then. We have evolved quite a bit, and why shouldn't we as traders also evolve our indicators accordingly? So in today's presentation, you're going to find out what AI-powered indicators can do for you and to make better trading decisions. But before we get into this, and I'm going to introduce myself a bit more in detail in just a second, let's review a couple of things that we've done in the past. So I think this might be my, I don't know, Jeffrey, maybe my 10th appearance at Metastock. And earlier this year in May, I was on the show and we called out a trade In this particular case, it was a long trade Meta, so Facebook, an entry around 640 with a target and a stop loss, and it was triggered by one of our indicators. We're going to get to this in a second. And this trade worked out beautifully. We called this out in the show a couple of weeks or maybe a couple of months after we hit our target. Great. And then a bit later in October, I was back on Metastock and we called out another trade. In this case, it was Google, another long trade, an entry on 253. You may be able to see this little entry signal here. Target at, oh, this is a typo, at 282. Oh, this is reverse, target 280, stop loss 232. And also this trade hit its target a couple of weeks afterwards. And today, for today's presentation, I will do the exact same thing. I will call out yet another trade, because these are in the past, of course. Let's try to find a new one. So the trade for today, which I have found just a couple of minutes ago, in fact, using the awesome Metastock scanner and our indicators, is this one here, a long trade of Ventas Inc. Ticker symbol VTR. It's in the S&P 500. It's a real estate company. It's a REIT. And oh, what do I do here? I must have messed up my targets. I apologize for this. So it's once again a long trade. Not sure what happened here. Long entry with a stop loss just below the swing low here and a target at the all-time high. So if you zoom in a little bit further, you can also see something really interesting here. I'm really excited about this today because this is something which doesn't happen very often. And we're going to get to this. This particular symbol today, I just found this a couple of minutes ago, actually does have a gold signal right now happening. These signals are extremely rare. They happen perhaps per symbol, maybe once a year, probably less. Super rare. I'm super excited for this one here and what this could mean for this particular symbol and how you would action on it. And most importantly, how you can find these kind of trades on your own. This will be the topic of today's presentation. So in this presentation, I will show you exactly how I picked this trade and why. And best of all, the steps I will show you, these are quite mechanical, meaning everybody can easily replicate these steps on your own, being able to find these trades every day on your own. Okay. Now, you may wonder, who is this guy? Who is this guy recommending or suggesting, I should say, these ideas? Well, my name is Daniel, and I'm one of the partners, in fact, founders of tradingindicators.com. And as our company name suggests, we are specialized on building, well, trading indicators. So this is really our bread and butter. This is what we've done for more than 10 years, and we've built more than 1,000 trading indicators for all major platforms. So for TradingView, for NinjaTrader, for TradeStation, and of course also for Metastock. And I love Metastock for its scanning capabilities, for example, and our indicators work great with Metastock. So building these innovative indicators is really our bread and butter. And interestingly, however, I'm going to backtrack just a little bit. I actually did not start, my career didn't start out in trading. I actually was on a career path to become a university professor in software engineering. So that was when I finished my bachelor's in software engineering. I really liked what I was doing and said, hey, this is what I want to do all my life. So I went through all the levels. I did my master's, I did my PhD, I did a postdoc in software engineering. I became a researcher. I was teaching at various universities in software engineering. But guess what? At the same time, I was also fascinated by the world of finance and the markets and how you could make potentially money in the market. So I started trading on the side. But unfortunately, and perhaps you have a similar experience, as you start out trading, you tend to make all kinds of mistakes. And so did I. So I traded when market conditions were not right. I, of course, took too much risk. I did revenge trading. And after donating quite a bit of money to the market, I came to the hard realization, oh boy, trading is not as straightforward as I thought, and I need help. And for me, needing help meant I need better tools, better software tools, because I was a software engineer. I need better tools to help me make better trading decisions. So I rolled up my sleeves and I started coding. And the very first indicators that I've ever written, they were solely for my own purpose. But once I realized, hey, these indicators, this was 10 years ago, these indicators actually can make a difference. They can help me make better trading decisions. I then decide perhaps others could benefit from these indicators as well. And this is really how the story behind tradingindicators.com started. However, enough about us. Let's talk about what we can do today for you. First off, however, I do need to remind you that trading does contain risk and therefore is not suited for every investor. If you trade, make sure to only use risk capital, which is money that you actually can afford to lose. When it comes to best performance or hypothetical performance, or really anything based on historical price data, keep in mind that this is not necessarily indicative of future performance, and any trade ideas and strategies and setups discussed in this webinar should not be construed as trade advice. These are for educational purposes only. All right, so with this out of the way, let's get into it. A quick reminder, we at Trading Indicators, we specialize in creating indicators. And with everything we trying to do is we trying to give it a little bit extra. We are trying to push the envelope. We're trying to take full advantage of today's computing power. Now, what could this mean? Well, one thing we realized is that most indicators need to give you signals of some sort. Yeah, like maybe an entry signal or an exit signals. But you know what? To us, at least, this is not sufficient. And we're thinking, besides just giving rogue signals, what else would traders need to, to make sense of these signals? Well, and then something dawned to us, and this was a couple of years back. Back then, poker was quite popular and was televised quite a bit. And I also was fascinated by, these poker broadcasts. And I was looking at these statistics here on the left-hand side, which would indicate to the audience on TV, not to the actual poker player, but to the audience on TV, what are the chances of this particular player, for example, of winning his next hand. All right. So I was thinking, if maybe it would it be possible in this way? Would it be possible to perhaps use the same kind of statistics or numbers or forecast? Would it be possible to translate this to the world of trading? Wouldn't it be cool, for example, if we knew as a trader before taking a trade what would be the chances or the odds of winning your next hand? Something like this, for example, where the indicator would tell us, okay, now we do have a signal, let's say it's a long entry signal, and the indicator would forecast, okay, the odds of winning that next signal are 73%, and there's a 27% chance of losing. How would you trade if you had these numbers available? And I think the answer is quite straightforward. You would only take a trade if the odds are in your favor, and if the indicator suggests, hey, I'm not working so well. The odds of this signal actually working out is not as good. You would stay on the sidelines. And oftentimes, staying on the sidelines, not taking a trade is the best trade advice that you can get. All right, so just to reiterate, if we knew what the odds of having a successful trade are, of course, we could really qualify our trading decisions, by only taking the trades when the odds are in our favor. Now, we went down this path, and we're thinking, okay, this is a couple of years back. Is this possible? Can this be done? Is it possible to project these kind of statistics onto the chart? And the easy answer is yes, it is possible. Of course, an indicator could write some kind of percentages on your price chart, like in this particular case here for one of our indicators. You can see it here that the indicator predicts, okay, if a new long entry signal would come along, like this one here, the chance of winning this trade is at 91.67% for a long trade, and for a short trade it would be 87.5%. But of course, printing these odds onto a chart is one thing. The real thing, however, is do these odds actually work moving into the future? Everybody can just print some percentages onto the chart, but do they actually mean something moving forward? So what we've done is we have conducted an extremely comprehensive case study where we tested a trading system. It was a very large trading system which would trade more than 1,000 US stocks over a very prolonged period of time. And we did 2 test runs. One test run was where we took every single signal, no matter what the statistics would say. The performance was not great. We looked at this, that was not as great. But then we did something afterwards. We ran the same trading system where we would only take the signals when the odds at the time of the signal actually were in our favor. And the difference in performance was quite astounding. And this gave us so much confidence and so much motivation that we decided to integrate these performance statistics into our indicators. All right, so we're going to get to this in a second. So this was truly a game changer to us, because now it was possible to qualify the quality of a signal. Basically, in other words, the indicator would tell you right on the chart, right when you have it on your chart, how much you can trust the signal. How much is the indicator honed into the current market conditions? How well are the signals working? And sometimes they work really well. That's good. You know, we can trust these signals. And sometimes, however, you will see a very low percentage, meaning right now, I cannot trust the signals. What would you do then? Well, you would simply stay away. You would not follow these signals. And again, there's so many things you can trade. This is not really a problem. So with these odds, lots of things were possible all of a sudden. You could make a truly informed trading decision. You know, the trader has like some real hard facts on your price chart of how much the signals have been working out. You would only trade when the odds are in your favor. And on something I'm not going to get too much into it right now, you would be able to use these hard facts to find the optimal parameters for the current market conditions. Why don't I really want to go into this? Because this sounds tedious to me. Imagine trying out all kinds of parameters for your indicator, checking out what are the percentages, did they go up, did they go down? That sounds challenging, to say the least. But you know, truthfully, it's just extremely tedious. And we believe, and I'm an engineer. I like to use tools to make my life easier. Anything tedious is probably something I don't want to do. It's just too time consuming. It's not sustainable. Something traders should not be doing. And we realized this. And from this came another revelation in our approach, in our process. What if we integrated yet another groundbreaking feature into our indicators? And this feature is called auto optimization. Okay, so now the indicator already pressed this, the win rate prediction on the chart. That's done. The next part was, what if we could empower the indicator to find the best parameters, the optimal parameters for the current chart at hand? And these parameters would change whenever you change the time frame or whenever you change the symbol. So for Apple, you may have some set of parameters, then you change charts to IBM, would be different optimal parameters because the chart is different. Then for Google, it would be different, and so forth and so forth. So the indicator would always auto-optimize itself whenever a new chart is open. And these, I'm going to get to the charting in a second, and these two breakthrough technologies have the power to dramatically enhance any indicator. I'm going to prove this to you in this presentation. So instant performance statistics and auto optimization. So these two technologies, if applied to any indicator, will improve that indicator. It doesn't really matter what kind of indicator it is. It could be a stop and reverse indicator. It could be a trend trading indicator, a divergence indicator, a breakout indicator, a confluence-based indicator, whatever it is, it will enhance this indicator. And if you allow me, let me prove this to you. And I promise you, we're going to get to the punchline in just a bit. Okay, so let's start with stop and reverse. And when I hear stop and reverse, one particular indicator comes to mind. Not sure if somebody else has an idea out there as well, but one indicator comes to mind right away when I hear stop and reverse. Anybody wants to voucher a guess what that might be? I won't be able to check the chat, but of course, at least to me, this is super trend. One of the classic stop and reverse indicators. It's one of the most influential trend trading indicators out there. It's integrated into most trading platforms, hands down. It's a classic. And there's nothing else to say about this. It's been influential, and was developed by a French guy, a French trader called Olivier Seban. He even wrote a book about it, which translates roughly to "Everyone deserves to be rich." All right, so how this indicator works was as follows. It was quite influential at the time. First off, it will give you these entry signals. You can see here this little green triangle facing upwards. That would be a long entry signal. And then we have this red triangle facing downwards. That would be a short entry signal. And the way this indicator works, and we're going to look at the chart in a second, is whenever you get a long entry signal, you enter long here. You place your stop right at the bottom of this green line. We're going to talk about this in a second. And then you stay in this trade for as long as the signal will reverse or until you get stopped out. And then what you will do, you will reverse your position. From long, you would go short, you will stay short until you get a long entry signal. These signals were always alternating, long, short, long, short, long, short, and so forth. All right, so that was, these were the signals, but what also Supertrend does, which was quite influential back in the day, this is an old indicator, it came with a volatility-based stop loss, meaning how far or how close you put your stop loss depends on the current volatility in the market. If markets were quiet, not very volatile, the stop loss would be quite nearby. But if things were really, volatile, big candles and so forth, the stop would be further away. So it would adapt to some degree already to market conditions. And then you would stay in this trade until you get stopped out. And this was a true trading stop, which only goes upwards for long signals and only goes downwards for a short signal. But you probably would agree with me that, finding the right distance for this trading stop, even though it was ATR based, there's some parameters which will allow you to kind of fine tune the distance of this trading stop. You would agree with me that, or you may agree with me that this is the factor which may make or break this indicator, because finding this right distance is absolutely key, because it determines how long will I stay in the trade and when do I reverse. And that could probably be a sweet spot setting for this. Now, let's check it out. I'm going to switch over to MetaStock, and let me just quickly find, there we have it. I'm going to start very simple. This here is a daily chart of the S&P 500 ETF, the SPY. Daily time frame, and I went ahead and I've applied our super trend indicator to the chart. And you can see these green arrows here, these are long entry signals, and the red ones are short entry signals. And then we have our trading stop here, this blue line, which is going upwards for longs, and it's going downwards for shorts. And we can see here, okay, a couple of trades have been taking in the last year in the SPY. And you may say at first glance, this looks all right. We had one really nice winner here, but a couple of bit of whipsawing here along the way. I mean, it looks okay. The question is, would you trade these indicators? Would you trade these signals right now? And probably you could have kind of an intuition of whether you should follow it or not. But wouldn't it be better if the indicator would tell you how much you can trust these signals? That would be great. So let me switch on something here in MetaStock, and on different platforms, it's in a different place. But in MetaStock, you can switch on something called the expert commentary. In fact, it's already hidden down here, I believe, if I can find it. Where do we have it? It's a bit hidden. There we go. Okay, which is the expert commentary. And if you scroll down here, please pay attention to a couple of numbers down here. Long win rate, short win rate, and profit factor. This is the indicator telling you, hey, these signals right now, they are working out as follows. They have a 46% win rate for the long entry signals, 37 only for shorts, and the overall profit factor for taking these longs and shorts is 1.09. That's barely profitable. So I personally would be on the fence, especially for the short trades, of whether I should follow these signals. But now let me do something. So this is the first key feature here. It tells you something of how well these signals are working out. But now let me enable the auto optimization feature for this indicator. And let's see what happens. So I'm going to quickly go into the settings of this indicator, Supertrend Bullseye. And don't worry if you don't understand what I'm doing right now. The short answer is I'm just enabling auto optimization. So we have a bootcamp on all this, how this works. So I click OK. I close this window, I refresh my chart, and let's see what happens. Let's first focus on the chart. What do we see here? Well, out of the sudden, if you look here, we have much less whipsaw. And we had so many up and down signals here. Right now, with the optimal settings, the signals are much cleaner, much less whipsaw, and we're staying in trends much more precise than before. This was possible simply by using optimal parameters. And if you now scroll down here in the expert commentary, let's have a look at our performance statistics. So out of the sudden, our profit factor jumped up from, I think it was 1.05 or whatever it was before, or 1.1, now to 1.84, a whopping win rate of 80% to the long side and 33% to the short side. So now, and this was possible simply by using the optimal parameters. And if you're wondering, hey, what parameters are optimal for this particular symbol? It's these ones here, a multiplier of 5 in a period of 20. These are some parameters specific to Supertrend. Okay, now let me do something else. Let me switch over to a different chart. Silver, SLV. Okay, different chart. Supertrend is applied. Let me just, in case, reload or refresh it to change some of the settings. And let's see what happens. The signals are on the chart, yeah. We're catching trends quite nicely. And right now, look what happened here. Different parameters are being used for silver. 3.5 and 60. It was different before. At SPY, we had, real quick, just to prove it, we had 5 and 20, because 5 and 20 were optimal for the SPY. For silver, 3.5 and 60 are optimal. And here are the win rates for the long and short direction, along with the profit factor. All right, now, talking about these win rates, what do they telling us? A couple of things in this case. First off, they tell us how well the signals have been working out. But you shouldn't just use this number or take this number at face value. You have to contextualize it a little bit. Now, a win rate of 66% for a trend following indicator like Supertrend is actually something really good, because typically, especially with a tight stop loss setting, typically your winners are much bigger than your losers. Therefore, a win rate at 66% is actually quite phenomenal, because you get all these like big winners along the way and perhaps a couple of small losers. Because you always contextualize this with a feeling of how big your winners are versus your losers. And to me, in fact, the most telling statistic is the profit factor. This one takes into account, that's a metric that takes into account the size of your winners and the size of your losers. And anyone who knows what profit factor is, a profit factor above 1 indicates a profitable trading system. Below 1, it would not be profitable. And the higher it is, the better the trading system. So 1.59 here, 49 for SLV, for example. Okay, now, I hope you got an appreciation or an initial understanding of how auto optimization and these win rate statistics can help you make better trading decisions. And of course, in this case, let's say a short signal would come along. We're currently long silver. Let's say for some reason, maybe tomorrow or in a couple of weeks, a short signal comes along. What would you do as a trader? Well, I think the answer is quite simple. Yeah, you probably would not take that short trade. Why? Because the win rate is only 12.5%. That's not a very favorable number. I personally, if you're not long right now already, get this long signal here after this bit of a retracement, I personally would wait for the next long entry signal and then enter, simply because these statistics are much more favorable for the long direction. All right, so let me, and by the way, guys, if you have any questions, don't be shy. Please put these questions into the chat box. Let me go back to the charts real quick. To summarize, so far, what have we seen? We have seen a taste of what auto optimization and performance statistics can do by means of our Supertrend bullseye indicator. This is how we call this indicator, which is enhanced with these two features. On top of this, we also have other features integrated, which differentiates Supertrend bullseye from the regular Supertrend, which is different reversal modes, different trading styles, for example, long and shorts, long only, short only, and so forth. This is all built in. But I don't want to get too much into detail of these, because I want to focus on these two features up here, auto optimization and performance statistics. Because my claim was initially, these two key features, they can enhance every single indicator. So let's look at some other types of indicators. Let's look at trend trading indicators, divergence indicators, and breakout indicators, and how these two key features can enhance these types of indicators as well. So for this, we're going to look at our Power Bundle 360. You can see this little circle here. This Power Bundle, in fact, is a bundle of 3 indicators. One for each market condition. This is why we have this little circle here. You know, no matter what the market conditions are, we've got you covered. 360 coverage for trend trading, for trading reversals, and for trading breakouts within a sideways market. The first indicator in this bundle is called 1 to 3 strike. It's our trend trading indicator. It's called 1 to 3 strikes because it looks for 3 types of confirmations before issuing a signal. We need to have directionality, so price either needs to go down or up or down for quite some time. So there must be directionality in the price move. We need to have an increase of volume and an increase of volatility. And if all 3 things come together, a signal is generated. That's indicator number 1. Indicator number 2 is our reversal indicator called divergence cloud. And as its name suggests, it's based on the concept of divergence. And just a quick repeat, what is divergence? Basically, it's a disagreement in the market. A price move doesn't agree with the read of an underlying indicator. If they show different directions, then we have divergence, which oftentimes is a telltale sign that, hey, something is up, something may be happening. And this could be a complete reversal of trend or at least a pullback. Yeah. And we've developed our own form of divergence, which is called volatility momentum divergence. We're not going to go too much into this indicator. It's great for finding these pullbacks and reversals. And then thirdly, in our bundle, we have volatility crusher, an indicator to detect what we call strong breakouts. And in our book, a strong breakout is a breakout where the price will move in the direction of the breakout for quite some time after the breakout has occurred. And you can imagine how you could trade accordingly. Now you would simply enter in the direction of the breakout, and if price continues, everything is good. All right, so let's check out these 3 indicators. I promise you I'm going to be brief about these because the finale is still to come. So I want you to still stay tuned for this. So back to MetaStock. And now I'm going to open up Google. And if you remember, we had, well, I mentioned it in the beginning at least, in October, I was here at the MetaStock conference and I called out a long trade in Google on October 17. I believe that was my date, or maybe it was the 18th. I believe it was the 17th. And this was triggered based on this entry signal. And since then, of course, price nicely went into the desired direction. We already have a couple of exits here. I'm going to talk about these in a bit. But this was based on this signal. Now, let's see if we can make sense of this indicator first. I'm going to quickly hide the commentary. I'm going to bring it back up in a second. What do we see here? Well, first off, remember, 1 to 3 strike is our trend indicator. It requires for price to be trending. Sorry, I have a bit of a cold after my trip to Germany. So the indicator detects whether we are in a downtrend or an uptrend by means of these candle colors. You see some candles are colored green, other ones are colored reddish. This is the trend direction. If it's green, it's bullish. If it's red, it's bearish. And an entry signal can only occur if the trend is bearish, or short entry signal, I should say, can only occur if the trend is bearish, and a long entry signal can only occur if the trend is bullish. That's one of the preconditions, so directionality. And if everything comes together, the indicator will give us an entry signal. You can see here a long entry signal, or here, for example, a short entry signal. But you know what? Getting into a trade, that's one thing. Once you're in a trade, what do you need to do? Well, you need to manage your trade. And most importantly, you need to figure out when to get out of this trade. Timing your exit is at least as important as getting into a trade. Many traders probably would agree with that statement. This is why we have equipped this indicator with exit suggestions. Do you see these little red arrows here facing downwards after this long entry signal? These are exit suggestions, and we have configured this indicator, that's a setting in the parameters for this, to give us 4 exit suggestions at the most. So one long entry, one partial exit here, LPE stands for long partial exit, a mouthful, but that's what it means. Another long partial exit here, another one here, and then we have LFE, it's a bit hard to see, long final exit, we're flat. And this is how the indicator works. And same for the short side. Let's look at the short entry signal here. Short entry, first partial exit here, another here, another one here, another one here, and then the final exit at this point, and we're flat. And this is basically how this indicator works. Now, what made me then recommend this particular trade in October when I was on this show? Well, first off, it had a long entry signal. The indicator was showing us, okay, long entry. Consider potentially this trade. But this was not everything, because what I also have done is I have looked at the performance statistics. I opened up the expert commentary. All right, you can see it here. There we go. I scrolled down and I was able to see, okay, at the time of the signal, the efficiency, or the win rate, I should say, across all the bars on my chart are the whopping 89% for long trades, which is a fantastic number, 89%. And this gave me the confidence. Oh my God, that's a great signal. It's Google, first of all. It's also a strong name. It's clearly in an uptrend. I can confirm this visually with my eyes. And the win rate for this long entry signal was at 89%. At this point, it becomes a no-brainer. This is a potentially very strong entry signal. And this was the reason why I've chosen this trade as my trade of the day back in October. Okay, now let's move on. A different symbol, General Electric, GE. There we go. Also on the daily chart. And by the way, guys, I'm only showing daily charts right now because of my data subscription for MetaStock, but this indicator works just as well on the intraday timeframes. So if you're a day trader or a scalper, no problem, you can use these indicators there as well. Okay, so here we have GE, and once again, here we can see the indicator applied to the chart for our long entry signals of the exits, our shorts, and so forth. And if you look at the performance statistics, let's have a quick look, we can see, okay, it's at 84% in the long direction. So if a new long entry would come along, 84%, it's not too shabby, and 62% for the short direction. One thing I forgot to mention, this is also true for the Google example earlier, this indicator has auto optimization enabled. This is why we call it 1, 2, 3 strike AO, auto optimization. In fact, from now on, everything I'm going to show you has auto optimization enabled. Because it was such a difference maker in our trading, we don't trade without it anymore. The indicator will always auto optimize itself to the current market conditions. All right, so I'm gonna have to speed up a little bit. The next indicator I want to show you is divergence cloud, or a reversal indicator. And here we're gonna use Amazon as an example. I'm gonna apply Amazon to the chart. And the first thing I wanna point out is this little ribbon below here. Do you see this little bar below the price chart? Sometimes it's like black, then bluish, or turquoise, or as you want to call it, or maybe pinkish here. And this is an indication of whether we currently either have no divergence, which is when it's black, we have bullish divergence when it's like bluish, or we have bearish divergence if it's reddish. And an entry signal, if you look at the chart here, can only occur if it's a long entry signal in phases of bullish divergence, and the short entry signal can only occur in phases of bearish divergence. We can see also here on top is that for every entry signal we do have our partial exits, and for the shorts and also for the longs. And this continues and continues. And of course, also this indicator, if I go down here, comes with our performance statistics. You can see it here, and it auto optimizes. Which is the default setting from now on. And if you want to contrast, for example, our trend indicator with this one here, keep in mind this is our reversal indicator, you will see that the entries, now long or short, they happen a bit earlier, when the move is about to start. And divergence oftentimes works this way because you want to get in early, you want to get in at early signs that something might be happening, perhaps the trend is reversing, and divergence it's a very powerful tool for that. Another example, real quick, IBM. I'm going to go fast now through these examples. Same thing. We got our signals on the chart. They're working nicely. Of course, not always. Here we have a short which didn't work out so great. But of course, in trading there is no guarantee. And if you look at the win rates, well, you can certainly see that long signals are working out much better than short signals. Both are fairly okay, but the long direction definitely has an edge, as it has for most bullish stocks. Okay, we have one more indicator that I want to discuss, which is our breakout indicator. And for this, I'm going to change one more time our signal here, our symbol here. I'm going to look at Meta, Facebook. So this is our breakout indicator. Basically, it gives you a signal if price is making a decisive move either up or down, And basically it's breaking out. And then the idea is, okay, we are breaking out, price will continue to move in the breakout direction for quite some time. Then we have our targets here. For example, here we have a long entry signal. Target 1 is hit, target 2 is hit. This long entry signal got stopped out. That's possible too. And recently, we did have a nice short entry signal here in Facebook, which already hit its first target. We're still in this trade, waiting to see if the second target could be hit. All right, so this is how the breakout indicator works. And of course, also this one here comes with performance statistics and auto optimization. All right, now, again, I don't want to go too much into detail of how each of these 2 indicators or 3 indicators work. We have boot camps for this. I want you to get an appreciation of what auto optimization and win rate prediction can do for you as a trader. So let me quickly go back to the slide just to sum up real quick. So what you've seen so far, every single indicator gives you a clear entry signal and a clear exit signal. These indicators will also run anywhere. I've only had daily charts right now, but they will work on any chart. It can be a stock chart, a futures chart, an FX chart, a crypto chart. You could trade off the 1-minute time frame, the 5-minute time frame, the daily time frame, whatever it is. All these indicators come with our real-time statistics, allowing you to make truly informed trading decisions and, of course, auto optimization. All right, one more thing I need to talk about, and then I'm going to put it all together. There's one more type of indicator. Of course, there's so many out there, but one more type I want to discuss today, a confluence-based indicator. Maybe you've heard about this concept before. What is confluence? Well, confluence basically is really just a fancy word for when the stars align or the good stars are aligning. In trading terms, it means that multiple indicators line up and forecast the same price move. Let me give you a practical example. Let's consider this price chart here. What do we see here? All right, here we have some classic indicators on the chart. We do have a descending trend line. Well, this black line here, it's going down. All right, descending trend line. We have this blue line here, which is the SMA 200, which may be acting as dynamic resistance. Okay, we're coming up to resistance. We are approaching the 61.8 FIB level. If you know about FIB, 61.8% retracement is typically where the retracement often stops. And we are overbought up here in our stochastics. So what do all these indicators forecast? Well, they forecast a continuation of the bearish move. Price will continue to falter. We're descending, the trend is going down, we're approaching resistance, we are at a key retracement level, and we're overbought. All signs that we are going to further down. So 4 indicators in this case are forecasting the same price move, a bearish price move. This is what confluence is all about. So we decided, okay, let's jump on the bandwagon. Let's create our own confluence-based indicator. We call it super signals. And this indicator looks for confluence between our 3 power bundle indicators. So 1, 2, 3 strike, divergence, cloud, and volatility crusher. And based on how much they align, based on how much these 3 indicators line up and forecast the same price move, we have different levels of confluence. We have bronze, silver, gold. I may remember my initial chart, the trade of the day, which actually had a gold signal, and then platinum, which is super, super rare. It's like really winning the lottery. All right, so how does this look on the chart? So I'm going to go back one more time to our price chart, and I'm going to open up Eli Lilly. What do we have here? So Eli Lilly, once this opens up on the daily time frame, what you see here are, these little arrows here labeled with either bronze. You can see it here, upwards facing, downwards facing, upwards, downwards. And here we have a gold signal, for example. These are points in time where we have a degree of confluence between our 3 power bundle indicators. And this has been a very powerful indicator, especially if you're patient enough to wait for these bigger degrees of confluence, like silver. Oh, there's actually platinum here. Oh my goodness, I didn't even see this. Platinum short, and look what the price move was afterwards. Yeah, this is very rare, by the way, that this is happening. Super rare. There might be some symbols out there which never experienced a platinum signal, either short or long. This is how our super signals works, of course, based on auto-optimized power bundle indicators, and they come also with win rate statistics. All right, so this is for Eli Lilly. Same thing for Apple. Here, just another example. Here we had a gold signal back in August this year. Beautiful trade to the upside in Apple. A couple of bronze signals, which are by far the most frequent ones. Yeah, And of course, sometimes the signals don't work out. So this one here, for example, maybe you would have got stopped out because prices went down first before they went up again. But oftentimes, especially if you wait for the highest degree of confluence, these can be very powerful indicators. And this is possible because they look for confluence between auto-optimizing indicators, or 3 power bundle indicators. All right, now, I hope you're still there out there, because there's one last piece. I promise you that's the last missing piece. One missing piece is still there, and I need to talk about it. And this is how I found my trade of today. So this last missing piece is basically answering the question, which symbols currently, right now, this moment, have signals? And of course, also, we should answer the question, if you have multiple signals or multiple symbols which have signals, which of those signals are the most likely one to result in a successful trade? So what we've done with Metastock and also with some other platforms is we have come up with what we call generation 3 scanning, which far exceeds plain old signal scanning. So we call plain old signal scanning basically a generation 1 scanning, where we just run a scan, and the scanner shows all the symbols which currently have signals. That's Gen 1. Gen 2 is basically showing you directly in the scan results, right next to the symbol, what are the predicted odds of having a successful trade. Or in other words, a way to rank your symbols by quality. Now, if you scan through 5,000 symbols, you may get like 100 hits. You need a way to filter them and to sort them and rank them. And this is possible by displaying the odds right next to your scan results. Then generation 3, this is really where everything comes together. Instead of using the same parameters for every single symbol, so for IBM, use the same parameters than for Tesla, then for Apple, and so forth, we have programmed a scanning process which optimizes the parameters on a per symbol basis. So for IBM, we use the optimal parameters for IBM, and for Tesla, the optimal ones for Tesla, and so forth and so forth. This really made a huge difference. And what I've done this morning, I have run such a generation 3 scan using the very powerful Metastock scanner, which I love. It's super fast and amazing. I ran it, and look what came up in one of my scans. This was, for example, a scan of our divergence cloud indicator. I scanned through the S&P 500, and I got a long entry signal. You can see this here, Ventas Inc. I got this long entry signal for Ventas Inc. with a projected win rate of 82%. You can see I actually sorted those win rates, 82, 80, 77, 74. This was the winner. Okay, oh, that looks interesting. Okay, so I took that symbol and I remembered it, but then I also looked at another scan, this one here. I'll show you this in a second live. I looked at this one here, our super signal scan. And what's coming up here as well? Ventas Inc. And Ventas Inc. happened to have a gold entry signal as well, in addition to the divergence cloud entry signal to the long side. Wow, isn't that amazing? So this is what I scanned. Let me just drag this in real quick. This was the scan I ran. Just 1 second here for super signals, and the whole scan for all our indicators only took 44 minutes. It was quite dated on my small lab, but took a little bit of time. But we can see here that Ventas Inc. is the only one that currently has a gold entry signal in the all of S&P 500, along with a great win rate of divergence cloud. So if we now go back to the price chart, we go to VTR to just 1 second, to Ventas Inc. We can see, yes, there it is, a gold entry signal. So this was my motivation of why I recommended this trade idea as something to consider, at least for a potential long trade. Why? First off, it has a great win rate on divergence cloud and all the other symbols. It has confluence, and it has this very rare gold entry signal. If you look at the past here, at the past signals, you can see the super signals actually have been working out quite nicely. Here, a silver signal, which worked out nicely. Here, bronze, the short, long bronze. And if you go back a little bit further, let me just see if I can find something else. Now, here, another silver signal down here. Let me just a bit more. Here, a nice gold signal going, which triggered a nice bearish move, and so forth and so forth. And this base of this reasoning, I recommend, or I came up with this trade idea, long entry. These numbers here are incorrect. Not sure what I was thinking. Of Ventas Inc., a company in the S&P 500 in the real estate space. All right, because of this gold signal, the fact that we have great win statistics, and our power bundle indicators as well, especially Divergence Cloud, has a nice long entry signal here as well. All right, now let me mention or answer some questions here. So if you're wondering, who are these indicators for me? I should answer this. Is this set of indicators something I should consider? Well, let me tell you one thing. It doesn't really matter whether you are a day trader, a scalper, a swing trader, or an investor. You can use these indicators because they will work on all time frames and all chart types, period. So it doesn't matter what you trade. If you trade stocks or FX or futures or cryptos or perhaps options, these indicators will work on all symbols and all asset classes. And perhaps most importantly, if you're a bit of an engineer like me who believes that good tools can make my life easier and good trading tools can make your trading life easier, then these indicators are definitely for you because they will do all the heavy lifting for you. They will auto optimize based on this symbol and time frame at hand. So you don't have to worry about parameters and finding the best ones, which is tedious. The indicator will do it for you. And they will display the win rate statistics directly on your price chart. And with MetaStock, you can scan for signals, which is extremely powerful and a huge time saver. Even though the scan this morning ran for 44 minutes, well, you don't have to stare at the scan for 44 minutes. You can go for a cup of coffee, you can write some emails or do whatever you want. Then you come back after a couple of minutes and look at the results, then check out the charts. A huge time saver. This is what I've done this morning to come up with my trade of the day. Now, to celebrate, I believe this was my 10th appearance of MetaStock, and to, of course, reward you that you guys took time of your busy lives to listen to me speak. We have decided to put a special bundle offer together, which will include everything I've shown to you today and even a bit more. So this special bundle offer includes our Power Bundle 360 with the 3 auto-optimizing indicators, 1, 2, 3 strike, Divergence Cloud, and Volatility Crusher. It will also come with super signals, the basis on which I found our trade of today. We include this one as well. And we will include also our Super Trend Bullseye indicator, the auto-optimizing Super Trend indicator. This alone would be a value of 2,788. All equipped, of course, with auto optimization and performance statistics. And on top of this, we're also going to include yet another indicator, Trend Radar, which is a very handy indicator for figuring out what the current market conditions are. I'm going to get to this in just a second. We decided to offer this, or we typically offer this bundle for a special price of $1,997, and this would be for life. But today, we're going to make a huge exception for this. We will offer this entire package, because the webinar mega special, for just $997. We're going to take $1,000 off. And if you want to take advantage, and Jeffrey, please put this link into the chat, simply go to tradingindicators.com/mega. Mega like for this mega special offer. We get all these indicators which I just mentioned and the bonus offer for just $997 for life. You will never have to pay a single penny again. Just real quick, what is this bonus offer? It's our Trend Radar indicator. It's an indicator which is displayed underneath your price chart, allowing you to identify what are the current market conditions. If you just want to quickly go back to MetaStock here, just a second. If you look at Ventures, do I have it open here? It's not applied. It doesn't matter. This indicator basically shows you what are the current market conditions. Are we rather bearish right now or bullish? And even if we are bullish, are we currently a bit extended when everything is green, for example, here? Or perhaps are we in some sort of pullback scenario on a bullish trend, which pulled back a little bit? And there's different degrees of pullbacks. This one, for example, would be a level 4 pullback, meaning a deeper pullback within an uptrend. So the indicator will show you all this, and most importantly, you can scan for these things as well using the MetaStock scanner. So we're going to include this indicator in our special as well. So once again, the webinar mega special for $997 only today for this conference. And if you want to take advantage of this, it's tradingindicators.com/mega. And one more thing I'd like to mention, of course, if you decide to come on board, you will get full access to all our resources. You get a direct line to me. You will be invited to our member sessions, which we offer several times a week. Our last one was just on Tuesday. We have another scanning session on Saturday. We have live trading workshops throughout the week. So you've got you covered. And we also have boot camps, master classes, and so forth. So it would be nice to have you all on board. So tradingindicators.com/mega for this offer. And now I think we have some time for questions. Jeffrey, are there any questions? I wasn't able to read through them yet, but if there are, I'll be happy to answer some.
Let's see. Yeah, we'll start at the top. Derek says, "Go Daniel." That was very first.
Derek is a trusted client of us from, I believe, Toronto. Derek, can you confirm this? Yeah.
Kenneth wants to know, do you take into consideration the quality of the stocks, or does your methodology apply to any stocks? For example, do you filter stocks with something like ranks or other accounting that looks at fundamentals, et cetera, et cetera, et cetera?
I mean, of course you should. Yeah, once you see a signal, it's good to do a bit of due diligence to, I mean, for various reasons. Maybe if you're an ethical trader, but don't invest into, weapons stocks or whatever. That could be one of your considerations. Maybe you want to look at the market cap. Is the stock dividend paying? Is there an options chain? Is it optionable? All these things could play a factor as well. But these come in afterwards, because the first step is what stock right now, or which stock right now has an interesting technical setup, which you may want to consider. Once you have it, there might be only a handful, then of course do a bit of due diligence to make that final trading decision.
All right. Adrian says 1, 2, 3 works well in a trending market, but does it work well in a range-bound market as well?
It will not work as well. But you know what the beauty about this is? The statistics will tell you, and that's where it all comes together. Because you're not forced to follow the signals, and the indicator will tell you, hey, right now with these market conditions that we have right now, I am the indicator. I am not working as well. What would you do as a trader? You would simply stay away.
All right, and then he also wanted to know if Ventus was a U.S. company, and so I looked that up. And yes, they're a U.S.-based company based in Chicago, Illinois. Hector wants to know if this will work on Forex.
Oh yes, yeah. There's no restriction, so any asset class will work. FX, futures, ETFs, stocks, cryptos, even. Yeah.
All right. I've put the link. That's the end of the questions. Anything? Do you think there's anything that we didn't answer that people might have a question about?
Maybe not, but just one more time from my end. Yeah, if you come on board, it would be great to have you. And if there are any questions, you can always also reach out to us via our homepage, tradingindicators.com. Click on support and contact, put your question into the contact form. It will come straight to my inbox, and I'll get back to everyone personally.
Ram wants to see the scanning feature. I don't know that you're prepared to show the scanner, but it's very, very easy to run. We've been talking about it. There you go.
It's super easy to do. I cannot go through all the steps, but we do have a boot camp which shows you exactly what you need to do to run the scan. It's super simple. Yeah, this is just a few steps, and with Metastock especially. Jeffrey, you know that I say this all the time. I love the scanner of Metastock.
Yeah. Awesome. I've put it on our website. You've said it so much, and I appreciate that for sure. Ram wants to know, does this work only on Metastock? I know there's quite a number of platforms that you support.
Yeah, of course, we recommend Metastock, especially for its scanning capability, but we also have it for all the other major platforms like TradingView and so forth.
Okay. And then Hector asked for a phone number. You can call us, 800-882-3040, if you have any questions. Daniel, thank you very much.
Great.
Appreciate
well, thanks, guys. Have a great conference.
A sun on your trip.
Oh, what? Say it again. If I got a 10?
You look like you got a little bit of sun, while you're gone.
I was actually not really. I think my face is just red naturally. I was in Germany and it was gray. Yeah, but I'm heading out to Melbourne in a couple of days. Hopefully, we'll catch some sun.
I'm just getting pale because it's winter. Kenneth wants to know, do you have a 30-day money back guarantee? Yes. Frank says, Daniel, this offer is a steal. Thank you. The heck, it's been a very popular offer too. Daniel, thanks for offering it. Appreciate it.
Great. Thanks. And Jeffrey, now I should just close down the entire webinar?
I don't. or I could just eject you. Thanks for coming, Daniel.
Yeah, maybe do that. Okay, thank you. Bye, guys. Cheers.
See ya. All right. Go ahead and do that. And it has. Yes, we do back that with a money back guarantee. I'm going to go ahead and make me, let me make me the presenter real quick so I can show my screen. This has been a very, very popular offer. I'm not sure we're going to bring it back next year, but it's been extremely popular. We'll back it with a 30-day money back guarantee. If you don't like it, you can get a refund on it. You can do that at tradingindicators.com/mega. You can also call us 800-882-3040. I've got the links in the chat, or metastock.com/saleschat. As always, Daniel, great job, and appreciate it. As we move on to the next presenter, I want to thank tradersforum.com, another one of our sponsors. The tradersforum.com is a place that we're putting together where people can come. They can talk about the trades that they're doing. They can talk about indicators. They can learn things. There's a lot of different information that's available. Indicators. We're working on a class where we're talking about options. We did cancel them a few weeks ago. That's just a lot of fun that we do up there. We'll have experts who will come in and they'll talk, and we'll kind of do like little podcast type formatted sessions. It's been a lot of fun, and I've learned a lot of stuff while I've actually been doing it. So you can come up and you can join for free. TheTradersForum.com. We'd love to see you there. And it's a great site, and it's worth every dollar. So actually, I think it's worth a lot more than that. There are a lot of good traders that are up there talking about their ideas all the time. And just come join, come hang out with us. In terms of Metastock has all of the offers, including the Daniel Sinnig bundle, can actually be picked up at the metastock.com/conf promo. If you have any questions, if you want us to pull your charts, if you just want to say hi, if you're not clear about something, or just want to, we've been doing pretty good at answering all the questions, but if there's anything that you need from us, give us a call, 800-882-3040, or chat online with us at metastock.com/saleschat. So our next guest, this might be a little bit of an interesting transition because I'm told that she can't hear us, but that her audio is working. So I was just talking to Martha.
Jeff?
Hello, can you hear us?
I can hear you.
Woo, okay.
Yeah,
we
so
did all that work on working out hand signals, and we don't need them. That's awesome.
No, we don't need them. It's working now.
Okay, I'm
All
going
right.
to introduce you though officially. Okay, yeah. I'm going to introduce you officially then.
Okay.
Martha, I've been to the TechnoTrader compound, which is what I named it when I was down there. It's beautiful. It's up in kind of Seattle area, and they have a full studio up there. While I was up there, she made salmon, which is the best salmon I've ever had. And in addition to all of those skills, she's been teaching people how to trade for a number of years. They have, she runs technotrader.com, which is a BBB accredited business that has an A+ rating, and it is one of the market experts when it comes to dark pools and that kind of stuff. So that's how I'm going to introduce you, Martha. I'm glad you can hear me.
Well,
I'm going to make you the presenter right now.
Okay.
And I'm going to still give you a thumbs up because we spent a lot of time working out those hand signals.
Okay.
I can see you. I mean, I can see your screen. I can hear you very well. And here's your thumbs up. I'm going to get out of the way.
Okay. All righty. Hi, everyone. We're going to talk about something very, very important, trading flash crashes and market reversals, which are sudden with dark pool support. Dark pool support started in 2018 when the dark pools realized that ETFs could be sold like that and it could cause a market crash. And how do they handle that? So as Jeff Gibby has said before, we're an educational company only. We don't recommend stocks. I'm not a financial advisor. I'm not, none of those things. These are my credentials: chartered market technician, long-term member of the CMT Association, and approved with its SEC Series 86 for teaching and technical analysis. I'm the CEO and co-founder of TechnoTrader with Howard Johnson. I've been teaching for over 26 years. This is in my retirement. This is my legacy. There's no money in education. So you have to love what you're doing. And I'm sure everybody that's presenting today has a passion for it, but this is my legacy, to leave something behind. All my peers are going, are you crazy? They can't learn. I'm going, yes, they can. Yes, they can. I know they can. So I have authored the cycle evolution theory, how to identify evolutionary cycle deviations, which is part of what we are going to learn today. And the relational technical analysis was presented to the CMT, and it's a full body of work that they have improved. And one student has said, Martha, I'm going to tell them they have to add your relational technical analysis to their CMT base. So maybe that'll happen. So what is a flash crash? A flash crash is a sudden collapse of the stock market values and or other financial markets. Flash crashes are often systemic, spreading from one financial market to another. The values of the indexes free fall anywhere from a meager 5% to 22% based on historical data that I have reviewed extensively, because I'm actually writing a whole course on this thing. So it can be even deeper in some of them. The most recent one was April of 2025. We had a flash crash. And I'll show how that works. The oldest recorded in the modern automated market was 1987 and 1989 during the savings and loan debacle and all of that. Flash crashes are not the beginning of a bear market. Flash crashes occur only in bull markets that are in early growth with new technologies. The cause of a flash crash is not panic selling. It is due to automated new technology used within one of the 12 financial markets and frequently spreads rapidly throughout the entire financial market system. We have the largest of everything. I'll go over that in a minute. Bear markets do not have flash crashes. Why? Bear markets occur after a long-term bull market of 8 to 15 years. The bear starts when the new technologies that fueled the bull market reach market saturation phase of the product or service cycle. So the huge flurry of new buyers and new consumers and new businesses using the new technologies fuels the great bull market, which we are in. And that is, it reaches a market saturation where it will slow down. They'll always be able to sell their products and services, but not at that accelerated pace. Sales and revenues start to decline, and then later earnings will decline ahead of the bear market. Now, what happens is the CFOs will move expenses to the balance sheet as assets that are depreciated, because they want to keep earnings looking good, because everybody looks at earnings, and you should be looking at revenues, because you can tell ahead of time. Bears start with dark bull buy-side institutions slowly rotating out of stocks in the aging technology companies. They move the money to the next generation of new technologies. This is really good information, right? Yeah. It is exceedingly rare that a big blue chip technology company can reinvent quickly enough to avert the market saturation to market decline phase of the corporation's normal business cycle. Apple did it. iPad, iPod, iPhone, iTablet. I mean, just brilliant as Steve Jobs. He was just amazing. Bears tend to last an average of 1 to 3 years. The shortest was 2020. It was 3 months. Here's the SPY, and here's the flash crash that we just had in April. Yes, the market was starting to do a little correction because it got overzealous with some of the speculation that was going on. Then we had a rundown, and it's a shock and awe. It's like, what happened? It's a deer in the headlights. Suddenly, there's a void of buyers. And then you see the dark bulls going, this is not going to happen. We're going to support this market. We're going to push it right back up. And then another day, oh, we're going to sell on the bounce. And then the dark bulls push it back up again. And then it goes right back up to where it was relatively quickly, depending on how deep and how severe it was. And of course, the SPY is keeping on going, chugging up, because everybody loves the SPY. Yeah, let's invest in America. Apple had that flash crash. And here it is. It was sort of trending down, but it was just a mild correction. There was nothing serious. And it too had that dark pool pushing price up. This is the only time you're going to see dark pools have long white candles. They're usually really small, tight candles with a trading range thing that's going on. I've mentioned before many, many times. And it returned to its original source. UNH is not a flash crash. It is the death of a CEO by murder. And it gapped down on that shock, but it has been failing for some time. It has been going over a long-term bear market and a cycle. It ran down. Yes, it reacted to it, but there is no continuation of a move up. This is not a flash crash. This is a company in deep hurt, and it is going to go down further because it has to reinvent. It's got all kinds of problems with the healthcare in the U.S. is a train wreck. Everybody knows that. And so the distinction difference is it's an immediate recovery versus not an immediate recovery. So they're not the same thing. So I really want you to study that. Flash crash, suddenly recovered, collapse because of conditions within the market, not going to recover very well. So new technology in the stock market impact. All flash crashes in the past were caused by new technology that was either an accidental mistake, a flawed strategy, or in entering the correct type of order type for the market conditions at that time. On May 6, 2010, flash crash was caused by a fundamental trader. He's a fundamental trader. He's a buy-side institution or a small asset management company, and who accidentally hit the volume weighted at price new order type we had back then, rather than the time weighted at average price order to slowly sell off a large quantity of E-minis because the market was slightly stressed. Well, volume weighted at price is the most dangerous order type they ever created, and small funds use it all the time. It's like, are you guys crazy? And it was just like Zoom. I was sitting at my desk that day and I'm going, whoa, and it's a Monday. And it's like, whoa, we had a little trouble over the weekend, but holy cow, this is 25%, 50%, 80%. The SEC rapidly determined that it was a flash crash of magnitude, and they forced all the brokers to turn back most of the orders except for a very few. This created a rapidly spreading, accelerating orders to sell E-minis. This forced the sale of many Dow components, almost every one of them. This resulted in a 25% loss or greater on the Dow components and S&P 500 components of that era. Didn't hit NASDAQ at all. Other flash crashes were caused by misuse of a new technology strategy. Are you following me here? New technology. Okay, example. The insurance policies sold in the 1987 savings and loan debacle spread systemically due to an error in that strategy. It was a new technology. Oh, let's provide insurance against your speculation of the bond market. And the savings and loan debacle was a real quick flash crash also. So new technology. The catalyst for a flash crash comes from new technologies that are used in the financial markets too soon. The new technology has not been fully tested and is flawed, as the new technologies are in their earliest stages of development. Microsoft operating system was fraught with flaws, and it was a new technology, but it didn't devastate the stock market because it was just Microsoft. It just devastated Microsoft in 1985, which is a disaster. Broadband had plenty of problems when it was introduced. Oh my gosh. So it impacted the companies that were selling broadband, but not the entire market. Early communication satellites and DHL had tons of problems. I mean, it was like, oh, what a nightmare. But it only impacted the communications industry. However, when used in the financial markets, like floor traders and everybody else, the risk increases of the new technology is flawed, even infinitesimally. So even an infinitesimal flaw can cause a flash crash. Exciting, isn't it? Strategies are used by floor traders that accelerate trading activity to the downside, which results in a flash crash, especially if the markets are in any way stressed at all. you think our markets are a little stressed right now? Yeah, I think so. Okay, all flash crashes in the past were caused by new technology. AI is a new technology that is very young, untested, has plenty of errors, problems, and can impact the financial markets exponentially due to the millisecond speed that the professionals of the market use nowadays. Millisecond transactions can fill the queues with massive quantities of orders in 1 second. We're talking about every second could potentially have 60,000 orders per second flooding into the market. A flaw in an HFT AI can suddenly gap down a stock market open hugely. This can cause a massive systemic selling that rapidly accelerates the speed of orders selling short from the sell side floor traders across many financial markets. Floor traders often use 5 to 10 leg orders to mitigate risk and systemic factors. So they're keenly aware of it. But what you have to understand is when we have a drop, especially on a Monday, it is a shock and awe, deer in the headlights. People are not running to sell their stocks. Okay, when the first flash crash happens either on a Friday or a Monday, they're not ready to start selling. They're just going, what has happened? Or maybe they come home from work and they go, huh? The market crashed. The next day, they panic sell. Okay, so it's just nobody's there. The flash crash. The flash crashes become more common and more profitable for professional traders. They know what they're doing. And why can't you enjoy some of that profit, huh? 6-figure digit every year, wouldn't that be nice? Yeah, students do it. Flash crashes are extreme conditions that are almost as quickly, vanish almost as quickly as they started. Pros know how to identify the subtle changes in the chart's trends, trend line patterns, there's trend line patterns and trends, that form before the sudden flash crash. The most recent flash crash occurred in April of this year. There were plenty of telltale signs of a risk of the flash crash before it started. The April flash crash ended as quickly as it started. Why? Because dark pool buy zone institutions support the market triggered automatically after a huge run down. The next day, a reversal began. You've got to look at the stock market differently than what you do. It's Wall Street versus Main Street. Throw that away. It's been gone for 100 years. We have odd lot investors and newbie investors and people that are in chat rooms and all this stuff. We have retail swing traders and day traders. We have small funds managers. We have HFTs, which trade the public side of the market. And we have foreign funds and sovereign funds and everybody else trading our market. So this is the retail side. And there's even more down here. We have the dark pools way down here. And they're paying attention to everything that's going on and they're seeing everything that's going on. And yes, they use AI and quantitative analysis only, not in their floor traders. They have floor traders that trade for the buy side. They have independent companies that help return on investments so they can boost their ROI, that are independent floor trading companies that a lot of people are starting, a lot of professionals are starting. You have your sell side institutions and their sell side floors. You have the buy side floor traders that manage the trusts and accounts to balance them out and everything else. Well, they can see you. You can't see them. You are blind right here. Boom. That's all you can see because that's public. This is dark pools. If somebody tells you that they have found dark pools, oh boy, we can trade the whales. Yay! So I say, well, how large are these orders? And they say, oh, 50,000, 100,000, 200,000. These are the whales. These are the dark pools. I'm going, no, you're wrong. The dark pools set an order of 10 million or 20 million, or they may buy 20 or 30 or 50 million shares lots directly from the company. You can't see that. What you see is small funds managers. That's their size lot nowadays. Okay. So what defines a flash crash? Speed. Most bear markets start out slowly with bounces and weak reversals and minor reversals, and everybody's thinking, oh, buy on the dip. Oh, buy on the dip, but it's actually a bear market, but you don't realize it because you don't know how to read flat tops and all these other tops that are forming. Flash crashes start with a void of buyers. With a lack of retail buyers, prices fall off the precipice of the inventory that's available to trade like a rock. Nothing's stopping them. Why? Because the sell short orders are way up here and the buy to covers are way down here, because the sell side institutions can see there are no buyers. And they're going, well, we're going to place those buy to covers real low. So when these people get out of the shock and awe of knowing that this market is going down, we can buy to cover up and make a ton of money. The speed at which stock prices run down is mind-boggling and shocking. And that's why in the beginning it's avoided buyers, because nobody can believe it's happening. They're just staring there like deers in the headlight. Depth and breadth. The declines are severe and sudden. The lack of buyers and the use of VWAP orders from smaller funds accelerate the rundown once they realize they're panicking and they're trying to get out. Rebound. However, once a stock collapses to a previous dark pool buy zone or far below its fundamental values, the dark pool TWAP orders are sitting there waiting and triggering. Dark pool buy zones are actually moving price upward back to their buy zone, and then they stop. Timeline. The flash crash chart starts suddenly and ends abruptly within a few days at most, sometimes longer, but it sometimes takes longer to work up further. But it is a sudden, it's fast, it's a crash, and it's deep, and it rebounds. Okay, so write those things down. How long do flash crashes last? That depends. Flash crashes are not the end of a bull market, nor are they the beginning of a bear market. Flash crashes often occur within a long-term great bull market. We have minor bulls, we have moderate bulls, and we have a great bull market. What kind of a market do we have right now? Anybody? Is it a great, moderate, or minor? We had a minor bull market between 2003 and 2007 because it wasn't really in the stock market. It was real estate that was boosting, and the market barely moved up. We had a moderate bear market between 2010 and 2018 almost into 2020, when we had cloud technology, one new technology. We have over 20 new technologies coming to market rapidly, and AI is helping all of them. So we have a great bull market underway. Instead of a minor retracement or a short-term correction, which can be either sideways trending to pattern out excessive price levels way above fundamentals, or a short-term downtrend or an intermediate-term correction. There are also intermediate-term trend corrections downward, which are not flash crashes. They're just correcting out excessive speculation. During a great bull market, there are many phases and new technologies that create a huge speculation and gambling mode, trading intermittently throughout the life of the bull market. However, the bull market always builds upon indecisive investing by retail groups. Oh, I don't know if I should invest. What? I'm scared. Oh, AI is a bubble. I should wait. Oh, I don't know. I'm scared. The average investor really doesn't get serious until the market is booming and toward the end of its cycle. Every time, never fails. Bulls expand and grow with rising prices for stocks before the economy is robust with widespread prosperity, which only occurs during a great bull market. Got that? So by the time the economy catches up to the stock market, because everybody in the stock market that's wise and savvy and educated and knows what they're doing, knows that it's a great bull market right now. So and buy-side institutions are just grabbing stuff everywhere. All these new technologies that they're getting into them at private equity markets and everything else because they see it coming. So are the corporations. Corporations are buying up all kinds of companies through the private markets. And no, you can't be in there because you don't know what you're doing yet. You can be in there later on. So there's a lot of buying going on because we're in a great bull market. And they know it's going to last for a really long time. But the real tail side thinks that we have a bubble and it's going to crash. Okay, the flash crash can occur when price and fundamentals go to extreme variables as well. Price is climbing, but the company revenues flatten dip briefly for a quarter to a few quarters, no big deal, but it sets the tone for a flash crash. If even the slightest non-event happens, then all of a sudden everybody's stopping their buying, and then there's a flash crash. Okay, do you get this? The bull is not over, but many investors believe that it is. And right now we have a huge number of people going, oh, the bull market's over, I should get out. Okay, well, we'll see you at the end of the cycle. Sell-side institutions flash crash. Sell-side institutions are short-term traders. That's the rules so far. Maybe if the bank has a long-term investment platform, it's separate from the commercial side. These are money center banks and the large financial services companies. GS is about, Goldman Sachs is about the only one that's left. The sell side rarely holds stock as inventory for any length of time. They're short-term, very aggressive. They're the best of the best. The banks go to Harvard, they go to all the big, huge, great universities, and they cherry pick the financial services graduates, preferably masters in financial services or bachelors, and then they hire them, and then they sit them at the desk and they say, you have 1 month to prove yourself. So then they come to me. The floor traders are the best in the world. Selling short is a major money maker for them. The sell side is keenly aware of what initiates the flash crash, a lack of retail groups buying, AKA a void of buyers. This is the most common cause of the first sudden long black candle on your charts. Everybody's going, what's happening? Sell side are positioned to take profits selling short and then buying to cover as panic selling begins within a day or two. Okay. Why the risk of more flash crashes is increasing this year. Structural shifts. AI order routing, buybacks, speculative algorithmic based on AI, HFT's AI algos are the main culprits. And news. News is doing a lot of that. Post-pandemic pendulum swing. The entire world trades the US markets because the US has the largest stock market, bond market, crypto market, Forex, commodities, futures, E-minis, and ETFs. We have almost 5,000 ETFs. I mean, you can do all your trading on the stock market now because you can trade cryptos, ETF, and you can trade currencies and commodities, everything else with ETFs, ETCs, ETDs, and BTCs and all those, just tons of them. Global uncertainties. It always follows a pandemic. Global political and economic catalysts, fear-based retail reactions, and news amplification of non-events that create a void of buyers from the retail groups. We're getting the drift here, right? Okay, good. Market participant group, divided sentiment and opinions. There's maybe a 40-60 or 60-40, I'm not sure, but half them small funds managers who have less than 3 billion assets under management, they're retail. They're all retail. 3 billion sounds like a lot of money. It isn't. The SEC pretty much leaves them alone because they're not doing much of anything except losing money for their customers. So about half of them are really excited about the market and half of them think it's going to crash. So that's a divided sentiment. It's not good. They used to be all in one harmony, but they're not. Global trade wars and cybersecurity of U.S. corporations for this year is a big thing with the corporations. They're all about cybersecurity and making sure that our company is safe. And those CEOs are dictators, and they could care less about anything but protecting that corporation. That is their goal. And they will. Event versus non-event flash crash triggers. An event is something that has actually happened. Examples are the collapse of the entire global banking system in 2008. That was a major event and caused a bear market. The war started by Russia against the Ukraine, that is an actual event that impacted the stock market, causing an intermediate downtrend correction of 2022. Okay, and the dark pools supported the market. So in 2022, instead of going into a bear market because they pushed to support the market, they have all this money set aside to do this, and they were pushing and propping that market up. Every time it tried to dip into bear territory, below 20% correction, they pushed it right back up. It was absolutely beautiful to watch. It's like, wow, it so works, and they know that it works. The pandemic lockdown of the world's economies was also an actual catastrophic event. This caused a bear market, one of the shortest in history, as the US government handed out stimulus checks to most Americans like candy at a fair. Not to me, because I make too much money. This created severe over-speculation, gambling, and collapse of the stimulus checks as the stimulus checks ended. It created a huge surge of buying in the financial markets by a bunch of people who had no idea what they were doing. They were using their smartphones and, oh, well, I'll buy this stock because that's what's popular on Robinhood right now. Yeah, well, yeah, I'll buy that stock. No idea what they're buying. Non-events. For some reason, non-events have just as much impact on how the highly emotional retail groups and smaller funds groups react as an event, as a real event, as if it's really there. Whether this is simply the assumption that the news has stated facts and real events, or if it is more subtle with the sense of being able to predict the future by some retail guru, is unknown. I'm still working on that. I will work on it till I figure it out. The fact is that many retail traders and investors and small funds managers overreact to a non-event as if it was a real event that actually happened. That's what happened in April. It wasn't a real event. It was a threat of a real event. This creates a sudden flash crash that ends abruptly also. These flash crashes are not based in any real event, and thus the stocks quickly recover and resume the end of that was in place, and resume the trend that was in place at the end of the before the flash crash started. So, systemic factors. We have systemic factors. The buy-side institutions are keenly aware of the systemic factors, even a brief flash crash. They hold the fiduciary responsibilities for the huge American middle class retirement funds. They take their fiduciary responsibilities very seriously because that's how they make their money. And so they are protecting the middle class of America, the largest in the world, with a much smaller population than other countries. Therefore, the buy-side institutions are in a silent war against the sell-side institutions. Sell-side institutions who prefer selling short due to its extremely high revenues and ease of trading against the retail groups and smaller funds who do not know how to negotiate a flash crash. As the flash crash creates a huge dark hole in which stock prices are falling, the sell side is keenly aware of where the buy side fundamental support of the market TWAPs are because they can see them. You can't. Sell side halts selling short of that level. And you will see that in charts. You will see that, oh, that selling short ends right there above where the buy side comes in. The next day it gaps down a little and they come in. So yeah, they said, the sellers here, they said this is NVIDIA. It didn't really experience much of a flash crash, but it did have a little bit of one. And it came down the sell side, said, oops, well, we better buy to cover because we see the buy zone is right in here. This was a big, huge buy zone, and we better be out of here fast. And of course, then it recovers and moves on up, and it's looking great. It's looking just fine. Hasn't reported its earnings yet, but it may have a negative, but it's not because of anything it did. It's because of people being scared of technology right now. This is the weekly chart, and it shows how NVIDIA is really was not impacted by the flash crash much at all. And it was in an intermediate term correction because it was overvalued. It returned to its fundamental level, and once it returned to its fundamental level, which was right in here, then it started improving the fundamentals and kept on moving up, moved sideways, moved up, had a bigger sideways action here, but there is still some dark pool accumulation in here, and then moved up and is having another sideways pattern. Very healthy chart, very healthy chart. HFT AI technology and algorithms. HFT AI technology is still very primitive. Please accept this reality. Basically, HFT AI goes out and searches around the internet of traders' chat rooms, social media, retail traders, discussions, and any open trading forum to determine what stocks you and all your buddies and friends are going to trade that day. They also take a look at the brokers who are required by law to light their orders before they send it off to the payment for order flow market makers who give them money to take your orders and fill your orders as the market opens. Yeah, really cool. HFT AI gathers all the financial website news, gathers all the political and other news it has been taught to monitor. It doesn't always understand what it's reading. Sometimes I don't understand what I'm reading, especially nowadays. That's the joke, okay? What HFTI can't do is know that what the dark pools are doing, nor can it determine what the sell side institutions and all of the four levels of professional floor traders, independents, companies, and so on are doing, because they are in the dark pools. The sell side isn't visible to the HFT AI. Professionals aren't visible to the HFT AI and by dark pools. And these groups account for 80% of all the market activity. Yeah. Okay, so AI can do a big boo-boo. Plus, advertisers who are promoting whatever and can say, oh, the market's going to crash. Oh, we have a .ai. It's all going to go away. And of course, AI says, oh, well, we should cap down. HFT AI makes a lot of mistakes. It's stupid all the time. It forgets constantly. It gets confused. These mistakes can cause a stock to fall in price for no viable reason. If it does, it will have a flash crash. HFT's AI have triggered a flash crash for many individual stocks, especially during earnings season, because it hears something, it sees something, and so it creates a negative. HFTs have had to modify it, and they're going, we need to use our AI more on the upside than the downside in this earnings season, because frankly, corporations are doing pretty darn good. And yes, they are, because CEOs are dictators, and the only thing they care about, they don't care about their employees. They only care about making money, keeping the corporation going, pleasing the buy-side institutions. That's what they care about. How to prepare for and trade a flash crash. Okay, now that you understand what creates the opportunity for a flash crash, the next question is, how can you trade it with the extremely high profit potential, but also with the sudden reversals you will need to learn? Relational technical analysis, which is the professional and semi-professional advanced analysis that goes beyond technical analysis, you have learned. Everything you learned is great. Every presenter here today is fantastic. But if you want to take it to the next level, if you feel like you want to be a semi-professional and you want to make the money that the professionals make, and it's a lot, then you need to step beyond this. Raise your expectations. Raise your expectations. The inner market structure and its dynamics. Who is controlling price in the flash crash and why? Market condition analysis. Checking futures ahead of the market open is not enough analysis for pertinent, reliable data sets. It just isn't. One reason I wrote my market condition reports is that I had a floor and Howard was managing it, and I was going, I need something more for my traders because futures just aren't reliable. So and I'll show you this in a little bit. Trading style specific scans and sorts for your trading style. A lot of you are swing trading. I'm so happy about that. I've been promoting swing trading in many areas because I want people to stop day trading. It's a disaster. Hybrid leading indicators that identify dark pool activity and pro trader activity. These are more advanced, they're more complicated, they take more training to use. It's not a moving average crossover, because moving average crossovers with price, if they're based on price, you have to wait for price to move. And you should be using volume indicators as well, and you're not using enough of them. trading as a business so that you can have all the perks of professional traders have. Why not trade as a business? I mean, there's a lot more money in it, and you can write off your MetaStock charting software. You can write off all your education. If you go somewhere to study something about the markets, you can write off all your expenses to your business thing, any of that. Identifying individual stocks risks of a flash crash versus index flash crashes or industry flash crashes. So you have flash crashes for individual stocks based on earnings or news or a CEO or whatever. Who cares? Then we have flash crashes of the indexes, which is a response for a void of buyers in the individual stocks within that community. A lot of people just buy Dow stocks or just buy NASDAQ stocks. And so when it goes down hugely. And then we have industry flash crashes. An industry can have a flash crash. So majority of the companies in that industry will have a flash crash. Using controlled bracketed orders and trailing profit stops to mitigate risk. I'll talk about those in a little bit. So MetaStock's an amazing charting program, and it has so much flexibility, and I just love it. So MetaStock's a great partner with me and has been with me for many, many, many years, and TechniTrader, and we're just gaga over it. So I have 7 different market condition analysis scans I developed way long ago. And so I say, give me all the stocks that moved with momentum to the buy side. Give me all the stocks that moved with momentum to the downside. Then I compare the two, and I can say the bias of the market for the next trading day, because that's what matters. This is after market closes. For the next trading day is going to be up or down or neutral. And this gives my students the guidance they need to know, okay, I better start looking for sell shorts. Okay, I better start looking for bottoms or swing trades opportunities, because the bias is very strong. It's pretty accurate. Then I say, give me all the stocks that are being accumulated by dark pools. I can figure out what industries they're in, and the HFTs are chasing them or not. Are pro traders nudges in that? All that is information that keeps me going. Right now, in the middle of an earnings season, toward the end, they're still accumulating. They're still buying private equity. What does this tell you? Okay, so then I say, give me all the stocks that are bottoming. Bottoming stocks are created by dark pool buy zones. That's the only way they're created. There's no other way. So just pay attention to the bottoming markets. There's basing bottoms, there's flat bottoms, there's rounding bottoms, there's V bottoms, W bottoms, there's all kinds of bottoms that develop that I've studied. And a lot of times you'll see kind of a mini flash crash in some of those bottoms because the stock price went below and Parker Dunning's. So then we say, okay, give me all the stocks that are in consolidations. Tight price formation is pro traders. They use the penny spreads, so their price structure is very tiny. Then I say, give me all the stocks that are turning in a range or heading down. This gives me an information about whether this market has some topping stocks, trading range stocks, so on and so forth, and how big that is becoming. Then I ask for how many stocks improved with price gains over from this price level on this date to this price level on this date. And it tells me how many stocks are moving with momentum or how many stocks are actually having improvement, even if the gains are small. And so this tells me, and then I write this all out in the market condition report at the end of the day, in the evening, between, it's usually around 10 o'clock. And then I embed that into my morning market report so that my students have access to that. And then I give the morning market report. Here are the futures. This is what they're doing, what overseas doing, blah, blah, blah. These are very important. Then I have scans that I've created and my staff has created to provide a list of those to which you can check and see what you want. Market condition analysis is who's in control of price. We have 12 different market participant groups. Who is controlling right now? What technical patterns are prevalent and reliable? It changes with who is in control. How price will behave at resistance or support levels. What trading styles work best? Which indicators to use and or modify. The inherent risk of trading specific styles. What trend line patterns are common? Trend line patterns, not trends. What entry and exit signals are most reliable? You need to use candlesticks, candlesticks, candlesticks. The strength of the price and volume patterns. You're not using enough volume indicators, really, truly. Market condition analysis tells you how and when to trade, who's controlling price, what to expect in the near-term price action, which is for swing trading, where to find excellent picks, how to enter and when to exit. Market condition analysis is a roadmap of which market participants are actively trading, which are sidelined or waiting for improvement, and where we are in the overall long-term, intermediate-term, and short-term trends. This provides the relational analysis needed to navigate the complex marketplace of today. Review of trading tools and resources. You need to treat your trading as a small business because it will save you enormous amounts of taxes. Professional trading journal. You have to have a professional trading journal. I provide one that is mine that I designed years ago. This provides the evidence of your activity as trading as a business and also historical data you can review. Trade management planner. Howard created this one, and I was just stunned when I saw it. I said, wow, you get to plan your whole month. It tells you how many trades you need, how much capital you need, or how much capital you have available to trade. You plug in, it says this is the number of trades, this is the price range, this is the risk assessment. It's amazing. And I'll show you how you can learn more about it in a little bit. Trade calculators and tools for streamlining accuracy. The most common mistake that traders make is math. And Howard created those. Scan, source, layouts, and parameters are mine and my staff. We continue to update and improve on those all the time. And they come with the Metastock download that we have for Metastock trading software. It's trading simulator. You must use a simulator, not a game simulator. You just have to. Market condition analysis scans. Very important. I just explained those. Control bracketed order types designed to eliminate poor order fills. I like to give this little story real quick. Howard Johnson was on the phone when I came back. I swing trade. I love that. That's my favorite. And I was out ice skating. I came back, or in early days, even before we were teaching. And he was laughing and talking. And I said, who are you talking to? New York Stock Exchange market maker. And my mouth drops to the floor because nobody talks to New York Stock market makers in those days. Nobody. They're billionaires and they're very wealthy and they don't talk to anybody. So I said, what's going on? And he finally hung up and he says, the market maker loved my control bracketed order. He wants to use it on his floor. And I'm going, well, of course he does. And he says, yeah, isn't that amazing? I said he could. So this special order type that we use that is amazing and still works today in these markets is still being used by the professional side. You should have it. Broker accounts that are designed for trading as a business, not fun and games. Morning market reports and market condition reports that I write every day. We also have the Daily Market Educator, which is a subscription. We have discussions groups, communities within the Market Technitraders student online campus. The big difference between our campus and everybody else, it is private. Nobody can see what we're talking about. And you get to talk to professionals. Trading as a semi-professional trader is important. When you have the status of semi-professional trader, the professionals of the market respect you. You have more opportunities and you are capable of trading flash crashes as you have the education and knowledge and experience to do so. This elevates you to the level most independent professional traders who trade at home. Trading as a business rather than as a hobby trader provides you with the benefits of a professional trader in terms of tax deductions, higher income, less stress, fewer hours of trading, and independent lifestyle before and after you retire is something you really need to consider. Are you at 6 digits now with your trading? Why not? You should be. Many Technitrader students enjoy that. We've had great success with this, so consider it. Let's summarize the difference. You are learning from professionals of the market, and your student body has many professionals within the private Technitrader student campus, so you get to hear them. We have been in business for over 26 years and are widely respected as the leaders in training professionals and semi-professionals. I'm not for everybody, okay? We continually update and improve the quality of our education based on continuing changes to the new technologies. We keep our students up to date with the new trading instruments, changes to the internal market structure, and how professionals trade the market. I'm constantly writing reports and things for my students. Technitrader has the most extensive support, guidance, mentoring coaching, and vast library of help files that is massive. I mean, it is huge. And we have the largest library of courses to meet students' specific goals in their career. A lot of students just need one course. Then there's other students who want more to specialize in a certain indicator or a certain area or become a professional and so on. We teach how to trade as a business under the tax rules that gives you a semi-professional status. This is a huge deal. If you're a semi-professional trader, the professional traders respect you. If you're a hobby trader, they can't be bothered with you. So don't ask them for help. Of all the courses, all of our courses are self-paced, so you can study and learn when it is the most convenient for you. TechniTrader is the gold standard in stock market education. So this is our brand new website that you can come and visit. And it's really exciting. So this is kind of what you'll see as you get on the homepage. Sometimes we change it up. I invite you to take one of our mini courses. This gives you the idea of how I teach and what we teach and how we support and everything else. So it's a mini course. And yes, you have to register for it, but we're not going to harass you. Either you will say, this is the company that I want to work with, this is the people I want to work with, or you're not. It's very straightforward. Yes, so we don't have to harass you. We're not going to send you tons of emails and call. We don't do that. So for beginners, you start with the introduction to beginning, and I mean beginners, people that are brand new. If you've been trading for a while and you really want to improve your trading, then look at the trading plan, because even that, just taking that free course is going to give you an insight that's going to help your trading, even if you never become a student. If you're really into it and you really want to become a semi-professional, professional trader, then look at relational technical analysis. It's for my advanced students who've been trading. Sometimes I have people that have been trading or investing for 30 years, and they go, Martha, I wished I'd come a long time ago. I looked at you years ago, but gosh darn, it's like, how much are you worth an hour? $40, $60, $100, $500? Because if you added up all the hours that you're doing trying to figure this out, because you can take this course within a few months, you're ready to go. And it pays for itself very quickly. So we have a 24 hours to claim your free gift. And this is how to trade stocks into the year end with confidence. Yay. And this is really good. This is something that we usually charge for. So you have a free 1 hour training session. You have 7 days to review it and look it over. Jeff, if you can put that in your little answer box, that would be great.
Done.
And if you have your phone, you can just hold it up and get your little thing and get right to it. And this is what we have. And it's our special for today. We also gave away one flash crash, I guess, this week course that we have going on right now. So we have that new student that won that award from Metastock, gave that out. So that's great. I will answer any questions that you have at this time. Hopefully Jeff will ask me and I will answer.
We have a bunch of them. So let's go. Let's see. I can start at the very top. Michael in GoToWebinar says, if dark pools reach such havoc on markets, why are they allowed to exist? Why do regulators let them exist?
Dark pools stabilize the market and keep it secure. They don't cause radical things. HFTs can destabilize the markets, but they're maker takers. Their goal is to make the market on the public exchanges, because the public exchanges are often illiquid. They have been approved by the SEC, and yes, the SEC monitors them and slaps them with fines if they don't. Right now, they are being very, very careful. But the AI is a new technology, and as you learn, new technologies are being used rapidly. There are a lot of entities, the government and other things that are going, let's push all this new AI and get this going. And I'm going, wait a minute, and hold on. And FINRA is running around. It's another regulatory thing, fining people like crazy because they're rushing into it because they're being encouraged to.
Cool.
And we need to slow it down because it isn't fully things, but you're dealing with a government who wants AI to be in the financial markets, and it's encouraging its use in the financial markets. Dark pool doesn't like it at all. Sell side is going, yay! They're the banks. They love risk. And the HFTs are the maker takers. So they make liquidity and they take liquidity and they balance it out. And if we didn't have them, then it would be even more severe.
Autumn wants to know how often flash crashes happen. Is it something that occurs daily or is it rare?
It's infrequent, But when it does happen, you want to be ready because there's some big chunks of change. And I think that it's going to occur more often. It's occurring often in this earnings season. And we have the end of the earnings season coming. And all the latecomers to the earnings season, not this week, but next week and the weeks after into December, are the ones that have weaker earnings. So I expect to see some individual stock flash crashes way below their fundamental values, just going crazy. And I expect to see some of that this time around, yeah.
Michael says Schwab has dedicated machines to monitor dark pools. That doesn't surprise me much.
They say Schwab would not be allowed into the dark pool area. I can check on it for you. But they're a retail broker, and the dark pools do not allow retail brokers into that area. So what they're saying, they're probably saying they pick up on the stuff where it's a 50,000, 100,000, 200,000 share lot, and that they can track that. That's what they're saying.
All right. Ram wanted to know, can market condition analysis be used to select and manage short positions?
Manage what positions?
Short positions.
Selling short? Yes. Yeah, it does define, and it shifts. My two sell side scans, when they both are high, I can say, okay, we're going to have a shift descent and it's going to go down. And it will be it will start either as a slow correction or an intermediate correction short term. And then if something happens in the HFT arena or the news items, there's the advertisements on the internet, financial websites for the retail. It's just like, can we manage this or not? No, we can't manage it. They have free license because it is, we have freedom of speech, which means we can lie. So yeah, the market condition scans do define that we have a risk of a downtrend or a short-term correction or whatever. Yeah.
Cool. Theodore, this is an interesting question to me because I know you have a good number of Canadian investors. He wants to know how much of this education and business structure is applicable to Canada and Canadian.
I love my Canadian students. My favorite city in the whole world is Victoria, British Columbia. And I also really love Nova Scotia and all of those. And I just love Canada. And Canada, they are so gracious and they are such a great people, amazingly great people. And I just love talking to them and everything. Yes, my Canadian students can do everything all the way through trading as a business and everything. You just have to follow your provincial rules is all you have to do. But yeah, we have Canadian stocks that are traded on the US exchange. Yeah. So.
Bob says, I'm a student and I'm up over 350K this year. Now I want to say that we haven't verified that number. That's just something he put in chat. That's legal. But he says, thank you.
Okay. Yeah. My students are having a banner year, so they're all very happy cammers, and it's really interesting because it's been a tough year, and I had to do a lot of explaining of a lot of different things. The corporations are fine because the corporations are global. So they're supposed to have everything manufactured here. They're just kind of like, yeah, right. Oh, well, if you import something, they go, well, we don't have to import. We're over here. And we're in all these other nations, and they're all over the place, and they all have their own manufacturing plants and facilities and offices and everything. I gave out a list of CEOs the other day to the students, all of them saying, no, tariffs aren't bothering us at all. We don't even care. It's small businesses that it's slam dunking really bad. Yeah, it's the small businesses.
Here's the last question for you, Martha. This is also from Bob. He says, today we're down 2.5%. Is this the start of a flash crash?
I'd have to look at the chart and I don't have it up. I can answer you if you email me or you connect with me or sign up and ask the question and I will give you the answer.
There you go. I have put both in YouTube and in GoToWebinar the links to get the free courses. If you want to get fancy about it, you can scan that QR code right there too. So big thank you, Martha. That was great. I appreciate you.
Thanks. Bye.
Bye. Okay, very cool. Always good to have.
How do I get out of here without
I'm just missing you.
Okay, great. Thank you. Bye-bye. Thanks, everyone.
All right, let me go ahead and do this. Make me the presenter real quick. I'll show my screen. We'll turn this on. Okay. Greg likes to tease me that I I do that a lot, where I kind of talk as I go through the activities of what I need to do, but it helps me make sure I don't miss anything important. So as we kind of move on to the next speaker, I want to say thank you to our sponsor again, AAII. AAII is a great, well-respected, very reputable organization. They've been a nonprofit. They've been helping investors since the 1970s. They do investment research. They do long-term fundamental analysis. They do short-term trading analysis. They do sentiment surveys, all kinds of good stuff that's available for you for a fairly low cost. And you can find out more about the services that they offer at aai.com. So all of the specials that we're talking about related to Metastock, the add-ons, the extended trial, all of that kind of good stuff can be found at metastock.com/conf-promo. You can give us a call at 800-882-3040, or you can go to metastock.com/sales-chat. Fausto, I know you're here already. I'm running the whole show today by myself, so I'm going to make you help me. Are you ready? Uh-oh, I can see you. Let's unmute your microphone. I'm going to send you a request.
There you go. You hear me now?
Yeah.
I'm like the Verizon man, so.
Yeah, we can hear you. We can hear you now. You made me a little bit nervous because on Tuesday, we had 8 presenters, 4 of them couldn't get their audio to work.
Oh.
Yeah, and I had hair.
Rookie?
I had hair. No, I think GoToWebinar is having problems. We were also using the new interface for
Okay.
GoToWebinar. I don't know if that's related to it, but everybody else has been flawless.
Good. Well, hopefully I don't have any problems.
So you might be curious as to why I'm going to ask you for help.
What do you need?
I'm going to have you help me. Well, we do this raffle. We give away all these prizes. They're pretty cool. The prize that I'm going to give away next is a subscription to John Thomas's Mad Hedge Fund Trader. It's a $9.97 value. It's a 6-month subscription. Now, for those of you that are watching this on GoToWebinar, you don't need to worry about it. You're already registered. Fausto may like you enough to randomly pick your number. If you haven't registered yet,
how am I going to do that?
What's that? Oh, I'll tell you in a second. I'll tell you in a second. I'm just gonna have you give me a number. It's between 2 and like another number. If you haven't registered yet on YouTube and you're watching us on YouTube, it's good to see you. If you are watching us on YouTube, I would recommend that you like and subscribe. It helps a great deal. We appreciate it. It helps us bring you great guests like Fausto over here maybe, or here. I'm not sure where he's showing up for you. But when you do register, at the pinned link at the top of the comment, you'll be entered into my spreadsheet. And when we pick your number, you'll win a grand prize, like 6 months of the Mad Hedge Fund Trader. So I just need to give you a range of numbers, I think, Fausto.
Okay.
There's a header row here. So any number between 2 and 6,277.
6,000?
Mm-hmm.
Why so high? We got that many people registered?
We've got a lot of registrations.
Oh my God. All right. Well, that's a tough one. I'm going to go with where Tesla's trading right now. So I'm going to do 398.
Okay. That is Stephen B, who has a email that says Trader's Den. So Stephen B in Canada. I think you've actually asked questions. I think I've seen you in the chat, Stephen. If you're here right now, let us know because we love it.
All right, we got it sold.
Now I'm going to properly introduce you. Let me make you the presenter real quick here. Yep, Fausto, there are so many things I could say about Fausto with the history I have with Fausto. And I enjoy talking about how he was voted sexiest man alive on a cruise one year. I enjoy talking about how he is so dedicated to his work that he gave a presentation with us right before his wife gave birth.
Yep.
I enjoy talking about how he is a fellow chicken owner. And he also, in addition to being a chicken owner, has a really, really amazing pasta sauce that you can find on his YouTube channel. I think it's Fausto Home Living.
Fausto Home Living. If you want to raise backyard chickens, maybe you want a chicken coop. Those are the hobbies I have other than trading. right?
In addition
get
to that, I guess Michael says you wrote a book on dark pools as well.
Yep. Yep.
Today he's going to talk about order flow and how to look at what is coming down the pipe. Probably, and I'm just going to say it, he is the most qualified person to talk about order flow that I'm aware of. Boom. So Fausto, I can see your screen. I can hear you. I'm going to get out of the way. There's your introduction.
There you go. No problem. Well, anyway, you know what, Jeff? It's always been awesome talking and being part of the Metastock. I think I've been here doing this with Jeff since the day they've been around. I've been doing this like with them for over 25 years. Been doing it for 35 years. Today, like Jeff said it, am I the most qualified person? Actually, I helped invent the whole order flow thing with NASDAQ and all these ECNs out there. So I'm not going to change anyone's style of trading. I mean, I know we have some great presenters here. So everything that I show you, you could still use everything that they taught you. But what I'm going to show you is something called the right of the chart. The right of the chart is the order flow, the high frequency trades, the algorithm. So if there's something that you're looking at, if there's a stock that you want to look at, I'm going to show you exactly what is going on so you have that game plan. Now, like anything else, I'm going to making no guarantees and promises for everyone. And let everybody know there's a very high risk in trading. So please, before you go out there, don't risk what you really can't afford. All right. So anyway, I'd like to thank Jeff, always being behind Metastock. He always runs a great presentation every time he does events like this. And you know, it is nice when you keep coming around. You just learn more and more and more, because then you get the back test, see who you like, you know, see where you go from there. And what a great job Metastock has been doing. Now, these are a couple of things we're going to talk about within the next 40 minutes. It's going to go very fast, but I'm going to show you how to identify your hidden orders out there. I'm going to show you how to read order flow. I'm going to show you common traps and mistakes that people make where they get misleading signals out there. I'm going to show you the probability of strategies of entries and exits. And I'm going to talk about some of the technical tools that I use, which is nothing crazy. You all have them. I just always find that some people make things more complicated than what it is. If you kind of simplify it, actually make things a little bit easier. So I want to go to the live markets and just show you what's going on, because it is actually a pretty bad market right now. And I want to start off with Tesla. And I've been a really big fan of Tesla, and I owned a lot of it. And I kind of sold it all today, unfortunately. I was really, really upset, had a really big profit, and I gave away a big profit. I'm not afraid to say that, but I still made money. But I want to show you why. The market's down a lot. S&P, you can see here, is down about 101, top right-hand corner. Dow's down about 600. And every morning we do a live audio broadcast, and you're all going to be invited. We're live every day here at Cybertrade University. And right here, right around 10 o'clock, if you could see right here, I was watching this stock. Let me bring up 2 days. So you could see here from the day before, it was at 142, and then it was hovering here at 130. And then this morning, it kind of came back down. And right around here was basically the warning sign. You could see how the stock went from 412 up to 415 and finally broke down. Now, the question I have to ask all of you this is, why did the stock go down? Why did it actually go down? Now, if you're saying, you know, the market's down or this, that, no. What makes things go up and go down are buyers and sellers. So what I want to show you here is this. This is called level 4. Let me bring it over here and see what we're going to look at. Okay, this is order flow. Now, if I zoom out here, I want to show you what's going on here. Hold on, I got to go back a little bit further. Okay, so when I go here around 10 o'clock, you see this big red right here? See this line right here? So right here at 9:30, this is when orders came through. And right here, there was about a pretty big order out there. You see that dark red line? That means that there was a big, big order out there. I'll even show you what I mean by here. And you see how that turned red? You see how it went up and then came back? Green means orders, mean that there's transactions on the ask. Red means there's transactions on the bid. And what happened, this big red order came out there. It was a really, really big order. And then from there, you could see there was a big transaction. Somebody bought it, sold it to that person out there. And then it just kept going lower, lower, lower. Then it came to this big seller around 400. You could see it was about 200,000 shares. And when I move over here, that was around 1230. And then you could see here, you see that big candlestick? You see how big order got filled? That big order got filled. So there was a big, big buyer. And then what happened from the big buyer? Someone sold it to it. And that's when things broke down. So I was actually pretty happy I got out of it. I wasn't happy at the time because, you know, I gave away a big profit. But you know what? It's always nicer to know when you sell something goes lower. And as we go on during the day, you could see how the stock just kept going down, 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 down. And now we're testing these big sellers, which are not as big as before, but you could see that there's about, on the right, it says current order book. You got about 27,000, 60,000. If it gets past this 395, then we're talking 390, then we're talking 380. If anyone here is following the video, let's go check out NVIDIA, just so you know what's going on. Unfortunately, NVIDIA had a really big buyer here at 185. Someone sold it to him. That was a big support level since 11 o'clock, but now it's 1 o'clock. It broke it. Remember, what makes support levels are buyers, and sure enough, now it looks like the next support levels could be 180. And if it breaks that, fellow traders, then you could see 175 at 170. If it goes up, which you know is a big resistance levels, is 200. You got 300,000 shares. So what I'm showing you right here, fellow traders, is the right of the chart. Now it works on Bitcoin. You could see it works on any stock you could think of. It's all there. Buyers and sellers at every price. So this is what I'm about to teach you, and this is what I'm about to show you. Now I'm going to give everyone access to a 1-week trial in my trading floor, which is right here. And right now they're looking at the MSTR. That stock's getting destroyed. This is the opposite ETF of MSTR. And you could see here, these are all our instructors, all our traders right now. There's not that many people. It's the middle of the day. There's only about 178 in there. But you could see we're chatting, we're talking. We'll have live audio. People start coming back around 2:30. So I'm going to invite all of you to come to our trading floor for a 1-week access to that room. But before I do that, you know, I know Jeff was trying to tell you a little bit about who I am. Let me just tell you, you know, my background so you'll understand why am I listening to Fausto and why I've been doing this for 35 years. I'm actually a 12-time champion at the Traders Challenge. I beat every single school I competed against in the day trading challenge. I've been doing this since I was 22 years old. I started miserably. I lost. I like a lot of other people. I was self-taught. I think I could do it on my own. Blew up 2 accounts, and then I finally raised the white flag and did what the smart people did: is, you know, learn from people who knew what they were doing. So I took a job as a trader at a brokerage firm, and let me tell you what I've learned on the first day, you know, as a trader, which I just showed you. I should have never made my first trade. I finally realized why I lost money, why I made mistakes, and I found out that the only way you're going to learn is you have to surround yourself with good traders. So over the years, I've surrounded myself with great traders. I still learn today. I always like to learn new things, and I believe that's why some of you are here to do it. And hopefully I could teach you what I've learned, you know, 35 years ago. Because trading, the hardest thing about trading is not more of the concept. It's more of just you know, nobody likes to take losses. Nobody wants to admit when they're wrong. But there comes to a point where you're going to have to hit the button. So what I'd like to do also in the meantime, if anyone here would like, I am also the author of a book about how to beat market makers at their own game. It's for sale on Amazon for about $47. But today, for you guys listening, I'm going to give it to you for free. Okay, just for you listening in. There's my email, fausto@c2trading.com. So if everybody could just take a second out of the day right now and just bring up a email right here and just type in Fausto whatever, or at CTU Trading, ctucorp.com. See if my emails are working. There we go. And just write me, send me your book. And then also make sure you put your name so I know who you are. Because right now I like to call people by their real name, not by their stage name. And just hit send. And let me tell you, in that you're going to see, I got a lot of scrutiny for this. Okay, market makers, my friends said, why are you telling people our secrets? Well, listen, the technology I'm about to show you has been around for over 50 years. So back then they were a little upset. Today, you know what? It's just, you're part of the team. You're part of the game. You just got to know how the game's being played. So please do that. I think you're really, really going to enjoy it. Wiley is our published company, and they've been around for a long time. Now, I've been guests, I've done speakings at some of the biggest ones. I would say the best one that I'm most impressed about and privileged to do is NASDAQ. I've done a lot of presentations at NASDAQ. We're going to send you a couple of videos of them. If you follow me on Instagram, TikTok, or YouTube, we got several 100,000 followers on there, but I had some great short videos on it. And the thing is, NASDAQ, one of their biggest hurdles is that they want you to learn how to trade the market. A lot of people don't know how to trade the market. Believe it or not, it's not buying and selling. You need to follow the orders. You need to know how to use the execution system. So I got some really good videos on that, and I want you guys to get an opportunity to watch it. But over the years, I've trained probably several 100,000 people over the years, and tens of thousands of them became my students. And my goal is hopefully you could be one of them too. Now, the thing is this is not about me. Okay, I'm not here to put feathers in my cap and tell you I'm the best. I mean, that doesn't impress me. Maybe 20 years ago, but today this is about you. Okay, I've just came back from Florida. I've done the money show. I was up in Toronto. I'm going to Miami next week for another big event that I'm going to be doing. And why I love doing them is that unfortunately I can't see your faces, but when I do, it really bothers me that everyone here doesn't understand how the market really works. And you have to understand what makes supply and demand. And when you see supply and demand, you're going to make smarter and better trading decisions. I know for a fact that a lot of you right here, right now, are probably losing money and not too happy that the Dow is down. Maybe some of you are short, but that's only probably about 5-10% of you, okay? Some of you, after hearing that the market broke all-time highs yesterday and you're coming back today, listen, the Dow Jones is an artificial number, okay? It's not what you really see, and some of you need to understand that, but I want to show you how it works. So I need you to keep attention right now, because I'm going to show you how the market works and how we started. Now, just out of curiosity, ask yourself this question: how long have you really been trading for and investing? And what I mean by that is, when did you really take it seriously? Because some people might tell me, oh, it's been 20 years. No, it's not 20 years. It's now. Was it a couple of months ago? Maybe you retired. Maybe you're really trying to take it seriously. Now, you don't want to come into the wrong time, but just keep in mind, the stock market's not going out of business, okay? And, and I'm an actual day trader, and a lot of people are like, oh, I don't want to day trade. Well, listen, what makes swing trading become a swing trade is a day trade. What makes a swing trade turn into a long-term trade is a swing trade and then a day trade. What makes you to become a good option trader is learning how to trade the stock. So that's what ended up happening. So last week in my workshop, I tried to warn all my traders something, okay? And let me tell you what it is. Last week in my webinar, the stock market, always corrects itself, always does, all right? And, and by the way, you can actually go back to my YouTube channel and you can watch all this, because I do this every week. The thing is, you got to know when crashes happen before they come. And like, for example, Amazon, just 2 days ago, just crashed. It's down about 5%. I mean, the stock was up at 250. Now we're at 230. I think we're even lower than that, actually. Bitcoin down 26% since October. Okay. Some people are like, oh my God, what happened to Bitcoin, or what happened to the ETFs? Listen, it's all relative. Nuclear stocks, we're on a huge rally. Okay. Now look at them. They started back in June. They were at $40, went to 180. Now it's down to under 100. CRWV, brand name stock, just the beginning of November was 140. Now we're down to 80. We're down almost 50% on that stock. So the $1 million question is this: where is the bottom? Okay. Well, the way you know where the bottom is you got to know where the buyers are. There's always buyers at all times, okay? And there's always sellers at all times, because that's what drives the market, buyers and sellers. And the way you do that is you follow the money. And like Jeff told you, I teach something called order flow. So I'm not here to change, once again, no one's style. I'm not looking to change, the way you think of the market. I'm just here to teach you, to show you where the sellers are. And no matter what tool you're using, there's no tool out there that will do this for you other than having order flow. So I want to start off talking about something called NASDAQ Book Viewer. Okay, I like to call AK Level 3. Now, does anyone here have Level 3 quotes? Just out of curiosity. Marco, by the way, I just got your email regarding the book. I'm going to send that over to you. Who's this person? I don't know who this person is. You forgot to put your name, but I'll figure it out. Frank, I got yours. No problem. Michael, David, Sean, and Bill. Okay. All right. So, and by the way, if you want my email, I'll give it to you guys again. Hold on 1 second. Here's my email. I don't know if Jeff, you can copy it and put it in there for them. There you go. All right. So I'm going to talk about something called NASDAQ Book Viewer. Now, listen, you got to pay attention, because what you're about to see is very, very disturbing, okay? Because you're going to realize, you're going to be like, wait a minute, how did I not know this? Why did no one ever tell me this? I'm going to show you what you can get right from NASDAQ. I'll show you where to get it, okay? I don't work for NASDAQ, but they don't pay me to do this, but they always want me to spread the word, because the more you understand it, the more you're going to understand how to get in, get out, and not get stuck in positions like today. So what we're looking at right here is, it looks pretty confusing, but just follow along. Here, I don't like that color. I need red. Okay, so we're looking at Uber, and we're looking at buyers, and we're looking at sellers. Okay, so you're looking at every single buyer in the entire world that wants to buy Uber. You're seeing who wants to pay the most for it, and you're seeing who wants to sell for the least. Who wants to sell for the least amount of money, and who wants to sell it for the most amount of money. So you're seeing like a big chat room of every buyer and every seller, and the amount of shares that are out there, and the amount of orders that are out there in the stock. Now, what's very confusing about this is that there's a lot of numbers, okay? And 99% of what you see, you don't need to, it's not important to you, okay? And I'll tell you what is important to you is this. Where is the significant buyer? So let's look at the stock SMR. Okay, now here in SMR, you could see right here, my crayons again. Okay, right around here, you could see how the stock went up, came back down, went up, came back down. So right at this place, when this stock was above that number, okay, it became a support level. When you break, remember, you break a resistance becomes a support. And then you can see how the stock ran from $40 and shot up all the way to 47. Now, how did that become a support level? Well, if you look over here on the buy side, I know it's a little small, but I blew it up here. There was 134,000 shares looking to be bought at $39. Now, was that a lot? Well, when you work your way down the list, you got 675, 100, 300, 150, 200. Why is it so much at that price? Well, that's where program trading is. That's where the big algorithms are. That's where the big institution wants to buy it. Okay. So when I say 99% of the orders out there are irrelevant, that's what I mean. You want to look for the 6, the 5, the 6, the 7 digit numbers, not the 2, the 3, the 4 digit numbers. Okay. Because that's probably about, when you do the math, over 100 times more, maybe more than that, on the average order at a given price. So what makes a support level is buyers. Now, let's look over here. Let's look at sellers. Looking at Rivian. You have the stock right here that made a nice little run at 9:30 from 15:30, went all the way to 16, came back down, hit 16, and came back down to 15.50. Now, why did it stop at 16? Why didn't it go past 16? Why not 15.90? Why not 17? Well, when you look at the sell side, and if you worked your way down, out of the biggest order was right here. That order was 399 orders that equal 252,000 shares at $16. Once again, is that a lot? Well, listen, you got 2,000, you got 8,000, 20,000, which is only a penny away, and then you can see how it changes. So just between $15.99 and $16, you're talking about close to about almost 270,000 shares. Now, is that a lot? I think it's a lot when everyone else is showing 800, 2,000, 300, 100. Remember, what makes a resistance levels? Sellers. What makes it a big resistance levels? A lot of sellers, okay? Now, this is not the Fausto indicator, okay? This is not the Pugliese RMI. This is NASDAQ's book, okay? Now, let me give you a little history. When you look at the New York Stock Exchange, you see those, all those what we call traders on the floor. Well, they're not there anymore because Wall Street is going to be, they basically everything went electronic. But they're looking at tablets, looking at orders. They want to know where Goldman, Merrill, BlackRock, all the algorithms, where are all the orders? Remember, the orders are coming in, they're coming in, they're going. So and they don't have time to play games. If somebody wants to sell, they got to post that order, and you're going to see those orders, and that's what the exchanges want you to see. So let's apply this to the test. Let's make a test. Let's go over a couple of examples. So we're looking at SoFi. Okay, SoFi all-time highs. Now it's starting to pull back. Okay, and you're like, you know what? I love SoFi. Maybe there's an opportunity to get it. Well, where's the opportunity? You don't want to buy it now. You want to buy it where it's going to start going up, because from what you're seeing, it's trending down. So we need to look at is we got to see where the buyers are. Now, we're going to go to the NASDAQ exchange. We're going to work our way down, and we're going to notice that there is a pretty significant buyer right around here at $28.90 for 100,000 shares. Now, let me repeat what I said. Is that a lot? Well, when you work your way down that list, 1,000, 1,100, 1,100, 100,000, 1,000. It's almost 100 times more at that specific price than at any price out there. So in theory, a lot of buyers, it's got to be a demand. Well, here's the stock. It did drop down, and it came down there, and not only for a minute, it actually lasted about 5-10 minutes, and then it went right back up to 32. Now, if you do the math, if you bought the stock at 29 and if you sold it just at 30 and you had 1,000 shares, that's $1,000, $250,000 salary. It's not bad, okay? So you don't have to kill it, but the goal is you don't want to buy it at 30, 50 and know you sell it at 29 and it goes back up to 32, right? I mean, how many times you bought a stock and like, damn, I bought it too early. I should have waited. Well, if you waited enough, you probably should have bought it when those buyers were out there, because that's where it bounced. Let's look at and see what it creates as resistance levels. So here we're looking at TEVA, pop from earnings yesterday. Nice run, went from 2050 to 2450. Now let's just say you were one of the lucky ones. You bought it, you owned it, and you're like, oh, I remember this stock. It was $100 stock, but I don't know if it's going to hit 100 today, or listen, I got a nice profit, but I don't want to sell it. The momentum is there. Well, the only way you're going to know where the true seller are is you got to look at the right of the chart, and the right are the orders. Now, when we look at the NASDAQ exchange, we'll notice that on the sell column, you had a pretty big seller of 120,000 shares right at here, 25. Now, in theory, think about it. What do you think is going to happen when we get to 25? Okay. Is it going to go up or is it going to go down? I mean, think about it. If you know you're coming up to a big seller, do you want to still own it? I don't think so. And you know what? look what ended up happening. It did go to 25, and if you didn't get out, now you're back down to 23.80. Don't tell me that has never happened to you, okay? How many times are you in a position like, damn it, I should have got out. What made me hold it? Oh, you know what? This was telling me to go up. My newsletter told me it was going to go higher. You know, listen, you can probably convert a winner to a loser. And I know that's happened to you many times. So to prevent that from happening, it's just about following the orders. And here at Cybertrade University, that's why we call these iceberg orders. Now, just to let everybody know, if you ever heard of that lingo, I invented that word. So I got, you know, I want to staple that so everybody knows. If you want, I'll tell you exactly where and how I came up with that order, that name. I actually have a YouTube video on it too. It's pretty cool. But it all started watching the movie The Titanic. You know, if you guys ever watched it, sad story. You know, the most unsinkable ship, right? Probably the most reliable indicator, I would probably call it. When you look at an iceberg, it's not what's on top of the water, it's what's on the bottom of the water. And most people don't look at the bottom because they don't have the right radar. I mean, you know, the Titanic didn't have that stuff technology. They thought they were safe. They saw it. Sure enough, when you hit the iceberg, all those wonderful people died. Okay. Well, you don't want to hit an iceberg, because if you hit an iceberg and you're on the wrong side, yes, this stock can crush you. Okay. Just like you just saw why I got out of, you know, Tesla. Okay. Tesla had a big iceberg order, hit, guess what? It sunk. Okay. Now, what happened to me? I got a little scratch. I got hurt, but I didn't die. All right. And that's the problem. A lot of people out there, they don't see where these orders are. So that's where that all comes down. So what happens when the stock market is breaking down on you? Well, you know, here we have another example. Okay. IONQ. Now, without looking at any chart, without looking at any news, without looking at any indicator, let's just look at what's happening with the stock right here. So I'm going right to the exchange. I'm looking at the book. Okay. And the book tells me that there's a 162,000 share buyer at $60. Now, the stock is going down, and you know, you obviously don't want to buy it too soon, but you could see right around 1 o'clock, 1:30, when it finally came to that order, the stock went from 60 back up to 62.50. Now, how could that stock break it? Okay, because it retested it. Look at all the red orders out there. Because listen, it can break it. That can happen. And it did happen. And you know what? Once that order got filled, which you could see all the red candlesticks, and you could see the bottom candle bars on the bottom, that a lot of orders came in at that time. That's why it dropped. So listen, is it a guarantee? There's no guarantees other than death and taxes. Okay. In theory, can it go up? Well, with the demand, yes. But can someone say, hey, I want out, and I see a big order out there? Can you get executed? Absolutely. And this is what happened here. And if you're not watching that, just like I just showed you, I'm going to go back to that trade that I showed you on Tesla. If I wasn't prepared for that, boom, I could have lost a hell of a lot more money, a lot more than I probably wanted to. Question, send me a copy of your book to Joseph. But you know what? Joseph, just send me an email. I sent you my email, so we'd be happy to get it. By the way, that book was published over 10 years ago. That's an old book, but you know what? Whatever you read in there, believe me, you're going to learn a lot, because nothing really has changed. Okay. The only thing that has changed from the day I started until today is that when I started, you had to be licensed to do this. You had to work for a brokerage firm. You had to split the profits with them, and you had to live in New York City and commute there. Today, all those things have gone. Okay. And you didn't pay $25 a ticket like I did. Now you get them for free. And what's crazy is that I made money back then, even paying $25 a ticket in and out. And today, some people can't even make money even just working for free tickets. So that's a big problem. All right, now, if anyone here would like to get a copy of the NASDAQ book viewer and you want to play around with it, this is what you need to do. Email me, okay? So let's go to the inbox again. Let's play the inbox game. Go in there. Let's take a second. Write Fausto at ctutrading.com, okay? Write NASDAQ book and write me your name. Again, Fausto Pugliese, so I know who you are. And I will send you 2 videos. They're about 5 minutes long, where to get on NASDAQ website, because I'm not going to tell you where it is, because you know what's going to happen? You're going to go there and you're going to download the wrong one, and you're going to have the defaults wrong. So you'd rather take the 5 minutes to watch the video than go out there and, you know, go to NASDAQ and call them up. By the way, they don't have a phone number. That's another thing. So you're not going to get any support. You're going to have the worst contact with them. So I'm not want to discourage you, but definitely want to do that. Just click send, and I will get that email. Okay. All right. Now in that video, I'll show you where to download it. And it's gonna be a lot of fun. You're gonna sit there and you'll be like, okay, now I can see the orders. You basically have a seat on the New York Stock Exchange and the NASDAQ market. Okay. It's the biggest exchange in the world. So wouldn't it be nice to know where the buyers and sellers are on the stock that you own? Envision this. Imagine you own you're looking to buy a house. Wouldn't you like to know where the other bidders are, so you're not underbidding, or you don't want to overbid, or not even bid at all and waste your time knowing that the house is going to go a hell of a lot more than you even wanted to pay for it? Well, same thing happens to you in the stock market. How many of you here, like, you know what, wanted to buy the stock and, you know, didn't realize after doing all my research and everything that happened, it ended up blowing through that support level anyway. So what was I thinking? So don't waste your time. Just be smart. All right. So now that I talked about level 3, I want to hop on to something which is a level higher, which is level 4. Okay. Level 4, all it is a heat map. Okay. Now I have some really, really good videos on it. If anyone here subscribes to Instagram or TikTok or YouTube, definitely go out there and check it out. Let me just show you really quick. I'll go to Instagram. I'll just show you a little bit. Okay, here's Instagram. Here's my profile. You can see we have like over 80,000 followers. Here's some great videos that I did. Someone got some pretty big hits, 1 million views, 200,000. Let me show you some pretty good videos. So they're pretty good. Was it this one? You can click on any one, but if you go up there, you'll see exactly how I'm showing, like Tesla, why it tanked and it wiped out a $9 billion of Elon Musk's net worth. Just showed you how it actually happened just by following order flow. So it's a pretty good video. And there's a bunch of them out there. Here's another one. Talk about the $25,000 EV stock that came out, made the stock run that day when that news came out, all that good stuff. So all these videos are also on Instagram, on TikTok, YouTube, and X. All right. So let me show you what level 4 is. Now, level 4 is basically everything level 3 has. But if you like to read the chart and like to look at the heat map of it, you're going to basically see it a little bit more in more visual. So let me give you an example here, what we're looking at. So we're going to find orders like this, where you see iceberg orders out there and see if they get executed and see where they support come in and where they start buying it, all that. So let me go to the market and let me show you what we got going on here. Now, by the way, does anybody here have a stock you want me to look at? Anybody here want to have a little fun? Anyone have a stock? Just give me in the chat. Someone can. I don't know if anybody wants to look at any specific stock out there. So while you guys are doing that, let me bring up a stock. Let's go back to Tesla again, because that's a pretty popular stock. All right, so we're looking at Tesla here, and let me bring up Tesla. So here we are. So you can see right here on the right-hand side, this is called the current order book. So this is the right of the chart, and these are all the orders out there. And what you're looking for is these color lines. Okay, so we're looking for. And you could see right here, there's been a bunch of buyers. They showed up here around 12 o'clock, which is right here. And as the color got darker, that means more orders showed up. So there's roughly 60,000 and 23,000. So you're talking about 6, 7, 8, talking about like 90,000 shares looking to be bought right around that 395, 96 number. So that's why we kind of went down, and we've been hovering here, and that's what. Okay, so right around there. So kind of build some support levels. Now, can it break it? It can break it. It broke it here. You know, order got filled. That red bubble means those are transactions that an order got filled. The bigger the ball, the more orders got filled at that price. So that's why you could see it's a pretty dark line. So that order got filled. Now you see it's starting to get some green balls, and now the stock is starting to trend up a little bit. But since this morning, you could see how it kind of like took this seller out, took this seller out, took this seller out, took this seller out, took this seller out. This guy's been out here since the market opened. He's been out there. The next, you can see this guy's been out here since the market opened. That's around 390. Okay, so now you have a little bit of a game plan where I will look at it and say, okay, if I wanted to trade it, let's get my legal pad right here. I'm going to show what I teach my students. So we're going to write Tesla, TSLA, and the price of the stock is right now is 402, and support levels I would say is 395-ish. There's a seller at 406 and 415. 95 and 390. So let me show you what I got right there. So that's basically what I do. Okay, so now I have an idea where the big buyers and where the sellers are. So when you think about it, I don't even really need an indicator now. I just ballpark, I know exactly where they are. I see them out there. And then what I would do is if it's a really big support levels, I would like circle it, you know, so I have a little bit of an idea knowing that that was a really big iceberg order out there. And that's how you basically can do a day trade into a swing trade. Now, if you wanted to expand it and go back like way back in history, we can go back, you know, we could see all the program trading. I mean, I can go all the way up to 450. Now we're at 400, like 450. Could that happen? It could happen. But at least now you could see what's way out of the money. You could see where way out of the money are on the bid and way money at the offer. A couple of questions here came across here. You got a good eye up for trades. Maybe you could concentrate on Tesla and give us an update, even alerts whenever something important happens, keep you up to date with traders, or whenever. Well, thanks a lot, Stephen, for that. The thing is, you know, as alerts go, I try to teach you how to think for yourself. Okay, that is how it's going to help you. You got to remember, all this technology, eventually you have to, you know, it becomes overwhelming. And then you start getting too involved and you don't end up trading. That's the problem with it. I like to just keep things simple. Just know where the orders are. Let's look at a couple other ones out here. Let's look at NVIDIA. So NVIDIA, another brand name stock, and you could see right here, this is 9:30 this morning, right here. And we started right around here, and you can see orders showed up. There's big orders here for 200, for 300,000. You got another order out here for 190,000 right at 205. You had an order out here, but it looks like he canceled. That was 185. And then you got 180, 175, and 170. So right now we're looking at a really long term. We're looking at more of a swing trade. Now, if you're day trading it, what we could do is we could minimize it. And now you could see, you won't see as big of orders, but at least you see something. You can see 190 is 50,000, 195 is 113,000. You can see the big order here. You can hear 182, 183. So stock is moving in dollar intervals. Okay. AMD. Let's look at AMD. So AMD, you could see here that it had a lot of orders out here, right here, and they all got executed. All right, they all got executed, and now a seller showed up right here because it was below it. Here's your next biggest buyer. He's still out there for 23,000. You got another 19,000 share buyer out there at 246. So at least you could see it, but you could also, it's pretty cool, is right here. Look at this one. So the stock went up, came to that big seller out here. So you never broke it, and it came back down. He's been out there. How much is that? 49,000. So if you're wondering why did not break 49,000, that's why. Okay. It came really, really close to it. And what I bet it, if I show you here, you might even see this. AMD. This is a cool thing. I want you to look right here. See the high right there? That high was never 260. It was below it. It just missed it because it knew the order was out there. Now, how many of you out there, let me teach you a little history about trading. Don't ever, 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 ever sell anything that ends in zeros and fives, okay? You don't think those traders knew there was a big order out there at 260, okay? So they got out right before it hit it. And if you didn't, now you're down, you went all the way down to 246. So that's how you get yourself in trouble. All right. Now, did I lose anybody? Easy enough, right? Don't think you can move this on. Just make sure you send me your email. I'll show you where to get the book viewer and everything else. Hold on one second here. I'll do a couple of shout outs really quick because I saw a bunch of you guys just email me. Who we got here? Edward, I got yours. Okay. Candice, I got yours. Michael, Brendan got yours. Perfect. All right, good. Listen, this is all going to help you with your trading. It's good. When you start playing around with this stuff, you're going to be like, wow, this is pretty cool. You know, I mean, now I can see why I lost money on the trade. Because remember, losing money is not a bad thing. Losing money is actually a good thing. So if you know why you lost, you're not going to do it again. Just give you a heads up on that. All right. Now, what I'd like to do right now is I want to offer everybody a good something very important. First of all, if you do your homework about Cybertrade University, we have a 5-star rating on Google. I mean, I think that's almost impossible to have after 35 years in business, but check us out, read the testimonials, see how we change people's lives over the 35 years in business, where we talk about day trading, swing trading, options trading, long-term trading, mainly stock trading. And now we've actually lately been doing a lot of crypto trading too. Ever since crypto, they came out with the ETFs like iBit and all those, and now you could trade options on it. We've also been doing classes on that, so nothing to be afraid of. Now, we created one of the first, actually I think it is the first, live trading rooms in the industry. I created back in 2000, okay? So I want to invite all of you guys to come to that trading room that I just showed you, where you'll get to see all our traders, you'll get to see all our instructors, you'll get to see our morning trades, you'll get our morning watch lists, our afternoon watch lists, all that great stuff. And all we're asking for, if you want to come and join that room, all we're asking for is a $9 trial to do 1 week in there. We're not going to charge you a single penny more, a single penny less, nothing more than that. It's going to just cost you $9. Now, the reason why we ask for $9 and we're not doing for free is because I feel like, you know what, if you're going to take it seriously, you got to have a little skin in the game, okay? At least you know that we know, and then we know who you are and you're a real person. If that was the case, I would have thousands of people in that trading room, and you don't want to be in a room with a bunch of free people. You know, you want people that are really serious. So I feel like If you're going to take it seriously, $9 all we're asking for. All you got to do is take your phone, scan that QR code, and that's it. Now, these are all the great things that you're going to get that we're going to give you for a week. You're going to get live audio commentary with me and all my instructors. You're going to have full access to our chat board. You're going to see all our traders that we've trained, and you're going to see all the watch lists. You're going to see stocks they're in, stocks that they're out. You're going to have where we run live all day long. You're going to have access to our private workshops that we do, also our podcast. So we do training courses every day. You're going to get all that stuff, all for $9. Okay. So you're going to get all this stuff. And at the end of the week, if you feel it's not for you, we'll give you $9 back. Okay. But I want to throw one more last bonus I'm going to give you with that. If you do register right now with Metastock, I will personally give you a free coaching class. I will talk to you on the phone. I'll tell you why. My real goal is I'm trying to find people that want to be part of a team that I could train, that we can make money together. Now, listen, everyone here, all the speakers here will tell you the same thing. A lot of you probably don't qualify this type of style of trading. You might think you are, but the only way you're going to know is you need to talk to somebody. So I would like to talk to you as long as I know you're in the trading floor and you've been there and I'm watching you. And believe me, I will watch you because we do tag you. If you're serious, I'll take you seriously. Okay. If you're not going to take it seriously, I guess you're not going to want to talk to me at all. And that works out great too. But, for me to go out there and to be part of the thousands of traders that we trained that are part of that trading floor, like I said, I handpick all the traders because I want to make sure this is something for you because, you rather have someone tell you the truth than lie to you and, try to really train you. And next thing you know, it's not for you. And you know what I'm talking about. You've probably been there and done that. So that's why I've been doing this for so long. And that's why we have 5-star rating. So listen, for $9, money back guaranteed, 1 week, we're not going to charge you anymore. I know somebody's asking me, am I going to get caught into some residual thing? No, we do not do that. We don't need your business. We respect your business. We don't need it. Okay. So if you want to have full access to our watch list, our trading floor, the 1,000 traders in our trading room, here's your chance. All right. Now, does anyone have any questions? I know I'm out of time here. I'm going to pass it over to the next speaker. Anyone have any questions regarding any questions?
We have a question from YouTube from Money Vidi, and I'm sure that's his real name. But he wants to know if this will work with futures.
Yes, actually, it really does work for futures. Actually, the platform level 4 started off for futures. I don't trade futures, but if you email me, I know there's only a few people that I know that are very good future traders that I would recommend to you. Okay, we're almost like a doctor's office. You go to your primary and I need an orthopedic, and you go, doc, could you help me? He's like, well, that's not my job. But I know 2 guys that are really good at it. So I do definitely can, and you can use it towards futures. Absolutely. It's a great, great tool. Any other questions?
Yes, Michael wants to know what the cost is after $9, after the trial. Thanks,
so, Michael, if it's 900 or 9,000, don't worry about it. That's the least of your problems. Worry about the $9 first. And you know what? Let me explain something to you. If I told you that this job pays 6 figures, would it matter if you paid, $90 or $900 for it? It's part of doing business. Don't worry about next week. Worry about today. Okay. That's what I always tell everybody. So, that's where, because that's how people get discouraged. They're like, oh, how much is these things? And afterwards, everything does cost money. Listen, the NASDAQ book viewer, let me just tell you something crazy. That technology, I got discouraged because when I started, they wanted $1,000 a month for that. And think about it, try to tell a 22-year-old 35 years ago to come up with $1,000, living at home with his mom in his basement. Okay, it's almost impossible. But you know what? I believed in it. And I don't think anyone here is rushing to spend $1,000. But you know what it costs today? $15. $15. I'm like, I got ripped off back then. I'm like, you know what? It's part of doing business. So I'm giving everybody a little advice. The Metastock platform is one of the best platforms out there. And if anyone gives you something for free, then you know what? That's all it's worth. So you're gonna have to keep in mind, you're gonna have to spend some money in things. You have to spend a lot, but you definitely have to spend something. What's the cost? 9 trillion? Well, that's a national debt close to it, but that would have been nice. I've definitely, yeah, 9 trillion. Why not? Any other questions? Any other?
We do have a request for another stock, but I just don't think we have time for it. If somebody jumps in the room for $9, you guys will probably look at stocks if they're interested in them, right?
Yeah, of course. Absolutely.
Okay. All right, there we go. Well, thank you again, Fausto. Appreciate your being in here. I don't see.
Well, my pleasure. My pleasure, Jeff, and thank you for always having us. And here at Cybertrade University, we always like to thank Metastock for hosting these events. And by the way, guys, there's a lot of presenters here, great presenters. Jeff handpicks them all, and very fortunate to listen to these people taking the time out of their day to come and talk to you about it. But you should definitely try a little bit of everyone's stuff, at your style, and see if it works, and then maybe come back to the next one, maybe find a different speaker and so on. But definitely go out there and sample, because we all need mentors. You've all been mentored when you went to elementary school, to junior high, to high school, to college, okay? Well, this is no different. When you took a job, you know what? Someone had to take you under their wing and train you. This is a great job, but it's also a very high failure rate. Don't be part of that failure rate, because if you think education is expensive, try ignorance. So, Jeff, thanks a lot. I appreciate it, and look forward to seeing you soon.
Try learning while you're trading, right, Fausto?
That's right.
Thanks a bunch, Fausto. Appreciate it. ctu.code/trial. It's in the comments and in the chat boxes. So go ahead and click there. A big thanks to Fausto again. All right, let's go ahead and move on. Let me go ahead and make me the presenter for a second. Show my screen. As we move on to the next presenter, who is also amazing. I want to just kind of talk a little bit about one of our sponsors, thetradersforum.com. Thetradersforum.com is free. You can join it right now. You should. Thetradersforum.com. There, it's a little bit of a place where you can get together, you can chat, you can discuss market trends, discuss stocks you're interested in. You can come in and learn about technical analysis, technical indicators. It's 100. All of that is 100% free. Gotta go to thetradersforum.com to do it. So a big thanks again for the Traders Forum for sponsoring the event. Also, as we move on, I want to remind you that all the Metastock offers that we talked about, all the add-ons, everything like that, is available at the metastock.com/conf promo. You can also go to metastock.com/sales chat or call us if you have any questions at all, 800-882-3040. Now, Jody doesn't know it yet, but I am going to ask her to help me. Jody, are you around?
I am. Hi, Jeff.
Okay. Did I pique your interest just yet on how you can help me?
How can I help you?
So, between every speaker, we give away a door prize, and to get door prize, if you're watching us in GoToWebinar, you've already registered for the event, so you're already on my list. But if you're watching us on YouTube right now and you haven't registered yet, if you register, you'll be entered to win a prize. And we do a prize between every drawing. That's where Jody's going to come in handy in just a second. The next prize that I'm going to give away, let me just go to my prize bag. I should have actually made a bag. Oh, next time. The next prize that we're going to give away is for Dave Landry's gold membership. This includes trading courses with money management, trading psychology, and methodology, including setups, access to Dave Landry's Trend Traders Interact with Dave Landry and other traders. It's a $300 value, and we are going to give away one of those in just right now. Jody, I have a big spreadsheet of everybody that's registered. It starts at 2 because there's a header row, and it goes to, let me see, 6,277. Can you give me a number anywhere between there?
Yes. I'm gonna round it though. Let me think.
Okay.
Okay, 3,500.
3,500. Okay. Your target for the Dow, right? Okay, Charles B, actually in South Africa, is the one that just won the prize. Thanks for the assist there, Jody. Appreciate it. And again, if you have any, as long as you register, you can be eligible to win. I want to introduce you officially now, though, Jody. Is that okay?
Absolutely.
All right. Jody's been in here a few times, and she's the CEO of FX Traders Edge, Wavy Tunnel Pro. In the process of designing her stuff into Metastock, she successfully traded the markets for 35 years and is a former Wall Street professional trader. She's considered one of North America's leading coaches and mentors and has traded thousands of new and seasoned traders in her tunnel system. She always does a really good job. Jody, I'm going to go ahead and send you the screen share. Let me do that right now. We'll make sure before I get out of the way that you're ready to go.
Thank you. And
Yeah.
I have until what time? 5 up?
Top of the hour.
Okay. Can you see the screen?
Yes, I can. Looks good. Okay, that's my cue. I'm out of here. It's your turn. Go.
Thank you. Okay. Thank you, Jeff. And it's always a pleasure to be here. And this is just a great show. So thank you again. And I hope you are all enjoying all of the wonderful speakers that you have this week. So in this session, I'm going to be, I'm excited to share with you a simple 3-step playbook for trading trends and corrections with confidence. In today's volatile markets, uncertainty is inevitable, yet price action often remains in sync with the market cycles. And mastering the timing of these cycles is crucial for trading success. So by using a structured roadmap and straightforward timing tools, traders will be able to navigate the markets with a little bit more confidence and make better decisions as a result. Before I start, I always like to show the disclaimer. I'm going to show you the strategy that I use. So just if you decide to use it, just remember to practice with a demo or paper trading account with any new concept or strategy until you really get to know and understand the risk and reward potential. Before we dive in, let me just say a few words about the trader's pendulum. As Jeff mentioned, I began my career as a professional trader with JP Morgan, trading currencies on both Wall Street and Bay Street, where I managed positions that generated millions for the bank. But over the years, I've expanded into futures, stocks, and options. And for the past 20 plus years, my passion has been teaching traders how to move from emotional, inconsistent trading to consistent rules-based success. And I also wrote The Trader's Pendulum, The 10 Habits of Highly Successful Traders. And in it, I described 3 pendulums that every trader must manage on a daily basis. The market pendulum, which swings between trends and corrections. The financial pendulum, which governs risk, reward, and capital. And the emotional pendulum, which typically swings between fear and greed, and also patience and impatience. And this pendulum framework, markets, finances, and emotions, constantly in motion, is at the heart of what I teach. And before we wrap up today, I'm going to share how you can get involved with the Wavy Tunnel Pro and the programs that we offer. Recently, my work has also been recognized in major publications, including USA Today and International Business Times. And it's always an honor to be featured, but what matters most to me is showing traders like you how to apply these ideas in a practical way. And that's exactly what we're going to be doing today. And why does it matter? It matters because volatile markets create opportunities, but they also bring risks. And most traders blow up not because of the market, but because of their emotions. Or, and not being able to follow their trade plan. And it all stems back to their emotions. And with limited capital, you don't always get a second chance. So that's why having a repeatable system is non-negotiable. And the more you repeat the system and practice it over and over and over again, the more you're likely to follow it when things get tough. So really, really important. So what process do I follow to find trades and have the confidence to pull the trigger and manage my trades with clarity? I'm going to show you specifically what I do. And this is a 3-step playbook, my system. The first is the analysis, which is how to read the market map, and we will spend a fair amount on that. The second is the strategy. I'm going to show you the Wavy Tunnel Pro trades to read the market cycles, and finally trade management and optimal risk reward. So let's get to the analysis, the market map for the Wavy Tunnel Pro. The first step in achieving consistency is to have a thorough knowledge of the market to determine possible future scenarios and be prepared to take advantage of opportunities that arise. And in our system, we use the market map in order to provide market context and increase the likelihood of successful outcomes. So for example, if you came into the markets today and let's say you were trading, I don't know, the futures markets, do you know how to read the market map to figure out where the market could go if we trade below or above certain levels? And in our case today, trade below certain levels. Well, that's what I'm going to show you. And if you're trading certain stocks, the same thing. It really doesn't matter. And if you're trading Forex, it's the exact same thing. Why? Because the market map, which I'm going to show you, applies to all asset classes, and it applies to all different time frames. And this is based on really my forte, which is Elliott wave analysis. Ralph Nelson Elliott studied various market indices over a 75-year period in the 1930s, and he was actually bedridden, from what I can understand, from what I read, and he discovered that stock markets traded in repetitive cycles, and that these cycles or waves reflected the emotions of investors. So how did I get involved with this? Well, we hired, when I was working on the desk at JP Morgan as a Forex trader, we hired an analyst from the Chicago Board of Trade, and he introduced Elliott wave analysis. What did I know at that point? I was an interbank trader. I was just following the price action as best I could, and I started to learn about Elliott wave analysis at that time. And there are other things that he taught us, but when you're on a desk and you're fielding all of the customers and all of the banks, it was the interbank market. It was, different today. Nothing was online at the time. It was all calling out for prices, and I had to quote prices as the British pound trader. But I learned all about Elliott wave analysis, and it piqued my interest. And that was the beginning, and I never looked back. And that was in the 1980s. And where are we today? And really not much has changed. And then we get to Leonardo Fibonacci. I know you've all heard of Fibonacci, and he discovered the Fibonacci sequence of numbers. And the Fibonacci sequence, which you see on the screen now, it's where all of the retracement ratios and the expansion ratios come, that we're all very familiar with if you know anything at all about Fibonacci, and I'm sure most of you do. So he's the other key player in this picture. And this is the market map. On the left, you have 5 waves up, that's your trend, and you have 3 waves down. This is called a zigzag pattern. And I'm really big on reading patterns. Like, I'm a visual person, and I'm big on reading the price patterns. And you see I have some red arrows pointed at the ends of market swings. And what do you see there? You see some classical patterns, such as head and shoulders formations at the end of wave 1, at the end of wave 3, at the end of wave 5, at the end of the B wave. And then you have reverse head and shoulder patterns at the end of wave 2, at the end of wave 4, at the end of the A wave here. So these are called pivot points, swing highs and lows, And you will begin to recognize these chart patterns once you're aware of them. And you also see head and shoulders formation, 1, 2, 3 reversals at market tops and after market retracements. And it's really important to notice that. And the one key thing about Elliott wave analysis that every Elliottician will tell you is after we finish a swing move, the first move down, if we are going to reverse, will be a 5-wave sequence. So just keep that in mind. But these patterns are tied to collective human behavior related to the Fibonacci numbers. You can see the Fibonacci sequence here. We're not going to get into that, but it's all fascinating to me that it's all related, and all of these are called market cycles. And what I'm going to show you now is how to apply this to the market. Just a little bit more before we get to the charts. Warren Buffett said, "Be fearful when others are greedy and be greedy when others are fearful." So that's a contrarian attitude approach. When the market is moving up and we've exhausted the price action, this is when traders tend to get greedy, optimistic, and exuberant, and they load up, and they don't think about that this could be point T, the end of the trend, and that we could be in for this. Okay, and this is what we're seeing right now in the indices. We're seeing this. So up here, it's, oh gee, nothing can go wrong. And I really do believe that many traders aren't prepared for this. In order to be prepared for this, you have to prepare your brain. You have to plan for it. You can't just wing it. Like, it's really important to do the analysis and to say, I may have to protect myself if I'm long some positions. Maybe I should get out, take some profits, or maybe I can hedge. There are various things to do to protect. And then what happens? The market rolls over. We have the initial 5-wave move down. That's called the A wave. And then we have a B wave correction followed by a C wave. And this can be a very, very vicious move. Now, maybe you know that wave 3 is usually the strongest wave when in an uptrend or in a trend move. Well, wave C can be just as vicious as the wave 3 is. Only with the wave C, you're sitting here holding the bag maybe up here, and you're losing money down here. And this is where traders become fearful, panicked, discouraged, and end up bailing. And this is where we have to change our brain and think buy. Up here, we have to think sell. And it's a process. It's a process to work through the market cycles and work through the mindset once we understand the market cycles and how we have to behave at certain junctures, at certain swing points. Up here, we don't want to get greedy. Down here, we don't want to start bailing. But we need to be in the right, have the right position. So obviously, if we're long and we held it all the way down, it's hard not to be fearful, and it's hard not to bail. So this is the 8-wave market cycle. The 8-wave market cycle is good for uptrends. This is an uptrend, and this is a downtrend. It really doesn't matter. It really doesn't matter, okay? Now on the right, this is what it looks like on a chart. Now I'm going to show you a whole bunch of examples, but I've just labeled this 1, 2, 3, 4, 5. This isn't automatic. I just labeled it and then ABC. But look at the pattern. This is the wave. This is the tunnel. Look what happens here. We have a wave 3 and we have a peak in the awesome oscillator. And then we have a wave 5 and we have a lower high. This is called divergence. And when I see this on the chart, no matter what the time frame is and no matter what the instrument, when I see this divergence, I'm already thinking, okay, maybe we might be ready to turn around and do something like this. I don't sell automatically at this point. I watch it, but I prepare for a move similar to this. So for example, if we move down into the wave and then we have a correction, and we fail to take out these price highs and then start to roll over again, I'm thinking once we break down below this wave that we're going down here. That's what I'm thinking. Why? Because I'm programmed to think that way, because this is my system, and I've seen it, so many times that we actually do make it down here and make it even below when we start to roll over. So when we're down here, I don't think, well, or when we're here, I don't think, well, we're going to make new highs. I prepare myself for that eventual rollover. Let's talk a little bit about the strategy now, the Wavy Tunnel Pro setups for trend continuation and trend reversal based on what we just talked about with the 8-wave market cycle. The second step in my playbook to reaching the path to success is to have a highly effective strategy, which is easy to understand when making a trading decision. After a good analysis, strategy is used to identify the exact entry point, the stop loss level, and profit target, and to know when to trade and when to stay out of the market. Removing the emotions is key. The one good thing about the Wavy Tunnel Pro, like I'm not a wave counter, okay? I learned Elliott wave analysis, but I'm a trader first over being an analyst. I'm not an analyst. I am not going to analyze the markets for you on a regular basis as a service. That's not what I do. I trade the markets. So as a trader, I wanted to work with a system that would mimic the Elliott waves and the wave cycles. And that's exactly what the Wavy Tunnel Pro does. So I can look at a chart and see where we are in the cycle. I can tell if we're in a wave 3. I can tell if we've just done an ABC correction. I can tell, and the Wavy Tunnel Pro setups are based on the 8-wave market cycle, which you will soon see. And the other point here is once you do your analysis and you have your strategy, this is called the trade plan, where you have your entry point. That could be your trigger for getting in, long or short, and where you're wrong, stop loss level, where you're wrong. And yeah, it's really important to keep a stop loss level in mind, even if you don't put it in the trading platform. It's important because you need to know when the entry is wrong. Not every trade is going to work out. And the difference between profitable traders and unprofitable traders is being able to trigger that stop loss so that the losses remain small and the profits can be bigger than the losses. And then, of course, there's the profit target. And you might even scale out for profits, okay? So the Wavy Tunnel solution, introducing our roadmap and simple timing tools. What if you had a system that explained how to understand and trade the market cycles using the market roadmap and identified where to place trades for optimal entries and exits? And what if you had simple tools to trade the roadmap effectively and scan for trades and follow a trade plan to effectively trade the setups? And then what if you had accountability to do what you say you're going to do? Accountability is really important because as traders, we all know we're sitting in our office, we're at our computers with however many screens we have, and we're by ourselves. I mean, tell me about it. I'm by myself here. I live in a big house with my husband and my dog. My dog, stays next to me all day long when I'm at my computer. I'm not here all day long, but when I'm working. Okay, so that's why it's important to have accountability, whether that's a trading group or some kind of network of traders. Master the market cycles so that you can anticipate market direction with confidence. You want to have a good idea of whether the market is trending or whether we're in a sideways market. Achieve better timing for trades. That's important to improve trade entries and profit targets. And then engage in rules-based trading. Enhance consistency through structured trading. Develop independent thinking with clear trading goals. It reduces stress and uncertainty in trading. It's, so many traders follow different mentors, and that's great. I mean, it's really, really good. I always had an Elliott Wave analyst by my side when I was at the bank. Always, 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 because I was trading for the bank and I hired, I had an Elliott Wave analyst by my side, an analyst who I could bounce things off of and say, well, what do you think about this? I'm thinking about taking this trade, and they would show me the analysis. So I always wanted to think independently and not follow anybody else. Well, today there are so many different mentors out there, and you've heard so many this week. And I think it's fantastic that, oh, my phone, I apologize, I can't get to it now. Okay, just ignore it. But the important thing is that you develop independent thinking and that you can say, yeah, I agree with that trade. That looks really good. So there's nothing wrong with subscribing to a service, but then having your own way of looking at the market. I mean, it just confirms things for you. Okay. Now, before we look at the setups themselves, here's the DNA of the Wavy Tunnel Pro method. Elliott Wave gives us the rhythm of the market, the impulse and the corrective phases you just saw. Fibonacci symmetry allows us to measure timing and price levels, identifying where markets are most likely to turn. Harmonics patterns enable us to confirm price targets at key Elliott Wave and Fibonacci levels. And momentum shows us whether a trend has strength or exhaustion is setting in. And together, these four elements create a structured, rules-based way of reading markets. And from this DNA, we get the Wavy Tunnel Pro setups. Okay, so let's get to the 6 core setups, simplified. And I'll just go through it fast now, but then I'm going to show you examples. So the start of the trend is the breakout 1. It's the trend kicking off in one direction or another. And then we have our trend continuation trades. We have a breakout 3 trade, which is really the wave 3 trade, riding the strong trends. And then we have the breakout 4 trade. It's the blast off after a serious correction. So after a wave 4, that was the ABC zigzag that I showed you on the chart, but we're going to get a lot more in so that we internalize these setups. And then the end of the trend trade is called the PW, the price to wave. That's a market reversal to the wave. And then the fill the gap is that extended correction down to the tunnel. And I'm going to tell you what these moving averages are so you can set it up yourself on your charts. And then we have sideways range bound markets, which is just another setup that we use. So it's simple, visual, rules-based, designed for clarity and repeatability. This is the Wavy Tunnel setup right here on the right. And this is from our dashboard. It's a screenshot from our dashboard, which is it's a web-based platform. These are the moving averages. Like everybody asks me, what moving averages do you use? So I finally started to tell them in my presentations. The green is the 12 EMA. The wave is the 34 EMA on the high, low, and close. Those are the purple lines, the 3 purple lines. Okay? And the tunnel is the 144 and the 169 EMA. If you set this up on your charts, you will be able to read the market cycles. Excuse me. And put the awesome oscillator on your charts as well. You're not going to be able to get these semaphores, but I will tell you about them. I will tell you about them, but you will be able to get the moving averages. So what is the start of the trend? The breakout 1. That's when the wave crosses above the tunnel for an uptrend, or the wave crosses below the tunnel for a downtrend. The way I define trend is when the wave is above the tunnel, we're in an uptrend. So on this chart, the wave is above the tunnel, we are in an uptrend. Now, We happen to be in a correction here, a significant correction, but the wave is still above the tunnel. Let's talk about the trend continuation trades. The breakout 3 are the trades on this part of the curve. The wave is separating from the tunnel. Price goes into the wave, territory of the wave, or if it's a very steep trend, into the filter. This is the 12 EMA filter. So on this side, we're in the breakout 3 formations. Bounces off the wave to buy, okay? The breakout 4 is down here. Once we have this significant correction and we start to see some reversal candles, excuse me, we start to see some reversal candles, this is where we find support down here. We need to find support down here, and this is our breakout 4 trade looking for the next leg higher. As soon as the wave starts to cross below the tunnel, this trade is off. Like, it's off. The wave has to stay above the tunnel. And then finally, the end of trend, which occurs up here, we have the price to wave. So that would be this move into the wave. That's the initial move. And then remember I said that would be the A, and then we have a B. And sometimes the B wave retraces this move down and moves up, but sometimes in this case, it's sideways. And then we have the breakdown. And this is called the fill the gap trade. It's the gap between the wave and the tunnel. That's what it is. So these are the basic wavy tunnel setups. Now, the good news is we can scan for all of these setups. How cool is that? We can scan for the breakout 1 trade, the breakout 3 trades, the price to wave trade, the fill the gap trade, and the breakout 4 trade. And this is, so that's what we can scan for on the dashboard and on some of the other platforms that we're on, and hopefully we'll be on Metastock as well. We're working on it. Okay, this is the dashboard. I just took a printout today so I can show you the different wavy tunnel setups across the top. I already told you what the daily trend and the weekly trend is. What it means that the wave is above the tunnel. So in all of these charts, the wave is above the tunnel. On this weekly, the wave is below the tunnel. Okay? When it's yellow going sideways, the wave is in the tunnel. It's touching the tunnel. That's what it means. And then we have the price to wave on the daily and the weekly. The reason why you're seeing daily and weekly is because this is an end of day scanner. It's an end of day dashboard, which means that at the close of business every day, at the close of the markets, that's when all of the calculations start. And at the end of the night, everything changes. But during the day, when you're looking at the charts on the scanner, it's from the night before. Now, you can get live markets on the scanner. You can. So that's not an issue. But the daily and the weekly, for purposes of the scanner is only going to be updated once a day, and that's at night. Now, what we also do is we can get notified of if we're scanning, let's say for the breakout 4 trade, I can set it up as a dynamic watch list, and I set it up so that I get notified every night with the new list of prospects, the new list of markets. And this scanner scans, I think there are over 4,900 instruments on here now, including stocks and futures, but anyway, it's end of day, and Forex and cryptocurrencies. Okay, so these are all the setups that you recognize that I taught you about. PW, daily, weekly, fill the gap, daily, weekly, breakout 4, daily, weekly, and breakout 3, daily, weekly. Trend, daily, trend, weekly. So it's really very, very powerful. There, you can also filter for whether it's optionable or not, because many traders do trade options and they want to just trade instruments that are optionable. And then you can set this up. There are many other columns that you can set up. So this is the percent daily change, the sector, the volume, the price, the symbol, and you can also set it up if it pays dividends and what the ex-dividend date is and what the earnings date is. So there are other features here, but I just wanted to show it to you. Okay. Now let's learn and some of these setups, because you can already set them up yourselves. I've already given you the moving averages, and you can set it up yourselves and start to look at the markets in this way yourself, so that you can learn how to read the market cycles. So this is clearly an uptrend on the left here, and when the wave is separating from the tunnel, that's good. Now look what happens up here. Up here we have divergence, and I'm looking at the divergence with the awesome oscillator. So price makes a new high and the awesome oscillator makes a lower high. That's the first light bulb that goes on that maybe we're due for a correction. We also get the purple diamond up here. Okay, the purple diamond occurs at the biggest swing move. So here is the swing move. We have the purple diamond down here and the purple diamond up here. These diamonds come in pairs. They come in pairs. So if we have a lower one, we're going to have an upper one. Okay. So that's the PW trade. The fill the gap, or that's the end of the trend. So the PW trade is once we have the end of the trend and price starts to move down into the wave, that's the PW trade. In this case, we moved back up, we failed to make a new high, and we rolled over and we went below the wave, and we're looking for a move down to the tunnel, and most likely below the tunnel. Okay, most likely below the tunnel. But first, we have to identify the exhaustion point up here so that we can enter with confidence. This is how to read the market cycles. This is beautiful. You don't have to count the waves. You don't have to count this correction in here. Literally, you see this, and as long as we fail to make a new high, you're looking for some kind of drop, most likely below the tunnel here. If the market is really strong, you're not going to get it all the way to the tunnel. You might get it halfway. Okay. Just like we have the bearish, which we just looked at on the right, okay, change in trend. On the left, we have the bullish. So in this case, we've been in a downtrend. We've been in a long downtrend. And when we're in a long downtrend, I'm not interested in buying, I'm buying the stock, because I only like to buy stocks that are where the wave is above the tunnel. That's just the way I like to trade. But in this case, the wave is below the tunnel and we get divergence down here. Price makes a new low. And this is a good, it's a good opportunity for a move back up to the tunnel. That's as far as I would take it personally. I mean, if I just, wanted to do an option or I'm thinking that it's going to go up to the tunnel, I would, like I said, I won't hold any long-term positions unless the wave is above the tunnel, but maybe for a short-term trade, a little swing trade, yeah. So this is called a bullish PW fill the gap. The market moves up to the wave and it actually moves above the wave. We have a correction and then we have a continuation to the tunnel. Now, if this is going to continue on up and we're going to have a complete change of trend, the wave has to trade above this tunnel. It has to. Otherwise, this is where I'm out. Like, I am out. I'm not interested in holding it any longer, because I know that we could easily come back down here once we hit the tunnel, or maybe go a little bit above, which we've done. We could go even a little bit higher, but I know that I am not going to invest in this significantly unless the wave is above the tunnel. And then on the right, we have divergence up here, and we have the nice correction to below the tunnel. That's the bearish PW fill the gap trade. Okay. Let's talk about the breakout 4 trade. So we have the correction, and now we're looking for the breakout 4 trade. So in Elliott wave terminology, this is what we label a wave 4, looking for a wave 5. It can also be a wave 2, looking for a wave 3. And corrections aren't created equal. So just because we come down here, it doesn't mean that we're going straight up and we're making new highs. No, I mean, the market can trade sideways for a while. So it can trade higher, maybe to a Fibonacci level, maybe 50% of this move down, and then it can move down again. I mean, and that would be considered a complex correction. And then if the wave crosses down below the tunnel, we are no longer interested. Like, it means that the market will probably go lower. That's what it means. And I'm going to show you some weekly scans and some daily scans. You know, because of the corrections that we've had of late, we have a lot of weekly setups as well as the daily setups. There are times in the market cycle when we don't get a lot of dailies, a lot of week, what should I say? We have more daily setups, and now we're getting weekly setups because we've had more significant corrections. The breakout 4 trade, this is a breakout 4 sell on the left. But again, like if you're long and you want to take profits up here, it's still called the breakout 4 sell. I'm not saying that it's going to come down after this. I don't know, but it's a good time to get out. To go short, I don't know. You have to really know the stock if you feel that it's going to come down and that this is a stopping point. If you had plans to sell it, this is a good time to do it. And then on the right, we come down below the tunnel, and this is the time to buy it. And if you have any questions as we're going, I don't know. I guess we'll have time afterwards for questions. If you trade futures, this is the why. Okay, these are older examples. YM on the 5-minute, okay? The most important thing is that you recognize the pattern. Do you see how this wave separates from the tunnel, and we have a nice price to wave, and then we have a sideways move, and we have a fill the gap trade. In this case, we didn't quite go below the tunnel, and then this is the breakout 4 trade. And what do we get? We get the gray arrow below the tunnel. In this case, we made a new high. So this was purple, and then it shifted to the right because we made a new price high. Okay, so this is the pattern for the PW fill the gap, followed by the breakout 4. And of course, yeah, and this is the divergence also. Now we have divergence over here as well, okay? Price made a new high, and the awesome oscillator made a lower high. This is gold on the 1-minute chart. We had another correction down. If you're day trading, I mean, this is a classic PW fill the gap trade, and this is where the market bottomed on this particular day and then started to move up, and it actually continued on moving up after this. But I don't remember if this was the low before we completely, took out these highs. And now, of course, gold is correcting. So this was in the part of the market cycle where it was still bullish. And when it was still bullish on the bigger time frames, like the daily or the 4-hour, that's when you want to buy on the dips, and you want to look for this setup. Because if it's bullish, you don't want to go short. You don't want to go short or take your profits until the bigger time frames get you there and show you that, okay? Here's another example looking at the 60-minute, because I said that it works on all of the different time frames as well. Because the markets are fractal. That means that the market patterns, these patterns repeat themselves over and over and over again. And it really doesn't matter what the pattern is, what the market is. You could be trading crypto, you could be trading, stocks, you could be trading futures, and on the daily chart, on the 5-minute chart. It really doesn't matter. And in our program where we teach you how to trade these, we do a top-down approach, and we show you what it means to look at the daily and then trade the smaller time frames if you're day trading, for example. So we explain all of that. But this is another example on the hourly chart where we had the purple, we had divergence in the awesome oscillator, and then we had a nice A, B, C move down below the tunnel. And this was the bottom. I mean, this setup occurred like a lot when the indices were, consistently moving higher. We would get these sell-offs and then into the afternoon, and then the afternoon market would take us higher, like just consistently. So if you know the pattern and you look for it, I mean, it's great. You can look for it and get into the market at this time. Okay. Now, this is the dashboard scanner again. And on the right, we have GoDaddy. Remember, I told you that we have some weeklies that are setting up. So I produced the scan, and this is the breakout 4 on the weekly. And let me just tell you what these arrows mean and what these diamonds mean. We have let's see, GoDaddy is where? It's down here, and it's diamond 3. So the diamond means breakout 4 ready, okay? This arrow means breakout 4 signal. So when you get the arrow up, it means that price has already moved up and closed above the 12 EMA, this filter line. And that's just a little way of saying, don't just buy a falling knife potentially. Wait until price shows a little bit of strength and starts to move above this filter line. So that's the up arrow versus the diamond. But this is a beautiful ABC move. Price to wave, market retraces, fails to make a new high, and then we come down. That's GoDaddy. Okay. Now, I said that this is as of the close of business yesterday. Okay. It's not live. We can get live markets on the charts, but the live markets are, they don't give you, they don't have the wavy tunnel setup on it. Okay. It's just price action. Here's another example. The other thing that we can see on the, I set up this scanner, and I just wanted to look at the up arrows, so the ones that were ready, that had the signal. Now, this is Eli Lilly. This signal occurred 11 candles ago, so I just wanted to show you how that works. If I just count backwards, 1, 2, 3, it's right over here where the candle closed above the filter. That's when this came on the dashboard. Now, you could have said, show me all of the ready signals. It would have gotten you the signal right over here. And I remember looking at it when the Eli Lilly signal came on, okay? And truth be told, I was very happy about that, because I actually do have some of this stock. So I was very happy, okay? And now we made new highs, okay? So this gray changed to purple because we made a new high, right? We had a beautiful correction down to the tunnel, and that was to be expected once we started to do this. See, once we go below the wave, it's questionable, and it's psychologically, people think, okay, we went below, we're up here, we're going to go back up again. Yeah, you could go back up again, but as soon as we start to roll over, the likelihood is that we're going to come down to this tunnel. I mean, it just works that way. It just works. And because this is all based on market psychology, and traders tend to like hope and wish that it's just a small correction and that it's going to go back up again if they're long. And then this happens, okay? It's not so pleasant. You have to be prepared for this move down here. So that's another example. So all of these numbers here show you how many candles ago. Here's another example. Now I scanned for, and I was scanning on the weekly charts today, okay, to show you some examples on the weeklies, because we have some really nice weekly examples. So now I scanned for the ready and the signal. Okay, this is the ready and this is the signal. So Vertex Pharmaceuticals. This correction is different than what we saw with Eli Lilly. Like this came all the way down initially and then came all the way back up. We failed to make a new high, and then we came down again below the tunnel. So this was like a volatile correction. Not all corrections are created equal. They're all different. Okay, so this is another example of what a correction can look like, but the bottom line is this found a bottom here. Okay, and the dashboard will let you know, will show you the bottom, you scan for it, and you decide what you want to do. Okay, you can also, what's really neat is you can also put in your own watch list that you follow, and you can, you know, look at the markets, and once you understand these setups, you can be able to follow them. And there's a lot more to understanding what goes into this, and that's what our training is all about. Here's another example. Pilgrim's Pride right here. And oh, the other thing that I like, what I filter for is I filter for that the trend is up. The weekly trend is up. I want to make sure that the weekly trend is up when we come down here, because if it's not, if the weekly trend is down, there's no way I'm going to be thinking about buying the stock. There's no way. The weekly trend has to be up. So here is another nice move down into the wave. We have a small retracement, and then we roll over and we have this bigger move. Okay, but I want you to just notice the pattern. Just notice the pattern. Okay, it's a nice pattern. Now over here on the left, this is where we would be buying off the filter or off the wave, you know, looking for the continued move higher. Now we also have, we started out with our scanners on MT4 and Forex, because that's where I started, in Forex. So we have a great scanner on Forex, and we have a few other things. We have trend line breaks, which is really, really neat. Now you can recognize this pattern already. This is the dollar yen, and this is from the radar screen, we call it, that I took this out. And let me just see which. Yeah, okay, so this is the 1 hour chart. Yeah, you can see this is the price to wave and the fill the gap trade. Notice you see this yellow trend line with an arrow. This automatically prints on the charts, and what this is saying, we are going to continue to move down until we get a gray arrow. And that's exactly what happened. This came up on the radar screen, and right here I have a little cheat sheet. Target Noble, royal yellow, color yellow, target Noble. We have 4 different trend line breaks where it tells you what the most likely target is going to be. The Noble target is the gray arrow. So not only will it tell you that you're going to get a gray arrow, but you can also see it as part of the wavy tunnel structure, that we are going to go below the tunnel. And that usually coincides with a gray arrow. So this is kind of neat. Okay, here's another example. this is a Forex case study. This is the pound on the hourly chart, and we have a few different trend line breaks. So this is where we didn't quite get a gray arrow going down for the breakout 4 down, but we had a beautiful price to wave, fill the gap trade into the tunnel, and now we have a trend line break. And that trend line break was saying you are going to get a yellow diamond. So we haven't gotten the yellow diamond yet on the downside. And so these arrows they print automatically. Okay, the arrows print automatically. This is all automatically drawn. Okay. This is what the radar screen looks like for Forex. And you can set it up however you want. Whatever instruments that you can get on an MT4 platform, you can put here, and you can set it up. I know in the trading room, they set up the 1 minute. Neil sets up the 1 minute, the 5 minute, and the 15 minute because he's looking for, day trades, very quick trades. And I've set it up for the bigger time frames, the daily, the 4 hour, and the 1 hour. And there's a lot to read into this, and you can, there's just a lot here. So this all means where you have a 1 with a star, this means you're going to see the end of the trend, like the purple arrows on all of these. Okay. So here's an example for the daily euro. The daily euro. Up here, we got a purple arrow, and that was 8 with the diamond, 8. So that was 8 candles ago. And then, of course, we got some trend lines and some trend line breaks, and we know what the targets are going to be by looking at our cheat sheet. So it's really very powerful. And, I get very excited because it's all Elliott wave based. So again, these are the basic Wavy Tunnel Pro core setups that we just talked about. And to summarize, you're looking for end of trend trades, and you're looking for breakout 4 trades. So you're looking for finding C for the breakout 4 trades. The gray arrow kicks off the trend for the wave 5. That would be over here. And then you get another one over here. And then the blue and the red dots into the wave show entry points for our breakout 3 trades. And then the purple arrow is the end of the swing. And we start all over again with the PW fill the gap trade. So that's how it works. Okay, I just follow very specific criteria in my Wavy Tunnel strategy to evaluate if I want to trade a specific setup. I remove subjectivity with the specific criteria. The greater the objectivity, the fewer the emotions. And that's a fact. The more objective it can be, the fewer emotions you will have. The Wavy Tunnel Pro strategy has what I've always been looking for, namely clear, defined, understandable, and consistent rules that are not complicated to learn. Even people who have never had anything to do with the stock market can learn these strategies quickly. Thank you, Christian. This is the trading system that has worked for me for over the past 30 years and counting, longer now. It's actually over 40 years. Oh my gosh. But this is not about me. It's about you. And I believe that if you apply this playbook in your trading, you can become consistent and achieve your trading goals, whatever they are. The Wavy Tunnel Pro has been called a solid master's in trading education. And it's for all, like I said, it's for all asset classes, instruments, and time frames. Okay? We went through a lot of setups today, and I taught you a lot. If you want to remove uncertainty in trading and gain total clarity about what to trade, when, and how much, and get massive confidence when you learn to identify these high probability setups and finally achieve consistency in your trading, hopefully this is specifically for you, new traders and experienced traders. So I'm asking you to join the wavytunnelpro.com. That's the website that you would go to, wavytunnelpro.com. I'm asking you to join this program. It's on demand. I just had it live for a week and all of the videos are there, but I will be there to have a few coaching sessions with you, but it's all there. So it's all in the members area now. And we have three main sections: the Elliott Wave series in the Fibonacci section, the Wavy Tunnel Pro strategy section, and the harmonics analysis section. And then we also have price action trading. That's another bonus course that we include. Okay. So for new traders, it's important to minimize the expensive trial and error that most novice traders experience when they get introduced to the markets. So this program will put you light years ahead. Like, it will really show you how to read the market cycles. And for experienced traders, this program is perfect for trading pros who want to continue improving their game. I can't tell you how many experienced traders are working with us because it's just the missing piece of the puzzle for them. And no matter what your preferred asset class is, currencies, futures, CFDs, options, stocks, you'll be able to apply the Wavy Tunnel Pro system to whatever you're trading and whatever time frames you're trading. So this is for day and swing traders, and it's for position traders and long-term investors. Okay. WavyTunnelPro.com is the website. The indicators, the platforms are on we have them on the Wavy, we have the Wavy Tunnel Pro dashboard scanner, which I showed you, MT4, which I showed you, NinjaTrader, MotiveWave, TradeStation, and Wealth Charts, and hopefully we will get them on Metastock as well. So these are the prices, but you can, I'm not going to go through each one, what you get. You can go to wavytunnelpro.com. It's a phenomenal program. There is really a lot there. And if you're wondering whether this approach is really making waves in the trading world, haha, waves, I'm proud to share that it's been recognized by two major publications. USA Today featured the Wavy Tunnel Pro dashboard as a consolidated hub for market scanning, strategy training, trade plans, and more. And the International Business Times highlighted my journey and the unique missing link I've developed to help traders move from confusion to confidence. So being featured in both publications reinforces what I've been showing you today, that this program isn't just another, it's really a great solution that will transform how you approach the markets. So here's my message to you. Thank you for being here live. Clarity, confidence, consistency, that's what the Wavy Tunnel Pro delivers. And if you're ready to stop guessing and start trading with structure and really, jump into learning the market cycles and how to trade them, then join me at wavytunnelpro.com. Okay, your 3-step playbook to consistency starts right now. To wrap up, Elliott Wave gives us the map and the Wavy Tunnel Pro gives us the compass. Together, they turn cycles into clear, actionable opportunities, helping you trade every trend and correction with clarity and confidence. And if you have any questions, you can always reach me directly at Jody at fxtradersedge.com. Please scan the QR code or go directly to wavytunnelpro.com to sign up. And I hope you enjoyed today's presentation, and I look forward to seeing you in the training. And if we have any questions, I'm happy to answer a few.
We do, but we got to move quick.
Okay.
Let's see. Well, Daniel, this one's an easy one. Daniel says, "You're the best one I've heard all day." Thanks, Daniel. I'm glad you liked it.
Thank you. Wow, that's the compliment. Thank you so much.
David wants to know what the yellow line is.
The yellow line?
Mm-hmm.
It's one of the bungee lines. The yellow line is the bungee lines. It's the thickest bungee strand if you think of a bungee. So it's the least elastic, and it's going to tell you where the ends of moves are.
All right. And then he also asked, what does PW space W mean?
Price to wave.
Price to wave. And it has a 0 to 100 range, question mark?
No. The PW, the price to wave, that's just the setup. where we move down into the wave. We've had an extended move.
Okay. Is there also a PWW?
No, there's a PW, fill the gap.
Okay. All right. I just want to make sure I got the question correct. I also wanted to, so I've got Jody's email in the chat. I've got the URL in YouTube, and I've got it on GoToWebinar. I also wanted to let you know, if you want to know when this is available for Metastock, chat in with us, and we're taking a list. And as soon as it's available, we'll let you know. All right.
Great. Yeah.
That's
excellent. Excellent. So you got wavytunnelpro.com. That's the link that you put in, right?
Correct. And then I made sure it worked. I also put in your email, jody@fxtradersedge.com.
Amazing. Well, thank you. Thank you, Jeff. It was great to be here, and I hope everybody learned something today. I really wanted to deliver value and to teach you guys something.
Cool.
So, yeah. So
Great to have you.
Thanks so much.
You bet. No problem.
Okay.
Thanks a lot.
Bye. Bye.
Bye. All right. Yes. Okay. All right. As we move on. Oh, here. Let me do this. Hey. It's good to see you. Thanks for coming. I hope you're enjoying yourself. Thanks for being here. We are cruising through this week. I can't believe how fast it's going. It's good to have everybody. I hope you're enjoying the event that we're doing, and I hope you're learning things. And if so, that'll accomplish one of my goals. As we move on to our next presenter, I do want to say thank you to Stocks and Commodities Magazine. Stocks and Commodities Magazine, they've been great sponsors of the Online Traders Conference and the Traders Summits that we do, and they've been pretty consistent in supporting and being a sponsor of our events since we started doing it like 16, 17 years ago. So it's a great magazine. They've been publishing since 1982. They've got 17,000 articles. Do you know if you're a member of Stocks and Commodities Magazine? It'll cost you about $97. If you're in the US, that includes a subscription that's going to get to you every day. Or I'm sorry, every month. But as part of that subscription, you get access to a searchable database archive of all 17,000 articles that they've done. So great magazine. They have a great reputation for doing the stuff that they do. And we really, really appreciate them supporting all of the events and bringing this, helping us bring this event to you guys. So big, huge thank you to them. As we move on to the next speaker, we're not going to forget to give away another prize. And let me just go ahead and figure out what that is. Okay. All right. So what we're going to do right now, and I'm going to have Peter help us with this, as we've done in the last couple of times, we're going to give away a Larry McMillan newsletter. He has 3 newsletters. Larry McMillan wrote Options as a Strategic Investment. Very, very much a really good options guru, very well known, very well respected. He does 3 newsletters. We're going to give a 1-month subscription to each one of those to the next random lucky winner. Now, just to kind of talk a little bit about how you can win, if you're registered and watching in GoToWebinar, you've probably heard this all day long. If you're registered and watching in GoToWebinar, you're already qualified and entered to win. If you're watching us on YouTube and you haven't yet, make sure to hit the to be entered in the prize box at the very top. That'll click on that link and register. That'll add you to our database. And as soon as you register for the conference, you'll be eligible to win all of the door prizes. We have, after this Larry McMillan prize, we have one more, the mega prize that we're giving away at the end of the day. But we also are giving away prizes all day tomorrow as well. So if you're watching on YouTube, like and subscribe. It helps a great deal. But also register so that you can kind of be part of the drawing and part of the contest and hopefully win. So now what I'm going to do is I'm going to have our next guest come on and help us pick a winner. Peter, let's go ahead and get your audio started. And when you do, I'll tell you how you can help me out. How are you doing, Peter? Hello? I can hear you, but that doesn't sound super good. Yeah, there's a lot of distortion coming through, Peter. Can maybe do you have a microphone that you can make unplug and plug back in?
Hopefully it works. Hold on a second.
Yeah, I can almost hear you. I mean, I can hear you, but I can't. I can't hear you. You know what I mean?
Can you hear me?
I can. You're really soft now.
Can you hear me?
I can hear you. Yeah. Let me see. Let's see.
Yep.
It's a little bit soft, but before it was really loud.
Made it worse.
Yeah. Okay.
No,
Let me adjust my volume, and you're coming through clear for me now. So that's good. Do you want to help me give away that Larry McMillan prize? Are you still there?
Volume.
Oh, it might be. I know what the problem is. It your settings didn't pick it up yet.
Sounds like they're working on it. All right, while he's doing that, I'm just going to go ahead. We'll come up here.
Where did you sound? Oh,
Headset 570.
You sound great right now. Don't touch it.
why can't you hear him?
I can hear you now, Peter. You sound great.
Yeah, mic is on.
You can't hear him?
No.
He
Can
sounds
you hear
great.
me?
Yes, perfect. Can you hear me?
I have to probably
Okay. We can hear you, Peter.
Hello?
Oh, hey, can you hear us?
Yep, can you hear me?
Yes, I can hear you. Can you not hear me?
I can hear.
You sound great to
I
me.
cannot hear you.
Okay. All right. In that case, I'm going to give you a big thumbs up when it's time to go.
Look,
And
there is
hopefully
a
you'll get the
conflict
point.
somewhere.
I can hear you good. Let me make you the presenter right now. I'll do the random number generator. I'll let you know who the winner was. Here, let me go ahead and
This is
make
not a
you
problem, cousin. It's not a problem, no. It is a problem with some conflict somewhere. It's a go-to.
I'm going to call Peter real quick. It's funny, we can hear him really good, though.
Yep, so
Hey, Peter, I just want you to know that we can.
just on it is used in your
We can hear you great.
Okay,
I
perfect.
understand,
So we found the problem.
understand you can't hear us, but we can hear you fine. So
All right.
what I'm going to do is I'm going to introduce you,
Okay.
and then I'll let you go. And then when you're done, I'll just kind of take over like we normally do. Okay?
Okay, so I should hang up on the phone then.
Yeah. I wouldn't worry
Thank
about being able to hear us. If I need you, I'll call you.
Okay.
You should be able to share your screen with us though now.
Yeah, show my screen. Yeah.
I'll make sure we have the right one.
No, I'm fine with this. I have multi monitors as headaches.
Yeah, I do. I know. You have like 8 or something, right?
Yeah, 8 monitors. Yeah.
The screen I can see is right now is the presenter view, so I can see the side by side of the slide. If you want to just hit display settings and swap presenter and like right there at the top where it says display settings, if you click that.
Hold on, where is the display settings here?
It says show taskbar, display settings, and slideshow. It's in the upper left of the corner of the screen.
Which screen? My screen?
Yeah. Your screen that's showing the presenter view.
Can you hang up the other side? It's echoing. It's distracting.
All right. Fun. All right.
Okay, so what you need me to do?
I just need you to, so what we can see is we can see your presenter view, right? And not your presentation
Okay.
view. So we see the speaker notes, but there's a really easy fix for that, Peter. If you just click on display settings
Okay, display settings.
on that speaker view, and just, it should be right above the 19 years in the making, welcome.
Right.
There should be a button that says display settings. Do you see that?
Display settings.
Mm-hmm.
On a view.
Click on that.
Right here. Right here.
And it should say swap presenter and I can't remember what it is exactly, but it should allow you to swap the presenter view. Yeah, you're right there right now. That's the button. Click on that.
I'm doing it. It does not let me do.
Oh, yeah, that should be where it pops down from.
Hold on, I'll give it to Kajal.
Hello?
What's he studying?
I think over here. Over here. If you hover over it, you can see it. Okay.
Yeah.
Try to click on it. Try to
Yeah.
click on it.
That's where it plays. Oh, there you go. Oh, not right click though.
Click again.
It does
Yeah,
not do it.
Try on the other side, like where it says actually display. Just left click, not right click.
Left click.
It doesn't seem to be popping down like it should be. So, okay, let's try a little bit of a different approach. I think this is PowerPoint acting funny for us, which happens. What I would like you to do instead, Kajal, is I want you
Jeff,
to.
it does not let me do it. So I'm on a
Yeah.
PowerPoint, right? And in a view, let me see what the hell is
Okay, what I'm going to do here, I want us to change the screen that we're actually looking at and go to webinar, Peter, instead. So what I'm going to do is I'm going to actually kind of reclaim the presenter view. We'll show my screen for a second, and then I'm going to send it back to you. And I'm going to make you the presenter. And it should say, do you want to share your screen? And there should be a little down arrow, and it should allow you to select a screen before you hit OK. Let me know if you can see that.
screen 3.
Okay, sounds good.
This is 3. This is 3. No. Let me see something. Let me see.
Screen 3 is here. Press that.
Okay, it's showing that one. That's not the one. No. Which one do you want? This one's 6.
Okay, try.
Okay, I have a good feeling about it, Peter. Oh, it's still the presenter view.
It's a presenter view. So
Yeah.
what I'm supposed to do?
Oh, go ahead from here. Go slideshow. Hit F5. Let's see what happens. Hit slideshow from beginning.
Can you see it?
Yeah, I can see it. I can see the unexpanded view of your PowerPoint. So just hit from beginning and let's see what happens.
I'm clicking from beginning. It takes me to different monitor.
Huh. Okay.
Yeah, but he doesn't see. He sees.
I know. He wants that one.
Yeah.
What happens? I can see.
Jeff, can you see it?
I'll let you know in a second. I don't see anything actually written. Okay, okay. Don't touch anything. It works. Can you
works?
hear me? Yeah, it works right now. Are you able to hear me, Peter?
Yeah, I could hear you clearly.
Okay, all right. Well, I'm glad that we got there. Thanks for your patience, Peter. Sometimes we have a little bit of a technical snag. I know we've done this a number of times, but sometimes it just gets a little bit, you just have to work through it and not get
Right.
stressed. I
But
do want
usually
to.
they'll keep upgrading his
Yeah,
software, and then I get in trouble.
Not a worry at all. We got to where we needed to be. You can hear me, I can hear you. I do want to talk about you for a minute, and then I'll let you go, okay?
All right, we'll
So,
catch up the speed somehow. Okay.
yeah, Peter Dalal's been a longtime partner of Metastock back in about 15 years ago, or actually it's probably closer to 20 now. Peter probably knows the exact number, but back a long time ago, he wrote a product that was called the FX Traders Advantage, which is probably one of our most popular best-selling subscription add-ons of all time. Over the last several years, he's been working on updates to the methodologies that he uses. He's created a lot of very cool stuff that he's about to share with you. I'm trying not to be frustrated now, Peter. He's going to share you some of the stuff that he's worked with on over the last couple of decades in a product that he calls Magic Trader. And it's a really, really good product, so take a look. Peter, I can see your screen. I am here if you need me, and I'm going to let you take it from here. How does that sound?
It sounds excellent. Thank you for your help, and thank you everybody for waiting for me. Sorry about all these technology issues. We're going to catch up the speed somehow, because I understand there is another speaker right behind me, and
Yep.
I apologize for his delays. So we'll try to speed up. All right, so everybody knows my name. As Jeff said, I started with Metastock originally in 1990. In 2003, we decided to release a product called Forex Trader Advantage, because the Forex I started trading at 1999. I was one of the few traders in the country who took the risk of trading $100,000 contract back in days. There were no chart, nothing. So that's where I started. But before that, I was technically investor, then become a trader. So on and off, because I run multiple businesses. So I wound up understanding what I need to do to save time. And while my first product was out in the street, I was already under the next step where I don't have to do analytical work too much, right? So I don't have to deal with all this Mac team. This is too much for me. And I'm running around all over the country. So that's why Magic Trader took the birth, right? So basically Magic Trader, it's almost going to be 20 years next year. So we are 19 years in making, so we're still around, right? And my company is in business since 1998 as a corporation, but we started in 1986, 87. And it's well documented, but corporation is been around since 1998. So I like to do things different than market or gurus, and try to take challenges and challenge myself every single day. I wind up in inventing stuff, which is kind of to the scale people did not imagine I could do that. Let's see. So today we're going to talk about different things. I hold this manifested AI since I planted in there, and I won't even say nothing because people will not believe. I'll give you one story, and then we're going to catch up the speed. I have a friend from Silicon Valley. He used to be a Qualcomm CEO for overseas, and he showed me the document that Steve Jobs and he were very friend. He's a PhD in data, and he mentioned and showed to me that Steve Jobs in 1980, upper 80s, showed him that this is what he wants to do. That was iPhone. But he said, I'm ready, but all the peripherals I needed, people are not ready. But I could do this thing, and I saw this document. I was so fortunate. This is the same story with Magic Trader. where I got the exposure on Wall Street. I was just fortunate person, right? And the things people will never see that I've seen it. And both of my product has a lot of things to do with the real deal flow, liquidity, and Magic Trader is based on liquidity believeness from the institution, right? So we taking step back to create retail product. It is institutional product practically. So institutional game wording you probably never heard, but this is normal on a Wall Street on a high end of liquidity market. And it's not about the price, it's all about the liquidity moves the market. So those are the facts, right? And it is not the price is important, it's the risk involved and risk cluster. So we're going to talk about those things. Everything else is surrounded by these facts. So I'm registered, my company is registered for many, many years. Not only that, I had a Series 7 663. I let it go. I don't have time to explain, but I'm in a good standing everywhere so far, okay? And I still hold several licenses in different areas with the regulators, right? So the disclaimers are too many, you know what Laura said. So we're going to talk very briefly. Copies are available for anybody. I showed my email address. You can send it to me, or Jeff has it all the time. And every time we make changes, we give it to them. So I'm going to be very quick, otherwise we cannot finish in 1 hour. So trading is risky. Everything we do is for education purpose only, right? I'm not acting as an investment advisor, and please hire your own. And you should never trade money you cannot afford to lose, especially borrowed money. Don't do credit card transactions to do trading. That's crazy, right? Then CFTC rule 4.41, we are registered with CFTC, right? For many years, I think almost 20 years now. So according to CFTC, this is the best disclaimer I ever seen in industry. Everything is hypothetical. Even though your live trading is hypothetical and it cannot be repeated. If somebody's telling you consistent, regulators do not want us to even talk about consistency, guarantee, all this stuff. So they consider it's a violation. I'm not the attorney or regulator to people do all kind of stuff. Everybody runs red light. I'm not the guy who does that. I try to be conservative. So we could stay in another 20 years in business if I'm allowed. My daughter has taken over. All right, so options. I love options. I learned options by doing it, and that helped me to get Series 7 in 10 days, right? That's what the real reason was. I was forced to get, because I was doing structuring for Citigroup, one huge deal. So they told me otherwise they can't pay. All right, so that's how I wound up having Series 7. But option is the real deal, and it is the art you have to learn. And I love it. I do everyday trading with options. You don't need much money. That's the good thing. All right, this is our registration number with CFTC. We are still registered. We took some exemptions so I could do this education part. And I don't manage money. I will do it when I have my responsibility over, but I did manage people's money. Right? Intellectual property, we are big. You will see service mark, trademark everywhere. And we have a bunch of patents on both products, and many claims is being, granted to us, right? And we have some things in a pipeline all the time, right? And right now I'm focusing on educating people and trading myself. So AI was already embedded in there. I don't want to tell because people will hack my computer, right? And Metastack did a good job. Now feel protected, so we started opening them out. Later on, Jeff will tell you something, a couple of slides where those areas are. So I'm not going to spend much time, but we want those people who promote AI and Magic Trader. You cannot go and do anything with AI. We restrict people, otherwise we have to restrict them to have a license. And there is a reason. This technology is brand new, and we were ahead of AI. And I will show you some points. right? What you're getting is generating AI. We were talking about manifested AI back in then, 15, 20 years ago. All right, that's why I tried to tell you the example of Steve Jobs. Right? I'm not trying to impress any. I don't need to impress anybody. I'm debt free. That's what I care, and good family. That's what it matters. All right, and we are not allowed to give testimonials that CFTC and I mean told us to take it out several times. So we don't want to do it. Otherwise, they want to slap me with a fine. This is the heart of this business. Start swing. We teach that separately, and I do swing trading based on what I do, the scalping, or vice versa, and that has made me doing almost I cannot use that word, but I'm very happy, and my traders are witnessing what I do on a regular basis, right? And we are not in a proving business. I share a lot of things with people who has a confidentiality agreement in my room. All right. So what we're going to do, we're going to talk about 5 ingredients. They are based on risk clusters, right? And there are catalysts I'm going to mention to you. And these are really institutional choices. And if you pay attention to and follow them, you're going to do well. There is no guarantee. So it is very important we name as the ingredients, but reality is risk clusters. And using Metastock, we prioritize them, syncretize them. I filed for patents for that. So I'm going to show you something which is going to shock you, how many risks are in the market. It is shocking to many people, and I kept my mouth shut. I only talk about 50 risks when I started, and slowly, 500 risks, then 1,000 risks, and now I'm going to show the reality. And that's why people lose money. All right, so we're going to cater this whole thing with the new traders, but that doesn't mean the other people cannot learn from there. Every webinar, I talk something different. And this is a big risk cluster, and all these traders are surrounded by the big risk cluster, and that's why all the institutions take advantage. And there are different clusters I'm showing with a different color. So I like to do innovative way, so sending the message. All right, so now for new traders, they should focus on the time frame initially to practice trades, right? So this way you get a feel of the market. And for beginner, it's very important. You don't need to go crazy. That doesn't mean you do not need to see weekly, monthly, or quarterly. We have all these time frame which are listed here, including your custom time frame. So initially go slow, and we can build up the empire based on simplicity. And Magic Trader is a massive software. That's the only statement I could tell you. It is like ocean and galaxies combined. All right. So now it works on a multiple time frame. You could see it. We specially made this thing for the presentation here, right? Since last couple of them. But initially, the intellectual foundation was cumulative desire to buy and sell securities. In 2003, I invented all these things, and that becomes a product which Metastock, or at that time Reuters. I did partnership with them, and I'm still involved with everybody around that. All right, and then 2004, I started really going into different way. That way, I don't have to do too much analytical work, and I still have a lot of relationship with many institutions, so I could help them. As and my first client was Bear Stearns, right? And I helped the manager to rescue him while everybody was losing money. And Magic Trader played a role, and that gave me a confidence that I could correct the portfolio, which is a big side of business. All right, so I just want to give you some idea. So Magic Trader pinpoints those risk clusters. So this way I have least amount of the risk in my trading. So now everybody else using have I cannot guarantee almost zero or no drawdown. This is unheard. And my traders, hopefully they are here, they can tell you they have seen me live trading. As soon as I go in there, I have a positive trade. So I don't have to worry about it. Some reason it doesn't move. Okay, so this is the reality of manifested AI. I just started talking about it after so many years, right? Because there is a time and place to talk about it. So Jeff will go over with those places where they are there. Some of them I'm going to show here. So it is a manifested AI. This is not your regular AI. It's two different things, right? And we are not going in a hype business, talking about all the external AI models which are out there. So try to understand. And basically, what we doing it here, we are working in a multiple time frames and tracking the liquidity based on the believeness of not me and you, but institutions. And that's the reality. And volatility regimes, right? Eventually, you will know why volatility is so important. Follow VIX, VIXN, and many other things, then you will know, right? And skew, most important thing, follow the skew. Right? I'm giving you a little bit here and there, start registering in mind, and you could do at your own. Think or Swim, best platform. I have nothing to do with that, but I'm using for since almost beginning. All right. Now, turning points. First time, Jeff, if you remember, in Santiago, when I had a paid event, that's the first time I opened my mouth, but I didn't tell about Magic Trader because I got to keep my mouth shut until I get my patents. So basically, ship turning concept is recorded in old recordings. First time I show people how institutions are turning the whole trend. And that's a ship turning. And you could pinpoint those events with Magic Trader. And it was also possible in my first software. Right? It's very important people to pinpoint them. It's a low risk entry. That's how you have least amount of drawdowns. Institutional liquidity is the most important thing. Everything about Magic Trader is liquidity. When they believe to pull the trigger, price can go up and down. They don't care. They will turn the ship. And it is not something kind of a thing from sky. I lived with this situation, me being institutional trader back in days. Right? And it was very fascinating. All right, so this is kind of little presentation. So like there's a big cluster, and around that many clusters, and within the cluster there are other clusters. So it's like a big chain of clusters makes your trade break or win. And if you do not understand that, you will be going in a buy and sell arrow and blindly trading. So everything is about risk and risk cluster in any trading. And I was fortunate to figure it all out. Now, this is a time bomb for many people. I started talking initially 50 risk in a market, then slowly 500, then 1,000. And reality, this is not my site. These are the 112 symbols in elite version and 11 color candles. If you do permutation and combination, I can't even say here how many, it's a trillions. So now you tell me how you could make money with this market. And combinations are there. So we figured out how to take advantage of that. And that's how I wound up with 8 dimensions, and total 9 dimensions do exist in a market, right? And trading happens on all the risk cluster moving around those dimensions. We track it down. All right, so this is all color candle. This is we call as a spectrum. These are different color risks, and I'll give you an idea. If I was a trader, yeah, I don't know anything, right? -5 is the last stretch of shorting, and I got a counter cycle symbol, and I got a yellow bar. That means I'm going long. That's what you need to know. And this one telling you we're going to go higher, right? CFTC, they took 2 years for me to not giving permission, evaluating my software for 2 years every week, nonstop, right? And I go through that, and finally they felt that I'm doing things the correct way. and they made a comment. I wish everybody comes to us and evaluate what they presenting to general public, so we know what Peter is doing or other people doing. So I took the pain before we made a deal with Jeff and Kelly to release it, right? I went through that pain. So in this case, these colors is a tier 1 institution. They buying, I'm buying, right? So that here is telling still is going to go higher. So they take profit, this is pull back, and then again entry, and it keeps on going. And this is a tier 2 institution. So this is the patented product. I got the patents on all these risk, different kind of. So in your case, it's buying and selling. It is not true. For institution, which tier 1, tier 2, tier 3, tier 4, tier 5, tier 6, who participate is the most important to create the deal flow. And that's what people are missing in this industry. So I pinpoint them, and I also recognize them with a simple, high school student can recognize these colors. And that's how I am trading. And I know who's playing the games against me, right? These are the advanced price perceptors. So I know they're putting more money there. And then all these tier 2 is like UBS, it's a tier 2. They also participated. So that's how it works. So here, in a software, these are the 11 colors. You show that, right? I showed you on the calculation of the total risk involved. These are those highlights, right? And that's those candle colors all are price participant in the industry. It's not just buying and selling. So we were having all the advanced knowledge back in days 20 years ago. So this blood has gone into this software because I wanted to do something not traditional way, completely different. All right, this is the bigger picture of that, but you could see Metastock calls them highlights and the symbols. So these were 11 and these are 112 in the elite version. And eventually we're going to be releasing very different version for people just going kind of kindergarten kind of thing in a trading. So very brand new customers, right? Metastock will be dealing with them so they don't overwhelm. This is actually scaled down institutional model. These are some of those symbols which we talk about 112. So those symbols can tell you the depth of this software. You don't have to learn this thing. I take advantage of this software. And I don't need to worry about all other things. That's the best thing, right? So I pick up, suppose this symbol I want to trade and this color of the candle. That's what I'm looking for, right? And this is the tier 1 institution. And look what it says here clearly. And this is the one, the language came from regulators, right? Initially, I said it's going to go to make new high. No, they don't want to talk about it. They said the earlier high warning kind of things. All right, so these are the risk involved with that. You could learn in the training, but if you don't know nothing, 3.3 it came with this color. Go in there. That's the only technical analysis I want you to know. And whatever happens, manage the trade, and you will see over and over again. And these are the AI, right? We were forecasting this thing 20 years ago, right? And these are the magic forecaster I'm talking about. Consists of manifested AI. So it's well protected now. Nobody knows except maybe 1 or 2 people. And we try not to have bad people get hold of any technology. And I trust Metastock that way. They got so many good people there. It's unbelievable. I don't agree with a lot of things, but that's the business. But at the end of the day, I never quit on them since 1990. And I'm not planning to do it. So we're going to talk about the cluster we call ingredients. You could name whatever you want to name it, but this is the line, direction line. That's simple as that to learn it, right? And that line is on the health window. And when you see the line, we're going where? Long. It says green color, we're going there. So that's simple as that you could trade. And every symbol comes after that. You could take the entry, which I showed you, right? 3-3, 3-2, right? And as long as you could see the direction is good. And I'm going to talk about these parallel lines in a minute. So these are those parallel lines. The best way to trade is when you get the symbol, make sure those purple line and this line is parallel, is about 0. That means we're going long. That's what you need to know, nothing more. And overlook everything else, the noises, because this software is technically catering many types of trader. When you are new, you need to only do simple things. Then when you graduate slowly, then you go deep into that. And then you will feel ocean and galaxies. Wow. Just think about we go to the moon, it was a big deal. Now we go to Mars, Pluto, and everywhere else, right? So at that time, our knowledge was very limited. Same thing with Magic Trader. You don't need to learn. You go to the moon, first step, then you go to Mars. Now this is the spike we call, and this is not regular Metastock spike. All right, there is an article I wrote it at the release. Read that. This is a part of AI. I broke and violated Metastock code system to shift it in a way artificially, and that gives me an edge of getting entries earlier. And this is also part of manifested AI. I manifested those ideas in there. So it looks like that. In anchoring, we call anchor. So when the spike comes halfway, when it's finished, it covers 3 time frame. And when it comes in here, you go in there. And that's it. Institution is there, tier 1. Go in there. This forecasting came later. So what? We go and put more money in there. And that's what I do, right? And it's very simple to trade unless you make a project out of it. And this -4, the existing guys, -4, -5 are the way you short cover and get out of that, and yellow bar, you go in there. That's how simple it is. Now, this is the pure health. The pure, you saw the health window. Whole juice, if you don't want to do nothing, when you come in here and you see the little sign, I'm going to show you on a chart. You go long, right? The juice of the whole health indicator is in there. This is how it comes in on a chart. So when you see that, go in there, all right? Because this is an institution making decision to go along. So why not we, right? This is the pullback for existing people. So I try to take advantage of lower prices on a security or option. So those are my sweet spot. But this is the horizontal time risk. As you go long and long in a trade, it's become riskier and riskier. It's going to the moon, but you also have to put tight stop. So one, two, and a third one, I am trying to be taking money in and out, in and out. I'm not trusting the market. And this particularly, this market, look what happened today. Those are the things we're facing. So I have a good time. I am not going to discuss, but my traders are seeing it, and I'm also teaching them how to do it. All right, so the ribbon is not the ribbon which Metastock has a standard. We're taking their software and put a horizontal time risk. So we found the risk cluster who strictly depends upon the time, right? And those risks are different. So we were in a position to separate them out. And same thing with neutralization, same thing with the bearish side. So this is a ribbon, that's the standard name Metastock everybody using, but this is different. It's based on a risk cluster accumulates on a bullish side. So I want people to start understanding this is that neutralization. And again, so they took profit or whatever, right? And they're going long again. So I put all these things together. I don't need to explain, so we could catch up the time. This is the Bible. As long as you have this slide, you will know what to do. So, and you could identify them on each chart. So same thing, because we are registered, so we got to talk about bearish to balance it out. So here, that's the vertical direction. So we're going short, or we could buy put options. So on the health window, the direction line shows up in a red color. Then same thing below 0, right? For ingredient 2, those 2 parallel lines has a minus value, but it's below 0. As long as they are parallel and you find some symbol to go short, you could do that. And you could buy put option. So you could see here that same lines which are here are shown on the chart. In short, when these two parallel lines are, your risk is low. Then they try to play the games. They will do bear flag. This is the bear flag, right? So you don't need to look for bear flag. You know what I do? I'll be honest with you. As the price is going higher, I keep shorting. This is what we learn in the institution side. They move the market up to screw you, right? But I learned from institution, these are the best time, and it follows NASDAQ uptick rule. And I get cheaper prices on a put option, and then look what happened here. Boom. And again, I got the opportunity to short more. So this is constantly I'm doing, right? And this is very simple. So, oh, it's a retracement. No, it's not retracement. This is staying below zero, right? So I'll be keep shorting. And I find those symbols to teach you which symbols are the best one. So again, same thing. This is the spike. It's not Metastock spike. This is AI related spike. We shifted it artificially. All right. So sometimes I like to break traditional programming rules. And the funny thing, until 2004, I didn't know one sentence how to write a code, but I had to keep secret, right? Then I hand it over to Metastock, and they are pretty good in preserving my intellectual. They got good people there. All right, so on a bear side, you could see different symbols. I'll give you the heads up. This is advanced price perceptor. So this is a tier 1 institution and tier 2, both shorting at the same time. And this is the last tier, right? So you got to understand the tier system, and -6 came in. That means we're going to go long. So I short cover. And this is the catalyst and telling me now we're going to reverse the trend. And I have this one since 2003. We designed it and we tweaked it and added more stuff in there. So those things have proven 20 some years. So Pure Health, again, telling you this is institution making decision, make your best brand. And it is shown in portion of the chart which we're going to discuss in a minute. Again, retracement, pullbacks, or whatever it is, right? This is little choppy, right? But you don't know this is going to happen until you trade. So at least you have 1, 2, 3, 4 time frames, right? Helpful to you to make some money on a short side. This is the same way horizontal time risk, but those time risks are related to bearish risk clusters. And you could see here they also have what is same neutralization, and you know you need neutralization. So other trader comes in and they get sucked in, right? That's what we wish all the time on institution side. All this, it's funny game. I don't want to say much, right? Because I have a lot of friends. They have a retail end, and they, I'm telling particular institution, read between the lines. Retail end telling brokers, stupid brokers, right? Not all of them are stupid, but stupid brokers tell their client to buy, and they know that they're shorting on the institution side. It's a sad eyewitness I have done. All right, I hated it. I hated it, and that's why I decided to help little guys to stay away from those traps. Some institutions really buy book. Some crappy reputation. Their brokers call you cold calling. It doesn't work cold calling. You have to have relationships. And those people calling you from the blue, watch out. They're running boiler rooms. All right, same thing. You could use this thing to learn, right? All 5 of them are in one line. All right, so we're going to talk about some charts. So what I did this is the health window, this is the spectrum, where all these different color price perceptors are there. So different institutions are there. You got to start understanding. And they also flow in a sequence that calls trend, but they break the sequence too, right? This is my favorite one for shorting. So people who are existing customer, I love this color. It's a two-way traffic, so I keep shorting. And they also goes on the positive direction, such as here, right? So I will be keep shorting there, looking at the health situation. Here health is good. For bearish side, I keep shorting. But you don't need to be scientists with magic trader. Trust me when I'm telling you, it's overwhelming. But I have to disclose these different institutions are trading. And that can help you to make better decisions. If you don't know anything, I told you, right? Follow this, right? You will do well, green ribbon, so make little money, right? And then look from one place to another place. Can we make money? Can we make money looking at institutional participant? Yes, you could. And this is the advanced price perception. And look what gap up. One day I'll teach gap up. You will see gaps totally different way. And I'm not in a competition of people who make living up gap trading. Gap trading and liquidity concentration is the key, right? And it's all predetermined. You have no idea. And we know those spots, what they're trying to do. So next day I know it's going to gap up. Instant gratification at 3:30 to 4 and get an option trade to hit good, right? But you buying in open market at the open is thing in the past. So wake up, wake up. You get peanuts. So you got to find liquidity, those spots. I don't have time, but I have even gamma squeeze few stages, which I cannot tell much because Metastock don't like to talk too much about it. But it is true, right? We have cracked the code. Okay, this is the scanner, comes with the software, and those ingredients are there 1, 2, 3, 4, 5, and you could play chart and you could scan them where they are, and then you could open up the chart and play, right? So this can help you, and you're going to learn from trainings how to use them. But I just want to tell you where it is, and this is the name of the scanner you got to look for. This is my best favorite scanner. All right, so another example of ingredients. So you have a couple of exposure. Look here, I put the number so you could practice it from the video and you could see the results. And you could go, because I try not to hide anything unless there is a problem with the compliance and whatever, right? But I put even the dates. Some of the people don't even put the dates. So how are you going to go and check the software out? So here, you could go here and check it out yourself. You know, I have some issues with my throat, so doctor is calling, and I forgot to turn off the phone. I hiccup a lot as soon as I drink something or eat, so I'm not eating or drinking while I'm talking. So I have a serious problem developing last 2 days, whatever. All right, so this is a daily and 60-minute. I always look at 2 time frames, right? So I could make quick decision. I have a lot of things which are weekly, daily, and everything. You don't need all these things. For new traders, daily and 60, and then you could drill it down, right? So to get the better entry. So on a sell side or a short side, this is the scanner or explorer, and this is where all the information is. So you just check it out. If meeting 5 ingredients or all 5 in one line, go for it, right? And follow the symbols, and you in business. So as I told you, I want to show you both sides, not only one side. Market is bullish. Today, everybody appreciate this color because everybody is going down, right? Not everybody, means most of the market went down today. And people, especially Max 7, are having tough time, right? And people who are following AI stock, including BTC, look what happened today. We were below 100,000 again. We kind of warn people for weeks, all right? So basically, you just look at here, indigo bar, that means the warning to go short. We go there, and here is the reality. So I look at 60, right, bigger picture than 1 minute. We have traders looking for 1 minute. Yeah, you could manage the trade with 1 minute, but not making decisions, that's crazy, right? As S&P future, yeah, you have to do it because it's too expensive, right? But you still have to see where we're going. So this is where we're going, right? We're going down and we're going. So you keep shorting. It's not a big deal, but you still have to follow the, pullbacks or retracement. Otherwise, I turn off these things. They're calling me an emergency. Excuse me. This distraction has to go. All right, so everybody get an idea how to look for short situation in a trade. All right, I talked enough about me in the beginning. My daughter played a huge role, right? Huge role in structuring all the colors, symbols, selection, right? And this girl, all her childhood, instead of hanging out in a clubs, her club was Magic Trader and my businesses. So everything you see here, those are the businesses we run. I scale it down. She got married. She worked for a publicly traded company. That's the only thing they allow us to talk. And basically, she controls my finance. I don't know even how much money I have. She manages everything, right? But this girl knows a lot of trading, right? When I managed the money, she was side by side with me, right? And this girl has a tremendous amount of knowledge in many areas of businesses, right? And everybody knows my biggest accomplishment in this country. I took one company almost bankrupt to #1 plumbing company and interior company in the city of New York, and all the high-rise buildings and iconic building, one way or the other way, my company is involved, such as Yankee Stadium, Barclays Stadium, all big. The last biggest dream I was having was Hudson Yard. We finished 5 buildings out of 5 there, and we are doing 10 more buildings. So I don't run the company. We give it to the employee. I'm still involved here and there when they need it, but it's a self-dependent company now. And those people become multi-millionaires. I had a stroke, lost my speech. So I got to give it to them. And my partner had eye cancer. Sad, but we are both okay. He's survivor of 20+ years in cancer, and I'm survivor of a stroke. All right, so basically, these lines are not what you used to. They are believers line, and this is my first history of programming. It took me damn 6 months to figure this line out. All right, that tells you it is not moving average. And I struggled, and I was not a programmer. Now I program every single thing, right? Because when you want something, you get it, and you have to have desire to succeed. It's not about money. I wanted to do something which is never done in history, and that's how I wound up with multiple patents and multiple things, right? So this is on a sell side, so regulators are happy, balancing kind of thing, and these are on a bull side. So if you don't know nothing, look for trading about this line. As long as it's sloping up, you stay in there. Minute it crosses, get out, right? So if you don't know nothing, you have a yellow bar. That means wanting to go long. So go long, and then you got to manage the trade. You pull it out, so you take the profit, and then go back again if you want it. And you could do swing trading that way. You don't have to wait for 10 days to do this. So your rate of return is much better following the colors. All right, Jeff, it's all yours. Sorry about all the delays. I try to speed up as much as I can.
Oh, no worries. Stuff happens. It's not a big deal. Peter, great job. One comment we had, we don't have a lot of questions. If you have any questions for Peter, let us know in the chat. I'm watching it. Udinia is here. She's like, she wanted to say, yes, we witnessed. This is Udinia. So Udinia has been a long-term user of Magic Trader and a long-term student, and something we really appreciate. So Udinia, it's good to see you. All right, let me kind of go to my part. One thing I wanted to show, let me go ahead and kind of just turn me into the presenter real quick. I'll show my screen. I've got this kind of ready to show, but I want to, before I kind of get into that, just kind of show, Peter did, oh, I should turn on my camera too. Peter did a really good job of showing kind of the scanning and the functionality that's there. This is a fully integrated Metastock add-on. He talked a lot about the ingredients and kind of how they work. It's, as Peter said, it's a very intensive program. There's a lot of stuff that's in there. But I just want to kind of give you an example of kind of like, this is one of my better trades this year. I wanted to kind of show you how you can use this in conjunction with the expert advisor to get a really good explanation of what's going on a chart. So let me go ahead and let me go ahead and get my face out of my way. Let me go ahead and pop open the expert advisor here. Go to the expert commentary. And Peter did do quite a bit of discussion about the ingredients and kind of how they work. I'm just going to go back to kind of like this yellow bar right here. We'll just kind of look at the commentary real quick. And we'll go ahead and load it. Here you have a little bit of a strategy overview. When we start to talk about the ingredients, here they're all listed out. You've got the magic direction line, the magic health indicator, the spectrum spike, the magic pure health, the horizontal time risk. And you can kind of see that he's got a dashboard view, which I really like, that kind of tells you whether those ingredients are bullish or bearish and what they're doing. In this case, they're all bullish. But in addition to that, he's gone in here and kind of created details around how all of those are working and kind of how they're put together and what you can do with them. Very good to kind of help you, especially as you're initially putting together and understanding the system. With Magic Trader, the more you get used to it, the more you kind of go through the training that Peter provides, the better it's going to work. So let's talk a little bit about everything that he's kind of offered. He's put together a really, really good package around making sure you have enough time to use Magic Trader to make sure it works well for you, training to kind of help you get started, some of the other service that he offers. So I'm going to go ahead and open up just this PDF right here, kind of go through it a little bit with you. One of the services that Peter does is called the Magic Trader Educational Alert Room. It's a room that meets. You get alerts in it. There's a wide variety of topics that Peter covers. In fact, there's just pages and pages and pages of in this PDF. There's pages of information about stuff that you'll learn as part of his room. So you can kind of see here. I won't read through all of them. Those are just basically market-related topics. Let's go to the next page. There's some more market-related topics. If we go to the next page, is going to talk about the option topics and things that are covered within the option topics, how to use options with Magic Traders. These are all just things that they discuss in the room, and the room is great. That's one of the things that we always get really good. People, then they go and they start to go to the room, the retention on it is super high. Another thing that Peter's going to be offering as part of the package deal that he's putting together is access to the magictrader.com and access to his section of the Magic Trader Facebook group. So in addition to that, just to kind of talk a little bit about the add-on, obviously the add-on is going to be included. It's a full massive add-on to Metastock. It's got 58 indicators. There's 47 different scans that you can put together. There's 2 different expert advisors, 35 templates. There's a 127-page manual, which I would say is really well written. When we were looking to kind of launch this initially, I sat down and I read the manual, and I was able to kind of understand everything that he was doing with it just by looking at the manual. If you're not really into reading the manual, there's also a bunch of training that we're going to talk about as well. There's highlights, there's the commentary window that I just showed you, and of course the scanning. So all that's included. The normal cost for Magic Traders is just $199 per month. As part of the overall package, what we're going to do as well is we're going to give you the fundamentals of Magic Trader. This was training that we sat down over the course of about 4 weeks in 4 different modules. And Peter went into great detail about different, not just Magic Trader, but different aspects of trading and how to do it. He talks about the entries, the exits, the catalysts. All of this stuff is available for you as part of the actual purchase. And I'd recommend you go through it. You're going to learn a lot in it. So into the next slide. In terms of what's available, in terms of the package, normally if we're going to throw in all 3 of those things. So the Magic Trader Elite is normally $199. We're going to give you 3 months of that as part of this overall package, which is a value of about $597. The Option Equity Trading Educational Room is normally $299 a month. We're going to give you 3 months of that. That's a value of $897. And then we're going to give you over 20 hours of recorded fundamental Magic Trader education. That's called the Fundamentals of Magic Trader. It's normally $999. So the total value there is $2,493. And really what we're going to do as part of the package today, we're going to give you 3 months of that room access. We're going to give you 3 months of the Magic Trader access, and we're going to give you that fundamentals of Magic Trader training. So all of that stuff is going to be included. You're going to get access to the Facebook group as well as the Magic Trader site. All that stuff is included. Instead of $2,500, what you're going to pay, or $2,493, I rounded a little bit, you're going to pay $997 and you get access to that whole thing. So in addition to that, as 2 extra bonuses that we're going to throw in just for this conference, you're going to get a boot camp. And then and that's about, I believe that was 8 or 9 hours. I didn't check it right before we went online today, but you'll also get access to the Magic Trader education portal. So all of that stuff's included. $997. That's only available through next week. You can't get it after that. So you want to go ahead and do it today, so that way we can start to get you set up. To do it with the package and the way that this is put together, we want to talk to you about it on the phone or in sales chat so that we can make sure everything gets set up properly for you. So you can call us if you're here in the US or in Canada. Give us a call at 800-882-3040 or chat online with us at metastock.com/sales-chat. We'll be able to get that going for you. So that's what I have. Peter, is there anything you wanted to add to that?
All right, Jeff.
Thanks for coming.
Yeah, next year will be 20 years of Magic Trader officially. So there's a lot of things I'm working behind the scene, and
we're gonna have a party.
What is that? And you got
we're gonna have a party.
A party is one thing. A lot of good stuff, giveaways, right, to people, and I'm changing. You saw the samples, right? People have not seen the exposure of institution, especially retail guys, right? First time in their life, right? I'm going to open up every single thing. And it is last 4 months, day and night, I've been working on it. And,
right on.
And that will be given in HTML format, right? So this way, it is live and active, right? So there's a lot of things going on, pre-market, post-market, so much to learn on the institution side. Everything else, you could get it everywhere, right? But my whole thing is to bring knowledge from Wall Street to regular people who has no advantage practically, and make them smarter. So all these sharks don't eat them alive. And that's what they do.
Yeah, one of the things that's been impressive to me is how sticky the services are. Like once people start, they really they stay on. The retention is great, and I think that speaks volumes. So,
and one thing I will tell people: do not try to go on a hype. Oh, I made 2,000% of all these things is well and good, for how long? So you got to learn the art, not following people's signal, right? There are so many signal services, but by the time you use the signal, you lose money, and you don't know how to manage the trade. In a bull market, everybody will be making money, right? Not in this market, right? And now is the real time. So if you learn the art every day, including today, I have nothing to worry. I did all my trade positive today. Even doesn't matter. right? I traded gold today, right? I traded what do you call BSX, right? And 3-4 different trades I did. And Tesla, I also traded. I have 5 different big liquidity, which is a max 7, either Netflix, AVGO, right? Tesla, and Nvidia. But what I looking for, volatility. That's what institutions are looking for, volatility, right? And a range. So I have a lot of chances to make a lot of money in a shortest period of time. I'm giving you the clues, but if you don't practice, right? If I tell you how many practice trades I do, I learned one thing. One trade on a Wall Street, they told me you got to do 50 practice trades before you put $5 million. That tells you the story. And they will make you do for 3 months at least first time. And they will not let you even trade. I went to hard knock school, and I urge people, please, everybody wants to make money, do more practice trade. And everybody, and I'll give you one analogy and take it home with that. All the players, they put 90% of their time, right, in the practice trade. Every players, right, doesn't matter which game it on the field, but they only trade 1 or 2 games per month only in a real time. So what happens to the rest of the time? They do practice. That tells you the story why they are successful. Mike Johnson or whatever the people are you following. And I learned this thing in my earlier stage, right? You have to keep doing regardless how much successful you are. And that will give you more confidence of games they playing against you. And that's what I do. I play better game. I learn all their games in all these years. And Magic Turtle makes my life easier.
All right.
And learn from this one. That's what I have to say.
Okay. Well, thank you for spending some time with us. Unfortunately, we're running out of time, but
yes.
I've got the link to the sales chat in there, metastock.com/sales chat, 800-882-3040. Peter, thanks for all the work you've done. I appreciate you, man.
No problem. We have more surprises coming for sure. And
all
you
right.
have some glance. I will give you a surprise too.
I appreciate everything you've done for us, Peter. Thanks for coming.
Thank you.
All right. All right, very cool. That special, 800-882-3040 or metastock.com/sales chat. As we move on, let's see, where are we at here? Kind of lost a little bit of track of where we're at. I do want to invite you, though, as we move on to the last speaker of the day, Mark Leibovit, I want to invite you to join our Traders Forum. You can find the Traders Forum at thetradersforum.com. It's a partner of Metastock officially. And there you can find us live chatting about the market, talking about trades we're interested in, learning about the markets. We have people that come in. We talk about markets all the time. We do special guest interviews. We do podcasts. It's a lot of fun. We'll talk about different technical indicators. All of that stuff is free, and you can do it at thetradersforum.com. So, of course, we're Metastock. All of the offers that we've got, included that last one, you can get at 800-882-3040. You can also chat with us at metastock.com/sales chat. And you can also sign up. Metastock, again, it's been rated the best software in its price category for 32 years in a row. And we'll give you an extended trial. If you buy a month, we'll give you the second and third month for free. Prices on that start at about $25 a month is all. Metastock.com/conf promo or metastock.com/sales chat or 800-882-3040. So without further ado, I want to get Mark on here because he's going to help me give away the mega prize of the day. Mark, how you doing today?
Can you hear me?
I can hear you, yeah.
So, can't see me though.
No, not yet. Do you want to turn on your camera? That's up to you.
Yeah, I'm just trying to figure out where that is on the screen here. So
I'm going to actually send you a request. Like, we can make it easy for you. Send webcam request.
Got me? There we go.
Yes. Okay. Before we get started, I have a very important task for you.
Yeah, take my
Well,
glasses off.
as you know,
Go ahead.
you're the last speaker of the day, and I'm going to properly introduce you. But we've had we give away prizes all day long. All day long we give away prizes, and I'm flying by myself. I usually have Greg here to help me, but nobody cared enough to help me today. So you're going to help me.
I'll help you. I'll help you. Okay, fine.
So the prize that we're going to give away, you can see it on the screen. We're going to give away 3 months of Metastock real time, which is a value of about $100, or $300 actually, because we're giving you 3 months of it. We're giving you 3 months of Metastock real time, the software that's been rated #1 for 32 years in a row. We're going to give you 3 months of Metastock Zenith, which is a new service. We've talked a little bit about it. It features market depth like you wouldn't believe. It was built at the cost of over $1 billion by Reuters initially. Still features all the Reuters, actually all by LSEG now. But it features news, articles, market breadth, hundreds of exchanges globally. It's all available as part of this package. It's normally about $165 a month. We're going to give that to you. We're going to give you 3 months of Magic Trader and 3 months of the alert service that Peter just talked about. We're going to give you 3 months of a service called Learn Metastock. And I'll also throw in 3 months of Mark Leibovit's VR Trader, which is which he's about to talk about. So it's a pretty big package, right, Mark?
Wow, that's a lot of stuff, Jeff.
Yep, and it's free. Now, normally what I do is I say, hey, Mark, give me a number between 1 and 6,600 and blah, blah, blah. But for the Metastock prizes, I like to reward people that have asked questions and have participated throughout the day. And so typically I'm going to show all of the questions that have been asked. I've got it right here. There's hundreds of them, hundreds of comments. Some of them are like, Jeff, you look like you need a shower. No, nobody said that. But like there's all kinds of comments right here. And what I'm going to do, I'm going to start at the bottom and I'm going to scroll up. And when you say stop, whatever comment I happen to be on is the winner of the prize. So do you understand, right? Do you understand the assignment?
Yeah, I'll see it on my screen here in front of me.
No, I just want you to tell me to. I'm going to scroll. I'm going to tell you when I start scrolling. You just tell me to stop, and you can tell me to stop whenever. Okay. So I'm going to start scrolling down.
I won't see the questions, right?
No. Well, you will be able to see the questions if they come in during the. Yeah, but not right now.
Okay.
So just. I'm scrolling now, so let me know when you should stop.
Stop.
Okay. Earlier today, Hector, who's still here, asked for a phone number. So, congratulations, Hector. You won the Metastock prize. So I'm going to go ahead and I'll get in touch with you to get that all set up. But yeah, there you go. Good job. Woohoo!
Oh.
Let me introduce you, Mark.
Hector's going to be happy. Hope he likes me too.
Let's see. Who doesn't like Mark? Let's see. Okay. So I've got your picture right here, so we can talk about you for a second.
Yeah, sure.
Mark, do you still do the Timers Digest? Is that still a thing?
You know, Timers Digest no longer publishes.
Okay. So Timers Digest.
Unfortunate, he was doing it for decades. He retired.
Now you're probably pretty happy. You are a gold bug, and gold is just like I looked at a chart earlier. No, gold's been going crazy all year. So I want to tell you how I know Mark. Mark, there used to be a company that was called Timers Digest, and you would send your trades to them, and they'd say, okay, out of all the people that are submitting trades that are experts, these are the best traders. And Mark won that many, many times. I think you won it over a 10-year period, right?
Yeah, I was lucky. I got it over a 10-year ranking. That was one of those. It was for gold too, I think. Which funny you should mention it. Yeah.
Mark does a lot of different newsletters. He is very, very into gold. What do you think of gold now? Well, I'll let you talk. At least should get you started. So anyway, Mark.
I don't know. I've been in gold since the 1980s. You know, trading it at $400. So I've been in it a long time, Jeff.
Yeah. Okay. I'm going to make you the presenter here. We're going to go ahead and get you started. I'm really interested to see. Hopefully, you kind of give some insights on what you think the future of gold looks like.
Let's see if I can get this. I'll show my screen.
I see it. And then I just hit from beginning. You should be good.
Right, you see this? Okay. Oh, cool. It's actually working.
Yeah, yeah. We've only had one real technical issue today, so that's
Oh,
cool.
that's
Yeah, I
good.
shouldn't have said that out loud though, because but all right, Mark.
I actually pulled up, well, just for 1 second, I actually pulled up Metastock here. Now you see this? Okay, I'm going to actually show this first because this is current. Some of the slides that we had were from a couple days ago. You know, it takes a little time to put these little PowerPoints together, so I just wanted to show this. So I got to move this over off to the side a little bit. So, and you want me to just get started?
Yeah, I'll get out of the way. Go. I know we're starting you a little bit late. You're the last speaker, so take as much time or as little time as you need.
Oh no, it only runs about 20, 30 minutes. We can have some questions if somebody's around. I have a podcast I do. I mentioned this in the PowerPoint. I have a podcast every week I do with House Street Radio up in Vancouver. So we're supposed to tape it about 45 minutes anyway, so it works out just fine. What I want to show here was really this current chart here. This is, of course, the VR indicator platform. We have several tools, but the main one I use is the VR sequential, which shows all my technical indicators, which is primarily the volume reversal, and that's what this whole presentation's about. And I'm pretty focused on what I do. You know, I don't have 50 indicators. I've been doing this for decades, and I just follow the volume. And I tend to be more of a 1 or 2 day trader, though you could see some of these signals work out for several days. But what I want to point out today, and the negatives that we've been getting here in the S&P, and we're short now because of that. But today in particular, we generated what I call a negative volume reversal. So what's a volume reversal? It's basically a down day on increasing volume coming off of a rally day. Okay, so we made a lower low, and it's a reaction day by definition, and volume increase, and this gives me a little, trading sell signal. And what also is important, if I can move this over, is the 533 stochastic on the bottom of the screen here is also turned down. And prior to this, you could see we had a couple negative volume reversals here. This is before we had the big sell-off that ended 3 days ago, and now we rallied back up, and now another negative VR. So we're getting a topping pattern in the market. And it's sort of peculiar because we're at the time of year, I talk about this in the slide presentation, but we can just talk about it anyway. You know, we have this event called the Turkey Shoot around Thanksgiving, and the influence of that indicator is my late old friend, Yale Hirsch, who created this back in the 1970s. And basically the day before and day after Thanksgiving, you tend to get, a rally phase. So maybe we're setting up for that Turkey Shoot, but I think we're going to come down first, which is what we're doing now. And obviously, I like to see, if I'm going to buy it or trade it, I like to see the inverse of what you're seeing on the screen here. I like to see, like a circle over here to the left, a positive volume reversal where we get a rally day on increasing volume and we get a rising stochastic. So if we get that before Thanksgiving, which is not that far away, there'll be theoretically a little trade in there, but it's sort of peculiar and perverse, I guess, for the markets, which expected the market basically to form a low in September, October, and rally into year end to get this type of indigestion this time of year. And the market doesn't always conform to what we expect. There are a lot of seasonal patterns. I talk about those as well. Of course, turnaround Tuesdays and the summer rally and Santa Claus rally and the January barometer and a lot of these arcane indicators out there. And some work better than others, and nothing is 100%. So anyway, we're short the S&P. One of the things I wanted to show was basically, what's really happening here. We can back out a bit. So, basically we saw a lot of highs in the S&P here early in the year, topping out in this March period. And of course we had the huge decline into April, and that was, on the tariff story, and we had the big washout here. But this level here has never really been corrected. And I think that's where the market could pull back to. Now, will it do it here by the end of the year or real quick or the first of next year? But it's coming. And that's substantially lower than we are right now. So in the S&P, you're probably looking at the 5,500 level or somewhere way back there as compared to where we're at now, which is, where we're trading around the 6,700 level. So short term, I think we get to around 6,100, and we'll see what happens beyond that. But I think we're setting up for more of a correction. The street, of course, is using the excuse that AI ran into some indigestion. NVIDIA had some problems technically. The purchase for power may have gotten extended, and the results that may not be seen for a number of years. But if you just look at the charts, we're just way extended, and too much optimism out there. So maybe we come down, bounce into Thanksgiving, and then we have more of a sell-off. We'll just have to watch the short-term indicators. But I wanted to show this first because this is sort of my really short-term view, and as a trade, this is what we're looking at. So looking at the actual presentation here, which Jeff told me to get started doing. And of course, this is my newsletters, vrtrader.com, and you have 50% off of any of these newsletters that we put out, and we focus on all markets. Jeff was kind enough to mention metals, resource, and gold, and so forth. But we have our blockchain letter covering crypto. Our primary letter, if you have to pick one, is platinum. This is our big one, covers all the markets, and we are offering half off on the subscription. We've been publishing since, believe it or not, Jeff, July 21st, 1979. So and I started with the volume reversal survey back then, and now here I am still doing this at 77 years old. I'm still doing it and enjoying every day. So I think that's what's going to keep us all going. House Street Radio, we are doing this podcast every week. You can tune into that. I also post it on the website, and they cover a bunch of questions regarding the markets and so forth and so on. Timer Digest we went over. If you're interested in my technical book, The Trader's Book of Volume, you can buy it on Amazon. It's about 500 pages covering all the major volume indicators. Of course, I do talk about my volume reversal in there, but we are proud of that work. We also have it published in Chinese. I am still working on the sequel book, Profits, Taking Your Way to Profits Using the Volume Reversal Indicator, where we go into a lot more detail about other tools that I use in conjunction with the volume indicator. But for now, it's the Trader's Book of Volume that's available. I mentioned Turkey Shoot. We'll see if that unfolds here the day before, day after Thanksgiving. I do follow a lot of cycle work, which puts me in a little different position than many of the conventional analysts that you talk to. I've been doing this for years. When I started trading on the CBOE way back in the 1980s, basically I ran into a lot of cycle people, actually a few financial astrologers, including the famous, my good friend Arch Crawford and others, and influenced me into cycles, not necessarily astrology, but into terms of cycle patterns, including the seasonal patterns, which you see on the screen, where markets tend to change direction around these time frames. I guess the most notable time frame is that mid-March period, March 21st, like we saw back in 2020, with COVID bottomed literally the day of the vernal equinox. So always watch the June 22nd, September 23rd, and December 22nd time frames, give or take a week or two, for market change of directions. I also follow the lunar cycles, and this goes back to my floor trading experience. When I was trading down there, there was a financial astrologer down there, and I'll leave his name unnamed for the moment, but he was telling me while we were trading on the floor that the market was going to change direction exactly at noon. And I said, on what basis? He said, it's based on astrology. And I said, well, I'm not an astrologer. And he said, just watch. And sure enough, at noon, the market changed direction, and I became a believer. And I said, what were you doing? What were you looking at? And he said, it was a lunar cycle. And that sold me right there. So I've been tracking, in addition to another story I'm going to tell you quickly, lunar cycles since that time in the early 1980s. And you tend to see markets change direction, within a few days of the lunar cycles, and you got to watch that. The market's overbought or oversold going into that. We have, of course, one coming up November 19th, just ahead of Thanksgiving, and we just came out of a little trading peak here in the markets around November 5th. So there is definite correlation. I also remember I used to be an elf on the Louis Rukeyser Wall Street Week TV program. For those of you old timers who remember that show, it ran from the 1970s to the 1990s. And he had a guest on the show, Ian McAvity, who produced a letter called Deliberations out of Toronto. And he was interviewed in, I think it was 1972, 74, somewhere way back then. And he said he correlated the move in gold to the moon. And he said you'll see highs in the gold market around full moons in the market. Now, it just happened the last few days. We've seen new highs around the full moon, which was November 5th. But what we've learned over the years is that the lunar cycle and gold is not necessarily tied only to the full moon. It could be other cycles as well. But he was on national television on PBS talking about it. So between that and my floor trading experience, I said, there's something to the lunar cycles, and you better start paying attention to it, Mark, because obviously there's a correlation here besides what you're hearing on CNBC or reading in the Wall Street Journal and elsewhere. So anyway, I am a technician. I use my volume work. I use all the other technical indicators, but I also rely heavily on what the heavens are telling us, where we are in the cycles. And you want to pay attention to this little planet over here to the left, believe it or not, is Mercury. I'm not an astrologer. I'm just telling you what I learned listening to these guys for decades. There's an event called Mercury retrograde, where from our perspective, looking up at the skies, it looks like Mercury is going backwards, and they define this as Mercury retrograde, but it tends to have an impact on the markets. I'm not saying the planet itself does, but just that effect. That time frame seems to be correlated with the markets, and we are in that Mercury retrograde period between now, November 9th to the 20th of the month. And the effect is that you get a lot of whipsaws in the market, a lot of volatility during that period. And I posted this in my newsletter a few days ago saying, watch out, we're coming into Mercury retrograde. And sure enough, look at the volatility we've seen, even not just today, but in the last several days in the market. So again, this is a cycle. I watch it just like the seasonal cycles here and just like the lunar cycles below. And I try to put it together with the volume and see if we get some correlations here. So these were saying, look for change points. We're getting negative volume in the technical indicators. And that's enough to tell me that maybe the market's going to have a little problem here, okay? So I look at a lot of other stuff. We'll pass through this. This is volcanic activity. And we're going to get down to the annual forecast model. I got to show this to you as well. So anyway, we create this every year since 1987, where we put it out and it called the crash back then. And what it is, it's a seasonal indicator. And I put it out every January, and you can buy it under the VR forecaster option on the home screen. And this is the forecast we put out at the very beginning of the year. And this is what the year would look like. And sure enough, if you can look at the middle part of the screen here, it said watch out in the March-April period. There could be a sell-off. And sure enough, we had the April correction. Remember, this was produced in January. And then it basically said we're going to get, an uptrend during the year and a little choppy period and sideways toward the end of the year. So it kept you pretty much in the markets, and it warned you about a shakeout in the middle part of the year. And we're going to see now it does show a little downer here in the last bar, so maybe this is part of what we're running into now, a little bit of a correction. So we put this out every year, and I would encourage you to take a look at it. And we've been doing it for decades. Nothing's 100%, but it's worked out really well for us as a very big picture view. Obviously, it doesn't help you on your day trading, but it's sort of nice to know that some of these patterns tend to unfold over time. Warren Buffett, as you know, has been getting out of the markets. He's been dumping a lot of stock. This should be a warning to all of us, and we're starting to see some of that happening now in the markets. He's probably the best investment advisor in existence. I think it's about 20% a year type return. So this is a warning sign, and has been a warning sign for quite some time. Despite all this, and we hear what the Fed is doing and what's not doing, they've been increasing the money supply, and we all seem to hang up ourselves over the Fed funds rate. Are they going to lower it in December or not? Right now, by the way, the CME tool, the forecast tool, the futures tool, is actually showing only a 50% chance of a rate cut in December. But I don't focus so much on that. There's so many other things the Fed does, and they don't talk about it. I mean, what's the M2 money supply now, for example? It's been going up. it's been increasing. You don't want to see it come down. That means things are getting tighter. So they're still pumping money into the system, which is interesting, regardless of what the short-term interest rate is. And of course, we really have to follow the bond market anyway, not the Fed funds rate. The bond market is rallying. That's really what we really want to see. And it's been a little stubborn here, as you know. So got to keep an eye on that. And, I've been a big proponent of abolishing the Fed. I'm a big influence for me was the Creature from Jekyll Island book, which was published decades ago. And I think it's an arcane institution, but we can get into that another time. But this is G. Edward Griffith, who wrote The Creature from Jekyll Island. You should read the book, and it can give you some real perspective about what's wrong with the Fed. And really, the Fed has been a nemesis to the markets. More recessions and problems have been created by the Federal Reserve than publicly discussed. Ben Bernanke, for example, I keep citing this example, back in 2008, 2009, he actually came out and said, yes, we did it, referring to the Great Depression, because during that time, the Fed actually raised interest rates as after the 1929 crash into the 1930s, and did absolutely the wrong thing at the wrong time. And we've already learned with Jay Powell and even Alan Greenspan way back into the 1980s that a lot of big mistakes are made, and the Fed is not necessarily the best vehicle for the desired result. Andrew Jackson abolished the national bank in the 1800s, and we might need to do the same thing going forward. Let's talk about the Fear and Greed Index. And we're going to touch a couple of VR charts in just a moment here, but we have some time. But I'd like to talk about a lot of things because it's more, yes, we day trade, but we have to get a sense of what the circumstances are. And as you probably know, this is published every day. It's your Fear Greed Index. And people, I think, interpret it incorrectly when they see it coming down, and it's fearful. This is about 2 days ago. I think it's about the same number today on a scale of 1 to 100. People say, oh, people are fearful. It's time to buy the market. Well, it's the opposite is the case. As the indicator is moving down in fear, it means there's going to be more fear, more selling ahead. If it's starting to rise and getting into greed or extreme greed, it means there's more buyers around, and it's probably going to go higher before it goes down. So the fact that you're in a fear level index here, and it's still hanging in this level or going lower, it means, we're setting up for possibly significantly lower prices in the market, which is what my cycles and what the VR indicator is sort of telling us. Doesn't mean it all happens today or tomorrow, but the fear is telling you that's a warning sign, not a contrary indicator, which is the way it's presented. We also track the cryptos. They haven't been doing well here, but they're in a correction. Big picture, if you take a 3, 4, 5 year perspective, they're going to be huge in terms of gains. I'm very bullish on them, but you got to take 2, 3, 4, 5 year perspective because there's big changes coming to the economy, all the legislations that's gone through Congress, the stable coins that are now being created by many of the big U.S. retailers and others, the effect of new cryptos like XRP could have on the financial system. It's a whole discussion. It's more than we get into here, but if you're interested, subscribe to my VR blockchain letter. But right now we're seeing in Bitcoin that Bitcoin is the focus of everybody's attention, or many people's attention, and it is going through a corrective phase here. It looks like it may have headed down to low 90s and maybe back into the 70s. So you have to watch it here on the charts and the VR indicator, and I think we have a chart coming up in just a few moments here. We'll show that to you. But on a big picture basis here in the next 2, 3, 4 years, from my understanding and looking at the charts and talking to a lot of experts, some of the biggest percentage gains that you could see in your portfolio could come from a well-chosen crypto position versus the stock market. One example is little XRP, which in the last 3, 4 years was trading like 25 cents, and now it's trading at, we got up to $3.70 a few months ago. Now it's around 240. I mean, you're talking 1,000% gain in something like that in a 2, 3 year period. You're not going to see that in the stock market. So that's what's still coming in the crypto sector. We just have to time the correct entry or just hold a small position, over the next 3 or 4 years, and I think you're going to be amply rewarded. The potential is this kind of chart that I'm showing you here. We could possibly be embarking, and this could be over the next, couple, 3 years, these type of percentage gains in some of the altcoins, and some could see gains of like 25,000% or 12,000 or 7,000%. We've seen little things like Shiba Inu, for example, do these type of things. So these type of potential gains that we've seen in the past could possibly unfold here, but I'd be looking between now and 2030 for this type of gain, not a 1 week or month or anything like that, or 1 year. But I think that's when it's coming in the horizon. And I keep mentioning XRP. There was a story today, a new XRP ETF. It was from Canary Capital. That's the fourth one on the list. Start trading today, and all these others are coming. Jeff had mentioned the gold market a few moments ago when we got started, but if you remember, before gold really got hot, the creation of GLD, which is the ETF for gold, became a reality, and that helped propel gold higher because of the demand for gold after buyers came in and bought the ETF. So the same with XRP. Timing may not be 100% correlated to what I'm describing in the GLD situation, but the more ETFs are created for this particular crypto, there's going to be demand for it, because institutions are going to start buying the ETF, and the ETF's going to have to go out and buy the physical, so to speak. So there's going to be some action in XRP. So keep an eye on it. Doesn't mean it's going to be up tomorrow or the next week, but could be the next month or two into the first quarter of next year, and if not, over the next year or two. So keep an eye on that. More action coming because of the creation. I mean, why are all these institutions creating an ETF for this particular crypto? Just think about that. They're expecting big demand and government involvement in it and so forth. So I'm pounding the table a little bit on this situation because I just find it extraordinarily interesting that this would be occurring, that these many ETFs would be created. So I want to let you know about that. And if you read recently, JP Morgan is allowing clients to pledge Bitcoin and Ether as collateral. So, I mean, that tells you something there if you don't know already. So a lot is coming. Remember, we're in a very volatile market. Bitcoin, was down at a couple $100 and went to 126,000. So timing is everything, but the trend is still your friend. And though we may go into a correction here first, you got to keep an eye on for a next buying opportunity. We'll do our best to do that at our website, of course. So Jeff and I created way back in 2011 the volume reversal tool, and it's one of the options here on Metastock. It was the first one that I created that was pre-programmed this way. And if you go to this link up here, you'll see a nice little introductory video with me and Jeff talking about the indicator in a lot more detail than you'll hear on this webinar. So if you go to the Metastock website and you look for the volume reversal trading tool, the indicator, it's actually called a toolkit. You can pull up this video if you can't copy this link in front of you now, and you'll see that presentation, which is very thorough and covers a lot more than we have in a few minutes left here. But the main thing I'm showing you here, and this will sort of end our presentation, but I want to obviously talk about it since this is a Metastock forecasting vehicle, the volume reversal sequential indicator, which is the main one I use. And when you purchase the toolkit, you'll see that there's the sequential indicator, directional, and 2-day. And we created 3 of them, but I tend to use the one I'm going to show you today, which is the sequential, which shows all the volume reversals. And this is what I like. Now, these charts are a day or 2 old. The one I just showed you a few minutes ago was a live chart of the S&P, but I just want to put up a few here for you. So one of my favorite stocks that I trade is Dutch Brothers. Basically, I like little stores and the kids that run it. I mean, basically, I ran into this 3-4 years ago when the company first went public, but I've been trading a lot of it. Stock's very volatile. Jim Cramer loves it. He talks about it on CNBC all the time, but we have some really nice trading tools here. And basically, I just want to focus on the most recent one. This is a daily chart of BROS. What What you see on the screen, to give you a little update of what the chart is all about, is I just have some basic moving averages here. You know, the 200-day is the green one and the 50 is the blue one. And there's a 20-day here as well, the red one. And then there's another red one here, the 120-day. So I just put little moving averages up. But the main one you want to follow, of course, is the 50-day, because everybody seems to, you know, sell under it or buy above it. And then I have a 533 stochastic. And that's basically all I use in terms of my short-term trading. And if I get a negative volume reversal like I'm circling here, even though I love the company, when the stochastic is not doing anything particular, but it looks like it's more bearish than bullish, you've got a sell signal. And basically you can trade it on 1 or 2 day basis, or you wait until some other objective that you're thinking about you reach, or until we get a positive VR, which it reverses the pattern, or until your stochastic starts to turn up. So, you know, I tend to trade them on a 1 or 2, 3 day basis, and I tend to be in and out more than anything else, but has some really reliable signals here, and I trade them all the time. You get a positive VR 2, 3 days up, negative VR 2, 3 days down, positive VR 2, 3 days. So this is a high correlation vehicle for me. It's not Starbucks, you know, it's not the big name, but it's a growing company, and the chart works really well for me. So I just want to mention that to you. This is the silver, it's called Amplify Junior Silver ETF. Good correlation in the chart here. Of course, silver has been moving up, but you can see where we had a trading top here just in the last, you know, 2 weeks. Negative VR came in right off the top. Of course, we rallied back here a little bit. Silver actually double topped here, I believe, yesterday. So it may still go into a little bit of a correction, but we had a nice little trading signal here. And on the way up, we had a series of positive VRs reconfirming the uptrend. And if we got a negative one, it was immediately reversed. So if I had been short, I don't think I would have shorted it, but if I did, I would have reversed and gotten back long. And it just has a good correlation here. So I always want to track the VRs to see if they're following it. And there are some periods like here, negative, you know, little VR here in the summer and early August, you know, where it went sideways and down a little bit for a few days before another positive VR came in, and there was a nice trade. Another one we're looking at quickly is BOIL. This is natural gas. I've been trading a lot of this. Natural gas is so cheap compared to where it's been. BOIL was $150 a share, you know, in the last few months. It's trading in the 30s right now. Looks like it's turned up. The logic for the move in natural gas, you probably heard this on all the financial broadcasting shows, is that, well, it's going to take a few years until the nuclear facilities are underway, and we're going to need a source of power, and natural gas might be a great substitute for that short term. And it's, you know, relatively cheap and accessible. And, you know, companies like GE Vernova are producing a lot of equipment for natural gas energy production and so forth. So there could be a case here. And of course, you got winter coming up too, that there could be a much bigger move. And, you know, my gut feeling is you're going to see BOIL. Now, this is not UNG, which I don't have a chart of. That's trading around, you know, $14 a share, much cheaper. But if this is leveraged, and this gives a little bit more price action, $2-3 a day type or more move. So I can see this easily moving up to that 50-day moving average, which is way up there at $50. So we trade it, but I sort of think you're going to start seeing, you know, the next, you know, few weeks, much bigger move here in BOIL and UNG, which is the natural gas play. So keep an eye on that. Not much discussion about natural gas, but, you know, if you look at the charts, big picture, and you pull back, you'll see you're really cheap compared to where you've been. So I think there's a lot of potential here. Let's see here. Let's move on to the next one if we can. What's going on here? The next chart. All right. So here's your Bitcoin chart. This is well, this is IBIT. This is the big one. This is the one that Larry Fink created. This is the one that, you know, really got the move going, so to speak, in with this is BlackRock's IBIT Bitcoin ETF, but it was last March. I don't have that. I can't pull back on the chart, but that's when the big move started, when this ETF got created. And this goes back to the theory of GLD and how it helped gold, and why XRP ETFs might help XRP. Well, we already saw this happen in the Bitcoin when IBIT and others, start to be created last year. So anyway, good signal. The main reason I'm showing this to you is negative ERs work out pretty well on the trades, and positive ERs you can see work out pretty well, and you get follow through for a couple, 3 days, and I tend to trade. So if I'm getting a sense of what's happening in Bitcoin, I look at IBIT, and you can see a lot of negatives here recent couple of weeks. So we're in a little toppy area here. We did see a new high in Bitcoin at 126,000, as you know, and I think it was, believe, in August, and that was it for the time being. And I'm sort of thinking, looking at the charts, you're probably in the low 90s, and as I mentioned a few moments ago, the mid 70s, and we'll just sort of take it from there. But if volume reverses and I get positive ERs, I'll trade it. So just want to give you a sense of what Bitcoin looks like on my chart, and the fact we get some decent correlation here, which is, really what I'm looking to do. Home Depot has been a favorite because of the anticipation that as interest rates hopefully come down, the mortgage rates have come down a little bit, that this is going to help the construction industry. But so far, Home Depot has been in a little bit of selling pattern here, as you can see in the last few weeks, negative ERs, and I'm not getting any positives yet. Though we did see some positives from June on. I guess the anticipation was much more bullish there for interest rates, mortgages, and the construction industry. So we're going to have to see this type of pattern here that I'm circling to get us more excited about the construction industry and Home Depot. And hopefully, that'll develop here. But so far, we're still in this downtrending pattern. But mainly, I wanted to point out the high correlation here of the chart to the VRs. And this is, I could have shown this a moment ago. This is the grayscale ETF for Ethereum. And a lot of people like ETH, and there's ETHE. There's two ways you can trade it. Also in a little bit of a downtrend here, negative ERs, as you can see. We had, some positive ERs obviously way before this, but we're in a little toppy pattern here. So let's see if some positives come in. So I'm not a buyer here yet until I see some positive ERs, and we'll just have to, play it day to day here. My big picture view is very positive. You may think I'm crazy, but some of the research that I've come across and some of the insights that I've gained suggest that you could see Ethereum up 10 times from where it is right now. So it's trading about 3,200 or so, 2,800. How about $28,000 to $30,000 per coin, so to speak? I mean, that could be the future in the next few years for Ethereum. So I'm thinking that this is a 10-bagger, and it may be a couple, 3 years for more of that to happen. But watch the charts, and along with XRP and a lot of others in the crypto space, big moves are coming, but you might have to be patient. And again, it may take a little time here, but the trend will be much higher. So anyway, just want to point that out to you, that it's on a big watch for me, and with that perspective. Let's see here and see what we got. I think it has to be on the screen for this to move. And this is, okay, so this is the ETF for XRP. This is the more conservative one. There's a new one that started trading today. This is XRPI. Still a little bit of a downtrend, but it was showing a little buying action here the last couple of days, and I think that was because of the anticipation of the new ETF that started to trade today, and a few more that are coming. So just keep an eye on XRPI. There's about 4 of them. They're all posted in my blockchain letter to watch all the various ETFs related to the XRP play. Agnico Eagle, of course, has been a big favorite among the bulls in gold, rightfully so. It's been a huge move here in the last year, but has shown a little toppy pattern here with negative VR. So I think it got way ahead of itself, and still a bull on gold itself, but you got to watch the charts and see what's happening day to day here. But good correlation on the VRs, both negative and positive for AEM. So a great trading vehicle. When you get a VR, if you're looking for a 1 or 2 day type trade in either direction, you tend to get some nice moves following the negative or positive VR, which is why I want to show it to you. So these look, but I'm basically showing you the charts that I follow, the ones I use for my own trading, because of the correlation of the VRs and the reliability. It's possible you can pull up a bunch of charts and the VRs don't seem to have great correlation for that particular ETF or that particular stock. Generally, it should be no matter which one you pull up, but There could be a few, and it's always good to check. This is why I show you the ones that I tend to favor. This is NAIL. This is the construction industry ETF. Oh, we went back to Disney. We went too far here, too fast. Anyway, this had a big move a few months ago, hoping that we were going to see the lower mortgage rate. This is very similar to the Home Depot chart. This is one to keep an eye on. Very volatile. I mean, basically went from 40 to 100, and back down to 50 again. You're going to move in the construction industry, mortgage rates, home building, or any sign of that. This thing could be explosive, 50-point, 100-point type move. So it's one that's on my watch list for trades. And again, nice correlation with the VRs. Disney, we actually bought Disney today and sold it. If you look on the chart back here, there was a gap at 106, and that was my entry point. The stock has been in a bit of a downtrend and sloppy, and I was looking to buy it under the market, and we got that opportunity today on earnings report, but I decided to flip out of it for a quick couple-point trade because it was down like 10 points during the day, but it also has gaps as low as the low 90s, believe it or not. So I'm looking at here on the chart. So there might be some more risk in Disney, even if it does bounce here a little bit. I'm a big picture favorite of the company and Walt himself. I always tell the story privately, but I'll tell you anyway. When I was 14 years old, I spent the day chasing Walt Disney around Disneyland and took him home movies and everything else, and got to actually say hello to him for a moment. And it was a life-changing experience. You're just following him, watching him go up to his office on the main street above the fire station, and just listening to him and watch him run some guests that he was hosting that day at Disneyland, and stopping the rides and let people come in and get a front seat to the ride. And it just really cool experience. And it was just one of those lucky days in my life, so to speak, that I got to chase who I think is one of the greatest men of the 20th century in terms of his impact of not only the U.S. but worldwide. So as a result, I always watch the stock, I always trade the stock, and but I think the management and the company have gone screwy in terms of their approach to running the company and the kind of films they produce. But I don't want to get into any political comments here. But in any event, I do favor the stock as a trade when I get the correct signals, as we did today. And if it gets down here into the 90s or something, could be a big buy again. So, and I could be wrong, and it could have just been a big buy today, but we decided to trade it, so we watch it like we do any other stock. Berkshire Hathaway, got to keep an eye on this. Of course, of Warren Buffett. Of course, he's leaving the company, but the stock has consistently done well, and the company has done well. So again, we watch it for our trading signals as well. So just another one on our watch list. So that pretty much winds up the stocks I wanted to show you. I got a little bit off tangent here a little bit, but we had a little extra time, Jeff. And if anybody wants to sign up for the vrtrader.com, Leibovit volume reversals, go to vrtrader.com. You get, again, this is incorrect on the promo code. It's actually half off, not 22 half off. The first slide was correct at the top of the presentation. It just half off gives you 50% off on the newsletters. And we also promote, on the website, our Metastock tracking tool, our trading tool. And you can click on that link on our website as well for the Metastock VR indicator program. So thank you, Jeff, and hopefully we ended the day on a nice positive note here.
Hey, Mark, you waiting for me?
Yeah. Okay. It's running up and running to the top of the hour, so I figure I better get off.
Yeah, you're all good. Let's see. Give me the website address. I want to put it in here.
The website address?
Yeah, for the newsletter.
Yeah, just a shortcut, vrtrader.com.
Okay.
Yeah, it's easiest. That's faster. Then you can type and leave it with VR newsletters, but VR Trader is the best shortcut into that. And like I said, Metastock the tracking tool is, promoted on the website as well once you get in there.
Cool.
So thank you for having me. Thank you for having me.
All right, very good. Thank you, Mark. I know you got to run and get on the podcast. Thanks for closing us up today. I appreciate you, man.
I'm happy to be here. Thanks again. Hope to see you soon. Thank you.
All right. See ya.
Bye-bye. Bye-bye.
Okay. All right. I think he's gone. All right, let me meet the presenter real quick. We'll share my screen and we'll just kind of wrap things up today. Big thanks to all of the presenters that have kind of, I do want to talk about the VR Trader Toolkit. Mark did a really good job of actually talking about that, the systems that are included. It's a fully built add-on that includes the scanning, the expert advisor, all of that kind of good stuff. Normally the add-on, again, he's top market timer since for a whole bunch of years, does a really good job. His add-on's $99 a month and we'll give you a 3-for-1 on it. So if you buy 1 month, you can get the second, third month for free. To do that, give us a call, 800-882-3040. Talk to us at metastock.com/sales-chat, or you can also get that at metastock.com/conf-promo as well. And I'll get that in the chat real quick right here. Just give me a sec. Oh, hold on. All right, you can see kind of behind the scenes a little bit. This one right here. Okay, let's put that in the chat for you. We'll put that in the YouTube chat as well. As we wrap up today, I want to say thank you for being here. It was good to see you. Okay, let me get this out of the way. Okay. I want to thank all of our sponsors, AAII at AAII.com. I want to thank Stocks and Commodities Magazine, Traders.com. If you haven't yet joined the Traders Forum, you can join them at thetradersforum.com. And all of the specials for all of the event today can be found at confpromo.com, 800-882-3040, or metastock.com/sales-chat. As a little bit of a teaser, tomorrow we have a full day of speakers again. I have a very special announcement that I'm not going to say any more than that right now. So if you have any questions, give us a call, 800-882-3040. You can join us at metastock.com/sales-chat. Thanks for being here, everybody. I'll see you tomorrow.